Happy New Year, investors. Scott Carson, the Note Guy here, and I am so excited about what 2026 has to offer us. Really believe it's going to be a year of profitability that we've never seen before. So many deals coming across our desk and across our email from banks, lenders, hedge funds. 2025 was a very productive and profitable year, but we truly believe that this new year is going to be unprecedented, unlike what we've seen since going back to 2014, 2015. And as a way for you, if you're brand new to real estate investing, brand new to note investing, it's one of your big things is that you want to buy your first note or take your note investing to a whole different level. We're doing an amazing recap for the next couple days here of our top 50 episodes, the best of episodes, interviews from the Note Closer Show podcast. We'll be running all day today, all day tomorrow, and all day on Sunday. That's January 2nd to the 4th. You can tune in live here. Hopefully, you're going to catch us live on our YouTube channel or live on our social media or LinkedIn. However you're doing, please feel free to comment, ask questions, things like that. We will be monitoring the live stream. But yes, you've got over 36 hours of us going back and sharing the top episodes, top interviews, what you guys watched, what you guys loved, downloaded, commented, watched. We're going to bring back the best of the best, and we've got a long 12-hour day each day to help you tap in and learn from it. And yes, it'll stay up. You can watch us on the replays in our YouTube channel, stuff like that. But if you really want to get rock and rolling, here's the best of the best. Instead of you having to go and try to figure it out and piece it together yourselves, we put it all together in one spot for you. And we want to first of all say thank you again for helping to make our podcast the number one podcast for note investors. That's right. The Note Closer Show, we've been beyond 1 million downloads for the year. We're coming up on our over 1,000th episode. I think I released 1,055 was our most recent episode we released on New Year's Eve. Got so much great content there, so many great speakers, and I want to say thank you from the bottom of my heart, helping to make us the number one podcast for note investors out there, bar none, no questions asked, based on the downloads, episodes, and the length of the show, going now to our 9th year. It's hard to believe that, but thank you again for making it an amazing show. And yes, we will continue to release amazing content, live streams, webinars, deal breakdowns, case studies, great interviews in 2026. And we're really excited about what the new year has to offer. Yes, we'll be doing deal breakdowns on Note Night in America podcast that we've had around for a long time. Those will again be live on Monday nights and see how those go for you guys. But we will keep delivering 2 to 3 brand new episodes each week for you to take it to the next level. And if podcasting is not your thing, it's fine. We know a lot of you watch our episodes online on our number one YouTube channel at weclosenotes.tv. Make sure you go over there and subscribe. Lots of great stuff there, short videos, long form content. Our webinars are live streamed there for you. Our coaching calls there for you. So make sure you subscribe to weclosenotes.tv. And once again, thank you for helping to make that the number one YouTube channel for note investors. Just under 10,000 subscribers. We exceeded over 1.4 million. We'll hit 1.5 million here in January as far as number of viewers on there. Absolutely just blown away that you guys love what we do. And we will keep on producing great content for you as long as you keep on watching. So make sure you subscribe. WeCloseNotes.tv, the number one YouTube channel if you're into note investing, performing, non-performing, whatever you might like. But if you're looking to get your feet wet this year and you really want to dive into it, we do have an opportunity for you guys to dive into it. We have an upcoming workshop. That's right, here in Austin, Texas, in the Q1 of 2026. That's right. Usually we do it online, but this year we're going to start off our first class of the year. It's going to be live and in person here in Austin, Texas, my hometown here, February 27th, 28th, and March 1st. It's a Friday, Saturday, Sunday here in Austin, Texas, north side of Austin. We'll have a lot of fun with some barbecue, fellowship, and dive into distressed deals to help you get a bigger piece of the profit pie in the new year for you. We'll show you how to raise all the capital that you need. We'll show you how to find deals. You don't need a new spreadsheet or a new formula or a new app. You got to go find deals, and that's what it comes down to. Starts off with them. There's nobody better at showing you how to find deals, raise capital, and put those deals together than yours truly, the Note Guy. So to RSVP your seat, you need to go to notebuyingfordummies.com. or go to our website, weclosenotes.com, and sign up there. But notebuyingfordummies.com will take you to the direct page for the class. Get signed up there. We're limiting this to 50 people. We're below 40 seats available yet for you. Love for you guys to fill it up and get a great discount on the seat. I think prices are still 50 cents off on the dollar. So get RSVP'd. Ticket price is good for you plus a partner spouse. So come on in. We look forward to seeing you in Austin, Texas, February 27th through March 1st. Come stay. Fly out Sunday evening, not Sunday morning, Sunday evening, so you don't miss out on anything. But we have a great time there for you. But really excited about this recap for the year. You've got a great ton of videos today. We've got 20 videos on day one for you guys to take advantage of. And it's going to be a long but very productive day for you to sit there, listen, learn, and take your real estate note investing to a whole another level. So thank you again for helping to make us the number one spot for your education and learning needs when it comes to note investing and distressed debt. And once again, this recap is a labor of love for you guys to take advantage of all the great information, the great content, and just absolutely so proud and thankful for each and every one of you that are watching or listening to our show and podcast. So without further ado, let's dive into the best of 2025 recap and go out, take some action, and we'll see you at the top, everybody. Bye. Good morning, good afternoon, and good evening, but hey, hopefully you're doing well. Happy Monday, Money Monday. Hope you all have had a great weekend. Rock and roll. It's hard to believe September is over, and we are now rolling into Q4. Well, today's episode that I want to talk about is called 13 Reasons Why You Need to Invest in Mortgage Notes. Now, I've seen some folks talk about 4 reasons or 5 reasons. I had some students reach out to me and say, hey, Scott, what are some ultimate reasons that I can give when I'm speaking to either a local real estate club, my networking event? I've had a few people ask me to get up and speak, which is great. We love it when we hear about our students speaking to their local investment clubs. And so that's what we did. We just came up with these 13 reasons why you need to invest in mortgage notes. And this is something that I think everybody that's listening to this episode needs to jot down, take notice of. We'll probably end up throwing the slide presentation in the actual description link for you guys to be able to use for yourself. And that way you can use it, tweak it, and use it for your own self if you're not one of the guys and gals that have already asked for it. But really excited about this episode. And I love using AI to create this stuff. Now, I created the 13 points with bullet points, a few bullet points of each, but then dropping that all into Canva AI, and Canva AI really helped me tweak a lot of these slides. So it's kind of a cool presentation. If you don't want to use mine, that's fine. Use something for yourself, but absolutely overjoyed with it. So let's dive into the 13 reasons why you need to be diving into mortgage notes or adding mortgage notes as part of your investment strategy if you're not doing it already. Well, number one is pretty freaking obvious, I should say. Steady passive income. If you're looking for steady passive income, mortgage notes will provide that right off the bat. That's really using people get into it for number one reason. They want something that's going to be steady. And pretty much passive for the most part. We'll talk more about that in a couple other bullet points for you. But it can be a cornerstone of well-rounded investment strategy, allowing for greater financial freedom and security. And, when you invest in mortgage notes, you can enjoy a source of income that requires minimal active management while benefiting from the predictable cash flow these notes offer. And yes, notes can be 15, 20, 30, 40 years long in some cases. Are you always going to be invested in notes for that long? Not necessarily. I mean, we end up probably moving through 3 to 5 years, 3 to 7 years, depends on how long you hold the note, what the borrower ends up doing. And obviously people end up average selling and buying a home every 7 to 8 years on average. So your stuff is going to change there, but it can just about without the without the stock market volatility and stuff like that, things like that. Number one, right off the bat, is steady passive income. All right. Number two, higher returns on investment. I've always said this, especially if you're buying on the non-performing side, you can achieve potentially double-digit annual returns or higher by purchasing mortgage notes at a discount. Yes, you can buy performing notes at a discount. Happens all the time. This investment strategy often outperforms traditional savings accounts or bonds. Even the stock market in a lot of cases, when you have the volatility, yes, things go up and go down. But if you look at the S&P 500 at the time, it's averaged about 8 to 12%, somewhere around there. picking out the right investment strategies. If you're buying non-performing or willing to work it out, if you're buying re-performing stuff where somebody's already worked it out, or even buying like short-term performing notes like hard money loans or stuff like that, you can achieve a higher returns on your investment for sure. Okay. Now, the big thing about it is that we are in collateral. The collateral security. We're buying notes backed by real estate. So in case of something happening, since you're buying at a discount, if the borrower doesn't play ball, you have the right as the lender to foreclose, to take that property back. All right. So that's one of the most important things we talk about is that we're not buying notes above 70% of value. All right. And you're buying that collateral. You're not responsible for the upkeep of the property unless you take it back. But oftentimes, since you're buying such a big discount, it gives you the flexibility to work some things. But that's the great thing. We're not buying unsecured property, which takes forever to do. We're not buying second liens. We're buying first liens in the driver position. So that way, only God, through act of God, or taxes can wipe you out. That's why we put insurance, make sure taxes are paid. Okay. That's the most important thing that I like about that. All right. Number 4, there's less competition. And especially in mortgage notes, compared to fix and flipping, compared to wholesaling, compared to being landlords. All right. Most investors overlook note investing because they don't know much about it. They're not as savvy as they are with other things. But there's less bidding pressure, less having to try to upbid an asset. You're not dealing with foreclosures, where it's a very competitive and cutthroat nature with postcards, direct mail. A lot less competition. Now, some people notice, oh, there's too many note investors. There's not as many note investors as you think up. A lot of note investors don't market correctly, all right, and on a continuous basis. So there actually is, if you stick to what you're doing and consistently show up in the ways to find deals that we talk about, you're going to find plenty of opportunities out there for you. Okay. So yes, there's plenty of space out there when compared to other niches. I like also the fact that it's great for portfolio diversification. Mortgage notes add essential diversification investment portfolio. By investing in mortgage notes, you can reduce overall risk as these assets operate independently of stocks and bonds. One of the things I always laugh about is people always ask me, oh, how's your portfolio doing? Is it going worse or getting better? Look, if you're buying notes, most of the time, especially buying notes on people's homes, you're going to have a pretty rock solid, pretty secure investment being in a first lien position. Okay. And yes, they provide stability and also potential growth depending on which niche you end up going to. Okay. So portfolio diversification is a very important one. You talk about that, and that's what we love about it. Okay. Flexibility and control. People don't often talk about this, but yes, you have the flexibility. Investors can choose, like we talked about before, performing or non-performing notes. I allow them to hit their investments to meet specific financial goals. That's one thing I always talk about, especially if you're getting in the non-performing space or you're trying to, if you get a chunk of capital, go out and buy some performing notes. Go out and buy some stuff that's going to give you an 8 to 12% yield on a performing aspect, and use that capital or the returns from that to fund your life so you can actually be retired if you want to, and then focus on more of the non-performing stuff, which will take a little bit longer to get collections on. But whether you're seeking immediate income or long-term growth, the control investors have over their mortgage notes is unparalleled when it comes to being a note investor. Okay. Next, smaller investment opportunities. Yes, this is one thing that people are often surprised by, the fact that, hey, you don't need to have millions and millions of dollars to go buy a portfolio notes, even though some people out there will falsely state this. No, there are plenty of small deals that you can take place. I mean, the smallest deal I ever bought was $7, and I flipped it for $5,000. All right. I've also bought the high-end notes over $1 million on an asset in Naples, Florida. So you don't need to have huge millions of dollars. There's plenty of deals that our investors are buying for a few $1,000s, getting their feet wet. And the actual average note, I would say the first note that most people end up buying is not in, say, California, in LA County or in Miami Beach. It might be in Ohio, it might be in Michigan, it might be in Indiana, where property values are less. But if you're buying a distressed or discounted note, you're getting at an investment amount, 50 grand, 60 grand is usually, say, about the average size of the individual note. Now, obviously, as values go up, the investment goes up. We're no longer just paying like $5,000 for a note on a Miami condo. You might see some opportunities like that later on. Who knows? But that's one of the great things I've always liked about note investing. It's really, if you've got money sitting on the sideline, 50 grand or more, not doing anything, you can go out and buy a note and start getting a great ROI on your small investment amount. Okay. That's one big thing I think is way over fix and flipping and other things like that for you. especially in the commercial real estate side of things. All right. Lower correlation of market volatility. We talked briefly about this. Notes don't move in a panic. Okay. And there's not a stock market rumor that's going to cause your note to suddenly crash. Okay. That's one of the great things. It's we don't worry about interest going up a quarter point or a half a point. We're not worried about some rumor changing things. We're not worried about things. What is owed is owed. Okay. Now, if the borrower stops paying, guess what? You foreclose and you take that asset back at a higher value. Okay. That's the one thing that you worry about, is the borrower going to pay or not pay. But part of your due diligence aspect of things is you're buying existing notes. The borrower already has a payment history. They've already got some emotional equity. They've already got equity into the property and what they've put into it or bought. So that's the great thing, is we don't worry about news media changing how our payments are made. Okay. Now, occasionally have things happen like COVID or something like that, a national thing that could affect things, and that happens. But the great thing is even during that period of volatility with chaos in COVID, we still saw 80, 85, 90% of the borrowers out there still paying on time. All right. Or they needed a short reset forbearance agreement to get back on track too for you. Now, I also love the next aspect of it is the access to different real estate markets. Living in Austin, Texas, this is one thing immediately when I started doing this almost 20 years ago that I liked, is I could literally see deals, great discount deals all across the country, specifically in different markets I wasn't living in. You'll see a lot of note investors out of California invest in other states because it just doesn't make sense to buy there. You'll see investors out like Oregon, Washington State, where it's not very friendly, or in other long foreclosure states like New York, New Jersey, wanting to invest in other states through their note business because it does give them access to better deals, better discounts, without all the chaos and the political or corruption or stuff like that that takes place in some of these markets out there. So you're not beholden to your backyard like most people when they get into fix and flipping wholesale, and that's where they're at. Oh, I got to go out and touch it and hug it and rub it. No, we invest in about 20 to 30 different states at any given time, and a variety of different markets out there for us. So that's a benefit. We have a lot of folks even overseas who are listening to this or watching this who invest in the United States because of the awesome opportunities of buying mortgage debt in the United States. All right. Mitigation of inflation risk. We're not worried about inflation as property values and interest rates continue to rise. Mortgage notes investments can likely keep pace, helping preserve your purchasing power. By investing in mortgage notes, you create a robust defense against inflation, align your income to grow in line with market conditions. This strategy provides investors with an opportunity to safeguard their capital while benefiting from the appreciation of real estate assets. Okay. So we've seen this happening. If you've got mortgage debt, the borrower owes what they owe. The inflation goes up or stuff like that. The last thing that's going to not get paid is the actual mortgage in most cases. Housing, people are going to pay that. They'll stop paying their credit cards. They'll stop paying their student loans. They'll even stop paying their auto loan payments, but they won't stop making their housing payment. They don't want to lose their house and go from there. Okay, so that's the great thing. One of the great 13 things about no investing. Okay. Opportunity, we talked previously about this for passive income, but also opportunity for passive wealth building. All right, mortgage notes can be a source of passive income that grows over time, allowing investors to build wealth with minimal active management. We'll talk about that active management in a minute. They provide a unique opportunity where investors can enjoy financial benefits without the daily responsibility of traditional real estate management. That's what things, if you start putting money away, and one of the great things that we've done for years is show people how you can create 6 figures a year in passive income. That's going to build wealth for you. If you diversify your income with mortgage notes, it's going to create wealth for you because you're buying stuff at a significant discount, usually, than what's owed. All right. It's a great way to get into markets and take advantage of the opportunities available, folks, and build wealth by buying the assets or buying the notes that control the property at a significant discount. And then if the borrower stops paying, you end up taking an asset over and going from there. So this is one of the great things. This is why banks are in the lending business. Lenders are always the biggest buildings. They're also the most wealthiest companies out there. That's why notes are a great thing. It's an opportunity for you to build passive wealth. All right. Now, another thing, if you're not a real estate investor, you may not know what a self-directed IRA is, but notes are the perfect investment vehicle for self-directed IRAs of all sizes, whether it's an educational savings account, a SEP IRA, solo 401k, a Roth IRA, a traditional IRA. So many different opportunities for you to put your money to work into notes, whether you're lending money out of your IRA as a note, like your owner financing or providing a hard money loan, or buying the notes inside of your IRA and being the lender. So it is the perfect vehicle. Actually, this is the number one investment vehicle of IRAs out there in the self-directed space. Besides, obviously, banks and hedge funds, stuff like that, traditional lenders will offer up, funds or things like that in their IRA. But yes, you can use your 401k or your IRA to buy notes. You just need to roll it into a self-directed IRA custom like IRA Financial, American IRA, Equity Trust, or something like that. But it is perfect for self-directed IRAs of all amounts and different sizes. Okay, we have investors using all their types of different self-directed accounts to invest in notes and get better returns, really. Right? I'm a big fan of third-party support. You can't do it all yourself. And that's one thing that stops people. They don't know how to rehab a house. They don't know about marketing for wholesalers or flipping stuff. They like to buy something that's passive. They want to deal with toilet stands and trash outs. They don't want to be a landlord. This is one of the best things that I've always loved about note investing is that the third party support side of things. You're hiring licensed vendors like attorneys and servicing companies. They do the heavy lifting, the borrower outreach, the foreclosures. You got to be responsible for finding the deals and raising the capital for it if you're not using your own funds. But the third party support is, I don't want to say set it and forget it, but you can put it with licensed individuals that cover the licensing in most of the states out there you can be buying in, who are going to be professional. They're going to handle the emotional side of talking with borrowers on your behalf and help you come out with a true win-win solution to help you capitalize on what's going on in the market. Now, if these 13 things sound great to you, I encourage you to check out our upcoming virtual note buying workshop in November. It's hard to believe. It's just about 47 days out. November 14th, 15th, and 16th. That'll be online via Zoom. That's the virtual note buying workshop, and you get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. So let's go back here real fast. We'll do a quick recap of the 13 reasons why you need to invest in mortgage notes. 1, steady passive income. 2, higher returns on investment. 3, collateral security. It's real estate backed investment. 4, less competition. 5, portfolio diversification. 6, flexibility and control. 7, smaller investment opportunities. 8, lower correlation of market volatility. 9, access to real estate markets. 10, mitigation of inflation risk. 11, opportunity for passive wealth building. 12, perfect for self-directed IRAs. And 13, your third-party support. You don't have to do it all, ladies and gentlemen. You can leverage notes to not only turbocharge your portfolio, but can also become a great way for you to stop sitting on the sidelines and get into the real estate investing game. Become a note investor. It's easier than you think about. So check out our upcoming class to find out how you too can dive in the note space by going to notebuyingfordummies.com or check us out at weclosenotes.com. Go out, have a great week, and we'll see you at the top, everybody. Bye. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the podcast. Glad to have you on here today. And today I wanted to share a short presentation that I did at a recent event that I spoke at. I was actually up in Boston and spoke at the Smart Real Estate Coach Conference hosted by Chris Prefontaine, Zach Beach, and then Nick Prefontaine. They do a really great job. And Chris and his team and what they teach really matches up well with what we teach when it comes to the crossover. Obviously, with a lot of the note stuff that we buy, distressed debt, stuff like that, matches up well for potential subject to deals when we're getting lists of non-performing notes that necessarily we don't want to buy, but could be potential great deals when it comes to subject to owner financing, lease options if you're not in the state of Texas, stuff like that. So I thought I would share because Chris asked me to come up there and spend the time talking about what we're seeing in the market, kind of the tea leaves. And if I have a glass ball, what I see in the future. Well, I thought I'd go through it because I think you guys will find it very interesting, something to talk about, and something that you should maybe think about focusing on in 2025 and beyond as we get rock and rolling here. So let me share this here with you real quick because it's important for you to keep in mind. Okay. So I titled the conversation, "What are the debt markets telling us?" And why do I look at the debt markets? Well, the debt markets, you see things 6 to 12 months ahead of what most investors are chasing. Now, what are most investors chasing? You're chasing distressed borrowers. You're chasing foreclosures. You're chasing probate leave where somebody's passed away, right? Or you're chasing people who are, out of town owners, ton of equity. absentee owners. Well, when you target the debt markets and you see what's going on in the debt markets, that gives you a lot of information way ahead of everybody else. We're talking 6 to 12 months or longer compared to what most real investors are doing in chasing the foreclosure lists or the list pendants list if you're in a judicial state. But if you're in a state like Texas, um, things move faster. 21 days to foreclose. We don't have a notice of default that gets filed like a lot of other states. The first Tuesday of the month represent a huge amount of opportunities to us here if you're chasing foreclosures. Whether it's tax sales or the traditional mortgage foreclosures, you got to show up with cash. So anytime you can get more information ahead of time or opportunities that most people don't tap into, and guess what? You're ahead of the curve. And that's what I've always loved about, especially in the note business and investing in Texas, is I don't have to wait till the foreclosure filing is filed. We'll see stuff way ahead of that. So that puts us in a good position when it comes if we start targeting that stuff. Now, for years, we've just targeted basically, and we're going to target the debt, buy the debt, work it out with the homeowners in some sort of modification or foreclosure. But with what's going on in the market, there's things and opportunities that we see that I think you need to be aware of, whether you're just a traditional real estate investor in the Lone Star State, or you're looking to dive into investing, or you're outside of Texas looking to buy stuff in Texas, other areas. Here's some opportunities I want to go through with you. So, what are the debt markets telling us? Well, first and foremost, there's always a talk about how interest rates. Oh, I've got a sub 6% interest rate or sub 3%, and I'm not going to move out. Well, those days of where the majority of Americans who have a mortgage on their house that's below 3% because so many people financed or bought properties a few years ago, that number is changing. Here in the next quarter, they're predicting Q1 of 2026. The amount of people that have a 6% or greater mortgage is going to be greater than those with a 3% or less mortgage. Now, for the last the 5-6 years, it's always been the opposite way around, where you had people that had lower interest rates on their mortgages dominated what was out there, right? Well, that's changed. People are having to sell. People actually are defaulting on these mortgages. Surprise, surprise. They're having a hard time. They bought more house than they could afford, or their incomes have been changed in a variety of ways, losing jobs, losing the second household income. The gig economy of Uber and Facebook Marketplace and all that stuff is really drying up as things aren't being as productive as possible, or they're not profitable as possible, I should say, as those things have adjusted their income or their compensation levels to gig economy workers. I mean, people are tired of eating out and or tipping 20% at a to-go menu. You know what I mean? So people are doing less of that stuff because they're saving money, but you're starting to see that reflected as now mortgage. People with higher rates mortgages, because they're having to buy now, having to do something, are going to surpass the sub 3% here in the next Q1. All right, in the next quarter too. So that's something to keep in mind, because we always talk about that. Well, that's not always the case like it has been. Okay. Now, let's talk about delinquency rates here. And this is as of Q2 2025. I don't have the Q3 results out when we do. We'll actually obviously do an episode about that. But here's the Q2 2025 delinquency rates. And FHA loans are at about 10.57%. Now, that should scare you. FHA loans are primarily, they're not subprime borrowers, but they're usually first-time home buyers, right? And at a default rate of 10.57%, that number keeps climbing up. And that's a default rate for somebody that comes in either they either bought too much house, they've been the most impacted because they got in with the least amount down. They're also ones that probably are floating bills a little bit with credit cards, student loan debts, auto loan debts, though all that stuff is at all-time highs. But when you see a 10% plus default rate, that's not a good sign. That's where you're seeing more foreclosures. We're seeing more distressed stuff in that neck of the woods coming across our books. Look at VA loans. Those are at 4.32%. That's also very scary in a default rate. Now, conventional loans still are low. Your conventional 30 years are still at only a default rate of 2.6%. But what you have happening with that is, like I said before, the house of cards of debt when it comes to this country with other things in default. We are seeing that starting to tick up too. Foreclosures are starting to tick up on the conventional route, just, in other areas of the country, but also here in Texas, in Dallas, Bear, Harris County, Houston, stuff like that. So Houston, San Antonio, Dallas. We're not seeing it so much here in Austin. A little bit of tick up, but not like it's been before. Now, what states with the highest increase in mortgage defaults and foreclosures? What states have the highest stuff? Let's go through that stuff here for because that's important to know, especially if you're listening to this outside. Now, the states at the highest increase in mortgage defaults and foreclosures: Florida, no surprise there with insurance and a lot of investor money out of that area. Condos definitely in that area. Mississippi, North Dakota, Ohio, Michigan. Now, why does North Dakota stick out there? Well, because you had a lot of people moving there for fracking oil and have moved out of there. Okay. Ohio and Michigan don't really surprise us with the most amount of foreclosures. They're always going to have some stuff up there. But then you start getting into West Virginia, New Jersey, California, New York, and Louisiana. Those states all have an uptick in foreclosures as well. Now, one of the things that we did recently is that we pulled a report talking about where the markets are going to go. Actually, we got it from a buddy of ours, Nick Gurley with Reventure Capital. He provided to us, and we started diving into it. And so it breaks down really kind of how overpriced markets are right now and predicting where they're going to go in the next 12 months. Now, 855 cities, that's a lot of cities to look at, anywhere, like down to like 10,000 people, 20,000 people. So what we thought we would do is let's just look at the top 50 and then compare those numbers to overall the 855. So if you look at the top 50 markets, on average, properties are overvalued by an average of 16% right now. They're overvalued by that amount. That's if you take all top 50 states out there. Now, the lowest of those is Baltimore, Cleveland, Sacramento, Chicago, and Washington, D.C. They have the least amount of overvalue. But those that have the highest overvalue are Atlanta, Charlotte, Columbus, Buffalo, and Detroit. They're the highest in overvalue. So it goes up more than 16%. All right. Now, you can expect price cuts values to drop by 25% average across the top 25 states. We've seen some correction here in Austin, seen that in San Antonio, Dallas, Houston as well. But they're expecting the values to drop by an average of 25% across the top 50 markets. The lowest price cuts are going to come in Buffalo, New York City, Chicago, Providence, Rhode Island, and Milwaukee. Okay. Those are going to be the biggest, the least amount of price cuts because New York City real estate doesn't really change. You've got even when the markets go up, you still have value there because it's such limited availability. Chicago, I don't see a lot of price cuts going there too. You are starting to see a bit of an increase, though, or slowing in purchases in Chicago because of all the ICE raids and stuff like that taking place. Providence, Milwaukee kind of stay the same. The highest price cuts are going to be the ones that have the most amount of distress right now. Phoenix, Denver, Salt Lake City. Honestly, all the bigger markets in Texas are going to see a huge price cut. Vegas, Portland, and of course, Florida. God's waiting room and the Lone Star State. I just threw those in there because all the cities in there really are seeing big, like 35, 40% drops in some cases. Now, look, don't sit here. We just talked to my buddy Boyd Pops, who's a realtor here, talked about how we've seen only really a price correction about 5% here in Austin. We're overvalued here. It's a little bit of a correction, and things are moving, especially in that sub $400,000 range. This takes in consideration basically every property there in these cities, not just a specific price range, okay? Now, if you take and compare it to the top 855 cities across the United States, it's overvalued by an average of 14%, okay? And we're seeing a price cut about 22%, so a little bit less, okay? Now, when we look at the top 855 cities, it's overvalued by an average of 14%. Price cuts average of 22% we talked about. Most undervalued area, according to the top 855, is the rural Mississippi market and Texas in the Rio Grande Valley. That's down Laredo, down that neck of the woods down by the border. South of Corpus Christi, basically, okay? Harlingen and that area down south there. So that's where the most undervalued areas are. Now, the city with the least price drop that they expect is actually Rochester, New York, all the way opposite up to New York and Rochester, not Minnesota, Rochester, New York, which is only expecting about a 5.4% price drop out of all the 855 cities. Now, Rochester obviously has a lower price value for homes. There's a lot of people going in, buying there, turning them into rentals. I don't buy a lot there. It's Rochester. Not necessarily want to own a $20,000, $30,000 property in an area that takes forever to evict in a lot of cases. So, but some people are doing well. But that's the thing to look at. Now, Like I said, seeing deals that come in 6 to 12 months faster than most of your investors. Now, um, like I said, we get lists in all across the country. We get anywhere from like a one-off note up to like we just received a list of 636 non-performing VA FHA loans. Okay. Now the average interest rate, to see a bit of an idea, comes out about 5.13. And that ranges from sub at 3% to 2 3/4, all the way up to 8% on the interest rates. 180 of these are beyond 12 plus months in default, where they haven't paid in over 12 months. 456 of them are 90 to 270 days in default, so from 3 to 9 months in default. And then when you look at when these loans were originated, they've originated as far as back as 2009, all the way up to something that's basically just 90 days behind. It's originated this year, but it's already behind. Okay. So the average of these, based off of what they have anywhere from like a 79% loan to value, as low as a 2% loan to value, all the way up to 130% loan to value, where they owe more than the property's worth. Okay. But average across the board, they've got about 20% in equity. All right. Now, that's as it sits today. If markets drop 20%, that equity is going to get obviously squeezed to 5, 10, 15% in some areas, or you may be negative equity over the next 12 to 24 months. Every market's a little bit different. So what I did is I took this 636 and I kind of mapped it so you can kind of see geographically speaking. Now these, out of the 636, there's 256 of them. Okay. Just under, really about 40% of them that are 90 to 120 days past due. These are where it's just the cusp of now that the lenders are starting the foreclosure process. Now, some opportunities here. Would it make sense for me to buy distressed debt when they're only 90 days behind? No, it does not. I'm not going to pay a premium for that. That just doesn't make sense, because that's really the cusp of when people can either A, get back on track, or they got to get serious about delaying things, and the bank's going to start the foreclosure process, or file the list pendants, or the notice of default, or start looking when the first Tuesday in that next month is in Texas. But it does lead to great opportunities for other avenues, other niches of real estate investing, specifically when you can see things that have a lower interest rate. Like I just showed you, the average of these is about 5.11%. That's lower than about current mortgage rates at about 6.5, give or take a little bit. So those potentially, especially when they don't have that much in default, but people are walking away from them, they can't afford it, these become great opportunities for subject to deals. And by subject to deals, that's taking over the debt, getting somebody out that can't afford the property to avoid a foreclosure. You're taking over the debt. All right. The loan still stays in that borrower's name. But as we know, late pays will affect their credit for 24 months. Okay. It's better than a 7-year foreclosure process. So these are opportunities for you to come in, work with the borrowers, get them out of a property they can't afford anymore, maybe give them some cash for their equity, but take over a low mortgage payment through like a land trust, so you're not violating due on sales clause and then assigning the land trust to you, of taking it over and then either turning around and renting it out for cash flow, or doing like a wraparound mortgage. If it's at 5%, turn around and wrap around it at 7 to 8%. So you've got a nice gap there between not only the interest rate, but also the price point of what you finance it at values today versus what it's at in the unpaid balance aspect of things. So you've got this arbitrage between the two, so that you hold it for a couple, let's say 2-3 years. Not only are you getting a down payment, you're also getting the equity increasing, in principal balance being written down as profit, but then also getting the monthly cash flow. So there's really three paydays on the subject to lease option kind of thing, where you wrap around and turn around. I like the 3 paydays when it comes to buying a note. You get some skin in the game from the borrower. They're making monthly payments to you, and then you get a payoff in either 36 months when they refinance you out. Okay. Or you sell that note off to another investor. But this is great opportunities here where they're 3 to 4 months past due, potential for subject to deals, and it's all across the country, not just here in Texas, but a lot in Florida, Midwest, all across the country. Even for folks out in sunny California, you got some opportunities there. Now, out of this other tape, there's 188 of them that were anywhere from 4 to 12 months in default. Okay. Now, could these still be potential opportunities for subject to deals? Yes, you can still do that if you got some skin in the game, or have some investment money to actually offset the late defaults. These could also be potential modifications. I don't really see that the banks are going to do too many modifications at low interest rates, but more of a forbearance agreement where they take the payments they're behind and put it back to the thing. That's the thing, is knowing the debt markets that I do, knowing what people are potentially buying this stuff at, or what the bank's motivation is. You get on the borrower side, these can be potentially great deals for you. Like I said, some equity, some more motivation. A borrower may not be willing to play ball with you when they're just barely behind, but once that foreclosure notice files or starts, they get a whole lot more motivated to do something with you. Now, are some of these people, could they turn around and potentially sell their house for sale? Yeah, but we all know houses just aren't moving right now. Okay. It's not the same thing as it was a year, 2 years ago. Now, there's also 180 of these that were beyond a year in default. They are potential foreclosures for you. These are deals that you track for the foreclosure auction or track against, say, cash for keys. If they've got some equity, get the investor to deed over to you or do a hard money loan to buy them out and get them on their way. I mean, yes, could the sellers potentially make some money at the foreclosure auction? Yeah, but let's face it, as foreclosure are going up, less and less people are going to be bidding. There's the opportunity they're just going to lose everything. So these also can be the potential subject to deals, owner finance deals, distress stuff where you can bring a borrower into it and arbitrage it or do lease options, stuff like that. So plenty of opportunity for you to take advantage of. Now, that's why we've got a variety of different reports. If you follow me on LinkedIn, you'll see that we post these things on a regular basis. The podcast, obviously, there. We've got a free one-day note investing class that we teach on a regular basis. Go to noteweekend.com. I'll send you a 2-hour replay to it. We're here to help you out and take your business next level. But the thing that you have to realize, ladies and gentlemen, that seeing the stuff that comes to me, like I got another list of 133 notes this morning with 30 of them in Texas. I got another list in 2 days ago. No, sorry, Friday, on a bunch of reverse mortgages where the borrower's deceased with a chunk in Texas. So I love Texas. It's my home state. Lots of opportunities here. I buy also in Indiana. I bought in Florida. I bought in Oklahoma. I bought in the Carolinas. I bought in about 20, 30 states. No matter where you're located and where you're watching this from, there are opportunities. The thing is, you just got to get out of your own way what you can or can't do and realize the opportunities out there. And that's why I like the debt space there for you. So, because we're seeing stuff, like I said, 6 to 12 months ahead of most investors. There's less competition there. There's still some competition. I'm not going to lie. You got to bid it properly. But even if I can't buy that debt on this stuff, it becomes opportunities for me to target for subject to deals, real tool referrals, lease options, and a whole variety of different things depending on what's going on in that state. So if you like that stuff, please feel free to reach out to you. Make sure you hit the subscribe button and follow us, and go out and take some action, and we'll see you at the top. Bye, everybody. Hey, real estate investors. So you want to dive into the world of note investing, but don't currently have the funds to sign up for an expensive class or a workshop or one-on-one coaching. Well, then you definitely want to check out the biggest bang for your buck in the note world, and that's our WCN membership. It get you an all-you-can-learn access to our class workshop replays, tapes, weekly coaching calls. For $97 a month, it's the biggest bang in the note industry because you get access weekly with me. You can book one-on-one phone calls with me. As we get different tapes in, we'll share them with our members after our one-on-one coaching students get access to us. We share a variety of tools, like I said, replays to the previous workshop, special discount codes to other events that you can take advantage of to help you get more bang out of your dollar every month. We've been investing in notes for over 20 years, and one of my biggest passions is helping note investors, big and small, get started buying notes. Yes, I got started years ago with no money, no savings, and no list, and I love helping people close on their first deal, get their first private funding partner to help them fund more deals and help them both make above average returns. If you're looking for somebody to help you take your note investing from 0 to 60 and want to get started, my WCN membership is a great place to get started. Like I said, we upload lists to it, video training, coaching calls for $97 a month. What can go wrong? The only thing we ask is you hang around for 6 months, and then if you don't like it, you can cancel. But check it out at noteumbrella.com. That's noteumbrella.com. That's our WCN membership. Get looking at assets today. Start putting your fingers on the trigger to pull the trigger on some note deals here before too long. Yes, anybody can buy notes. I don't care your age, your savings, what race, color, whatever it is. Note investing is all about what action you take, and the first action you should take is signing up for our monthly membership at $97 a month. That's noteumbrella.com. You can also access it by going to weekclosenotes.com and checking on the monthly membership. But we are here to help you. Scott Carson, the Note Guy. We look forward to seeing you at the top. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, Scott Carson, excited to be with you today. Today's episode, I want to dive straight into it. It's going to be the 13 biggest differences of notes versus traditional real estate investing, different property. Folks are used to buying property when it comes to real estate, not buying notes. And we had a really great episode prior to this. You know, the 13 reasons why you should be buying notes. Well, people ask me, what's the differences? And this is what this is. This episode is all about the differences of notes versus traditional real estate. Now, from somebody who's been a real estate investor since I bought my first property in Round Rock, Texas in 2001, I've been buying real estate for over 24 years. Hard to believe that. But when I got into note investing, there were some definite differences that I had to get my mind around so that I wasn't making mistakes. So we'll probably end up doing the next episode the biggest mistakes we see new note investors make, just to follow along with us. This has just been some really great topics that people have been asking, or questions people have been asking, that we've been turning episodes. But I want you to focus on the differences. If you're new to note investing, this is a great episode for you to listen to. If you're also experienced, it's also good for you to listen to this, because you may have forgotten a couple things, or oh, that's how this is different. Note investing is a great way to control real estate, but when you buy a note, you are not buying the real estate, you are controlling it. So it's a little bit different having your banker's cap on as a note investor, and that's the way you have to kind of take it as your lender banker versus your real estate property owner investor with a different cap. So it's a kind of the tale of two caps. All right. But let's dive into the 13 biggest differences of notes versus traditional real estate investing. And I encourage you, ask questions. If you have a comment about something, type it. If you're listening to this in the comment sections, or shoot me a message, I'll give you my contact information. And then you'll also want to stick around till the very end, as we have a special offering taking place right now for our next upcoming workshop that you can take advantage of. All right. So the first big difference between notes and traditional real estate is the asset control. Okay. In buying notes, there is no property ownership. You don't own the note. I mean, you don't own the property. You control the property by being the bank. This is why we like to buy first liens only. Okay. Senior lien. So you're in control, really, of that property if the borrower stops paying. And your ability to collect on what is owed is your ability to foreclose. Now, you have the control of the asset. If you're in a second lien position, you don't control the asset. You're beholden to what's going on with the first lien holder. Now, yes, as a second lien holder, you could foreclose in the junior lien position, but then you're going to have to pay the first lien holder the monthly payment. Okay. Or you're going to face getting wiped out altogether. Now, the thing that can wipe you out in assets, obviously, is property taxes and insurance in case of an act of God. So we put that in there. But the big thing to realize is you are buying that debt. You are only allowed to collect what is owed on that debt. That means the unpaid principal balance, back payments, late fees, that any lender advance fee like insurance or taxes or other things. You control the asset by being in the first lien position, and that's what we like about it. That's why we only buy first liens, like I said, and that's why we like to buy those at a discount, because then we make our money by going through that aspect of either you're going to pay and stay, or if you no pay, you no stay. And we go through the different exit strategies we'll cover later on. So that's a great thing. You're buying the note, you're not owning the property. This is the biggest thing in the difference. You've got to really wear the two different hats, okay? And we'll talk about the differences in bidding on that stuff too. Now, write-offs. That's another big thing. It's different for being a note investor versus being a real estate investor. Unlike traditional real estate, you cannot depreciate notes, okay? You can't depreciate a note over 27 years or whatever it is. You know what I mean? However, losses may be written off through debt forgiveness, providing provincial tax relief. So like if you modify a loan, you forgive a huge amount of balance or back pays or restructure the loan, you're supposed to send a 1099 to the borrower, which is a reduction off of what you are coming in. So if you have a good accountant, a good CPA, you can still write it off, but for the most part, you're not going to get a depreciation or cost segregation analysis done on a note. Now, if you take the property back through foreclosure and own it, then you could do that. That's switching being from a banker to a real estate investor's hat with it through the foreclosure process if it doesn't sell. But most of the time, when we're going to write stuff off, it's going to be either 1099s and forgiveness of debt that we write off. Now, if the borrower can't pay tax on it, they can show to be insolvent and get that removed from their taxes. But 1099 of borrowers or your bad tenants that you had to forgive stuff on, evict, is one of the things that we are able to write off that way. It's a different aspect, different model than what you would think of them being the property owner. Okay. No 1031 exchanges. That's the opposite side of the tax code. Notes cannot be rolled into 1031 exchange, limiting investment strategy. So if you've got a property, like a big commercial property or investment property, you want to roll that into something else, you can't roll it into the note. You can't sell your apartment building and roll into a portfolio of notes. That's different asset classes. Okay. Now you can leverage some different things after a 1031 exchange. If you roll it from one building to a different building and then use a line of credit to buy notes, some people do that. But unfortunately, you can't do a 1031 exchange into a performing or non-performing note. It's a different type of asset class, and the IRS does not allow that. Okay. Even now, one nice thing that some people do with their property is a deferred sales trust, and they basically sell on an installment loan, turn their sale into a note sale, and they hold that for a while. Then you could technically sell the note off of that, but it's not the same thing as, hey, I want to, like I said, sell off my fourplex and buy 4 notes. It just doesn't work that way with 1031 exchange. Okay. Now, licensing is always one of the big questions. What kind of licenses do you need? And yes, you do need to have some licenses as a note investor. And I put a big asterisk next to that compared to your traditional real estate investor. Now, you're just like a traditional real estate investor. You don't need to have a real estate license to buy traditional real estate. You could go out and buy property from an individual. You don't need a realtor. You could buy without needing a license, stuff like that. You can do that all the time. Totally fine. Okay. Now, in buying notes, some states do require mortgage licensing, like either mortgage broker's license, or they do require a debt collector's license. Okay. Now, it varies state by state. Now, like states like Washington State, Oregon State, Maryland has just enacted this license, Massachusetts, and there's a few others out there that want you to have a mortgage broker's license. I'm not buying in most of those states for the most part. Just about every state wants you to have a debt collector's license. Now, the big asterisk next to the debt collector's license, if you have a licensed third-party servicing company. Okay. What I mean by a licensed third-party servicing company, this is the company that's doing the outreach to the borrowers, they're collecting payments, they're holding the documents, they're licensed, have taken classes and for debt collection practices, stuff like that. A debt collector's license, if your servicing company is licensed that state as a debt collector's license, that usually will allow you to be able to buy notes without having a license. Now, in some states like Illinois, the state still wants you, the investor, to get a debt collector's license, even if your servicing company is a licensed debt collector. It's not going to stop you from buying or foreclosing on the asset. It's just another pound of flesh that they want. And that cost to be a debt collector license will vary a little bit state by state. Some states, like, I'll give you an example, like Georgia, they want you to be a mortgage broker unless you're going to use your self-directed IRA to buy the asset. And that's the one caveat. So some states also will allow you to self-service without a license. In some cases like Texas, you could do that if you want to. I highly do not recommend that at all. Get the debt collector's license, get a servicing company that's licensed in that state to collect debt. If you have a $15 an hour job, or you're doing $15 an hour activities, you're going to have a $15 an hour bank account. So for $35 or $25 a month for a performing note, hang it with a third-party servicer, let them handle their licenses. So if anything happens, they're the ones getting sued for making mistakes and not you. All right. What I like also about notes versus traditional real estate, we kind of call it semi-active management. Now, if you're buying traditional real estate and you're going to keep it for, rentals, stuff like that, you got to have a property manager. Now, some investors want to do the property management themselves and be responsible for that. I think that's just creating another job, and it ends up costing you a lot more in time and freedom than it does in what you're saving or making. Okay. With note investing, it's semi-active management. You're not in charge of toilets, sinks, and trash outs. Nobody ever called the bank when little Timmy flushes rubber ducky down the toilet, right? Or the AC stopped working. Okay, that's a nice thing. The semi-active management approach when it comes to notes, this approach necessitates active oversight for non-paying borrowers, utilizing servicers and attorneys to streamline the process and enhance recovery efforts. That's right. Kind of like I said before, it's good to have a licensed third-party servicer, not only for the licensing side, but also the management side. They're the ones doing the borrower outreach. They're sending out door knockers to collect, trying to get the borrower to come to the table or get on a phone call. And of course, if they don't pay, then you put it with an attorney and they handle the foreclosure process where you're just communicating. This is one of the most valuable things. It's also one of the things that investors make a mistake on is they try to get cheap and try to work it out themselves. let me tell you right now, you do not want to be talking to borrowers. You're not licensed. You don't know what's going to happen. We don't want to have too many cooks in the kitchen. You want to take a semi-active management and direct your servicing companies and attorneys which way to go. They'll present the options for you and what the borrower has said. But for the most part, if it's a performing note, a monkey can collect on it, and a servicing company is what they're going to do. Every servicing company has its pros and cons. Feel free to reach out to me for my answer on that, which servicing companies work best for you. Okay. Since you're buying in a multitude of states, providing that you're buying in more than one state, you're going to have different foreclosure laws. And these foreclosure laws and timeframes will vary very significantly depending on which state you're buying, and will greatly influence your strategies for the states. Okay. So I'll give you an example. Like Texas, the fastest foreclosure state in the country. You can foreclose in 21 days once they go 90 days late. As long as you file your stuff 21 days before the first Tuesday of the month, you can foreclose quickly. Other states, other non-judicial states, you've got to wait the 90 days, and then it's once a month that they'll foreclose on. Now, in judicial states, that's a longer foreclosure process that takes going through the judicial process. So it's going through the courts. And that could be 6 months to 3 years in a lot of cases, or longer. So I avoid New York because it's a 3-year process to foreclose, if not longer. New Jersey is about 2 years as well. So I avoid those states. Texas, while being the fastest state in the country, along with Georgia being 30 days, are great, but they're also going to be a little bit more pricier on the assets because you can foreclose so quickly and get the property back. So those are some things to keep in mind. In Texas and Georgia, I'll pay more for the asset knowing that I can foreclose faster and get the asset back and my velocity of capital. Whereas in states like South Carolina, Kansas, which can take a year to foreclose in some cases, I need to get a little bit bigger discount. Okay. And I'm going to, like I said, I'm going to avoid the New York and New Jersey, the longest ones for sure. Don't waste my time in buying notes in there. Okay. Cash is king in notes. It's one of the big differences. You're not going to go get a line of credit. Well, you could get a line of credit to buy some notes. That's true, but you're not going to go down to the local bank and get a 30-year mortgage to buy a note. Okay. You're not going to get a hard money lender to usually give you a short-term loan on buying a note. Okay. In notes investing, cash or private capital is essential besides your own money. Traditional financing options are rarely available for these types of transactions. Now, when you start getting to some kind of commercial note side, sometimes the bank or lender who is holding that non-performing note may finance your note purchase. You do have some lenders out there, banks that will give lines of credit or do collateralization of a portfolio of performing notes to give you some money to go buy some notes. But for the most part, when you're a brand new note investor, you're going to need to have cash, either your money or other financial friends who will lend money, like out of IRAs and things like that, so that you can fund your note purchase. Still plenty of private capital out there. All right. Still plenty of ways to raise capital. It's just a little different process. Oh, I'm going to go down to my bank, get a loan. Not going to happen when you're buying non-performing notes. Okay. Or even performing notes too. Another thing besides that mindset of the banker's hat versus the property hat, it's different marketing when it comes to buying notes. Okay. Most real estate investors come from the, I'm going to do pay-per-click ads. I'm going to market to out-of-state owners. I'm going to send out postcards to the foreclosure lists. I'm going to drive for dollars and look at abandoned homes. Those are great ways if you're buying traditional real estate in a local market. But with notes, it's completely different. And effective marketing strategies for notes include LinkedIn. That means contacting asset managers. You're using drip marketing campaigns like email blasts to your list of asset managers over the years, and direct outreach. Dialing for dollars, calling asset managers, whole loan traders, chief credit risk offers to banks and hedge funds across the country. So it's a different tactic. I like it better because you get lists on a repeat basis, not just a one-off deal. And that's one of the greatest things is it's a little bit different marketing, a little bit different skill, and 80% of sales comes after the fifth contact. But it always made more sense for me to contact one bank, one lender. Now I got a list coming to me every month versus having to drop thousands of dollars on direct mail campaigns and other things where my cost to acquisition is so much higher than it is on the note investing side. But like I said, it is a different marketing concept. If you think you're going to do the same thing, it's just not going to work that way for you when you're used to sending out postcards or letters. Let's save some trees and have you work smarter, not harder. Okay. Now, when you buy a note, especially a non-performing note, there is a variety of exit strategies that you can do. Now, when you buy a piece of property, you're either going to fix it up and sell it, or fix and turn around and turn it into rentals, so either short-term, mid-term, long-term, right? You might owner finance the property. That's fine. But those are your basic exit strategies. Now, with note investing, since we're buying notes that are occupied or non-performing stuff, we have about 11 different exit strategies, give or take a little bit, that you can make money with it. Anywhere from either wholesaling it, like wholesale a piece of property, to working it out with a borrower, to debt forgiveness, to doing a short sale, to doing a reduced settlement, to doing a cash for keys, or foreclosing. There's a whole variety of different exit strategies. Especially, we cover these in our 3-day workshop to help you give a significant impact on your return on investment. So we always like to say that, hey, make sure that when you're buying, especially a non-performing note, that it's going to make good sense on your exit strategy to either reinstate the borrower, modify it, or do a cash for keys or foreclosure. So these are things to keep in mind. It's not always going to be, I'm going to buy and foreclose. Sometimes the borrower does come back to the table, make payments, and it can be, actually, it's much more profitable buying a non-performing note most of the time, depending on the terms, of getting the borrower to come back to the table, start paying on time again. Sometimes, yes, it can be a good yield to foreclose and take the property back, but the biggest mistake I made my first 2 years is trying to foreclose on everything. So if I'd have gone a couple of different exit strategies, I had more capital, more money coming in, higher profits and less expenses, and my yields would have been through the roof versus having to wait 2 years or a year to foreclose. Okay, so keep in mind, got to be flexible as a note investor on which exit strategies you want to pursue. Okay, now another thing that's difficult is when you're buying a non-performing note, an occupied note, you're not going to get interior access to most of the properties as a note investor like you would as a real estate investor. Of course, you can go buy a house and get interior access, look at what's on the MLS, get interior access to see how it is. But with a non-performing note where a borrower's still living in it, you're not going to get inside most of the times. Now, if the borrower has it listed for sale, doing a short sale, yes, you can oftentimes get inside for that. But for the most part, you're buying it sight unseen on the inside. Now, you can do a lot of evaluations on the inside based on the exterior, or is there upkeep? How does the property look exterior-wise? What you have to realize is most of the time you're going to have to replace paint and carpet and do some updating of fixtures most of the time. This is why we like to usually stick to newer homes. It does not say we won't buy older homes, but we try to find when that last home was updated. And the more distressed it looks on the exterior, it's probably going to need more work on the interior. So that's why we get it at a bigger discount. Okay, so keep that in mind. It's why we also like to focus on occupied assets versus vacant assets. Usually 9 times out of 10, an occupied asset is going to be in a much better condition versus a vacant asset. Now, a vacant asset, yes, you can go in and change the lock, see what the property looks like if you're the lender on that deal, or get a lockbox code from the borrower if they've done that. I'm not the borrower, from the bank. The borrower's already moved on while it's going through the foreclosure process, but don't count on it. All right. And this is one thing. Oh, I got to know exactly interior access on my rehab. No, you substantially don't. Because basically taking the property all the way back to where you're going to turn around and fix up and flip it is the longest exit strategy I have. And you make a whole lot more money before that. So keep that in mind. Some things are just going to be normal, and it's pretty easy to figure out what paint and carpet is going to be for the entire house based on square footage, and you can budget that. And then to clean out stuff like that. But that's why it's nice is we offset that unknown by getting at a bigger price point and a discount. Due diligence is different, obviously, because you've got a few more things to look at. Obviously, most real estate investors are normal with pulling values on a property, condition, inspection, and pulling title work to see what needs to be cleaned up the title for them to take over title work. Well, as note investing, we've got a whole nother level of due diligence. It's crucial to thoroughly review borrower documents, title, servicing notes, loan information, and having a comprehensive understanding of all the different risks involved with note investing. I say it's kind of learning what's going on, by evaluating not only the property, the borrower, and the actual paper documents. Besides title and valuation, you do get a pretty good, idea of what's going on with that asset, what's going to take. The great thing about it is if that paperwork doesn't work or the value doesn't come in, you're not beholden to closing on the deal. There's no earnest money, so you can walk away. There's no option fees with notes most of the time, so you can literally walk away if something comes back that doesn't look good. So that's one thing I like about the due diligence process. It's a little bit, a few more layers to it, but it helps you find deals 6 or 12 months ahead of most investors. So keep that in mind. All right. And you don't think you can walk in and just understand due diligence on a note if you've only bought property. It's a different animal. You got to learn the process and steps to go along with it. Bidding amounts. This is a big mistake we see a lot of people make on it. I've seen realtors really screw this up when they come over the note side. Bids are determined in the note business on unpaid principal balance and legal balance focusing on how that compares to the property value. All right. In traditional real estate, oftentimes you're looking at as after repair value when it's distressed. What's this going to be worth after I repair it? Well, ARV does not exist in the note space because we may never end up with a property. Well, yes, it's important to know that a little bit, what it would be. You got to know what as is property is. And especially when you're buying a note where there's a ton of equity or negative equity, you got to know how to bid properly on it. If there's a ton of equity in the property, maybe you have to bid at 80 cents of the legal balance, not 80% of the property value, which is a big difference. If it's over encumbered or underwater where the borrower owes more, then you need to understand, well, I need to probably come in at 50, 60 cents of the value, not the legal balance. So it's a different kind of formula process than just going, oh, ARV times 70 minus my repair cost, which would equate my maximum allowable offer. I've been there, been to enough Ron LeGrand courses to know MAO off of ARV doesn't work in the note business. And I've seen way too many people overbid things when they didn't need to, if they just took the time to understand it. It's like I said, it's different than wearing that property hat versus the lender's hat. Okay. No appreciation is one big thing. When you're buying the note, returns are derived from the principal repayment, not the property value appreciation or rent rates going up. Okay. And now, of course, if you take the property back and you're buying the note on a property with the idea to foreclose to take the property back, yes, then you can ride that appreciation level. Yes, have we ridden the appreciation level when we bought notes at a discount and the values went up in the year or 2 years it took to foreclose in some places? Yes, that's helped in some cases. But for the most part, you're not getting, when you're the lender and you're lending 100 grand, if that property goes up to 200, you're not going to ride that appreciation wave unless the borrower stops paying. And then most of the time, you're going to get out by the foreclosure auction too, if there's a sizable amount of equity above the legal balance. So no appreciation in our case, that's okay. There's a lot of other ways to make money on it, especially if you're buying at a discount. You kind of build your appreciation right off the bat. Buying a non-performing note at 50 cents to the dollar, well, you've got a ton of equity that can be your appreciation ride up and offset that, okay? Now, those are the 13 biggest differences between note investing and real estate investing. There's a whole variety of other little things we'll take a look at. I encourage you, if you have any questions, feel free to reach out to me. My email is scott@weclosenotes.com. You can always make a phone call with me. Book a phone call by going to talkwithscottcarson.com. That'll get you directly in my schedule. Make sure to check out our website at weclosenotes.com. And my personal cell phone there is 512-585-3810. And as I promised in the get-go, if you hang around, we'll let you know we do have our next 3-day virtual note buying workshop coming up November 14th, 15th, and 16th. That's going to be on Zoom, live on Zoom with yours truly for 3 days, going how to find, fund, and flip. If you go to notebuyingfordummies.com right now and sign up, it's automatically discounted 50% for you. So take advantage of that discount. And you and a guest can join me for 3 full days, full day on how we find them, a full days on how we fund them, and a full days on how we make money off the deals by putting the deals together through due diligence. It includes a 200+ page manual. We'll probably have a tape or two. I just got in a list of 600+ non-performing notes that I can cherry pick from in about 35 different states, with a chunk in Texas and Florida, Indiana, Ohio, Michigan, Florida, lots of great places on there and some great deals out there as well. So if you want to learn how to tap into these types of deals and have these deals sent directly to your inbox, like I said, this comes from an asset seller to me, no postcards, no pay-per clicks, one source to send me 636 assets that I can cherry pick from, then this is definitely the class for you. So go to notebuyingfordummies.com, or you can also get to it via our website, weclosenotes.com. Click on the virtual workshop and get signed up today, and we'll see you at the top. Oh, replays are included too for you, so you don't have to wait till November. Get signed up today. You'll get the replay sent to you, and you can start learning today how to become a note investor. But thank you so much for this episode. Guys, once again, thanks to everybody that's out there listening and watching. Love to hear from you. Keep your comments coming and your questions coming, and we'll see you at the top. Bye, everybody. Hi, Scott Carson, excited to be here with you today and share some knowledge nuggets to you. And I just want to, this episode, I'm going to talk a little about how people are shooting themselves in the foot. And I feel that I don't know how many phone calls and emails in the last 3 weeks. Note investing is getting excited. People are looking to do it, which is always great with the market being like it is. There's plenty of inventory to go around. But I'm always amazed that, how do I say this? I'm always amazed that people, when they get into something, they try to band-aid it. They try to, and I get it. If you're hamstrung for funds, you may not have a lot of time or have a lot of resources to learn
business, but you got to take a class. You've got to learn the ins and outs. You can't trust a Bigger Pockets article from years ago. You can't trust videos or YouTube, things or podcasts that are even more than a year or two old, because things change. I had a great call with a young guy out of Connecticut today who's just a hustler. He's actually calling banks and calling asset managers. He actually took one class, not on the non-performing side, but he took it from a guy that teaches owner financing, which is great. There's nothing wrong with that. But you can't apply your owner finance strategies to strategies for tracking down non-performing or performing notes. You can't take what one person says as a fee, because the guy was telling me, he's like, I've had a couple people hook because I'm trying to broker some deals and make some money, but my fee, I think, is what shot it in the foot. And I'm like, well, what kind of fee were you? I was trying to make 6 points on the deal. I was like, did you even calculate what 6 points was to your buyer? He goes, no. He goes, well, it was like $6,000. I'm like, okay, but what did that mean to your investor or the buyer on this? He goes, I didn't think about that. I'm like, yeah, if you're just trying to sell a performing note and it's in the 90% range or 80% range or whatever it might be, 6 points is way too much. That'll kill the deal. A normal fee on a performing note is 1%. On a non-performing, it's normal to trade at like 3 points. Now, that doesn't mean you can't get 6 if the deal's good, depending on what you're paying for. But I asked him what was the yield. He couldn't tell me how to calculate yield. He couldn't tell me the ROI that the seller was getting. And those are issues. And I have nothing with. I'm so grateful that the guy is out there hustling, and he just needs. I'm willing to work with people like that. Hey, you just need. Hey, sign up for our one-day class, noteweekend.com. If you've not done that, it's free. Doesn't cost you anything. It's their design to help you understand how to get started. And I had another phone call after I talked to this young guy with a realtor out of California. She's wanting to buy notes in California, and I asked her, well, have you taken any type of training? Oh, I'm a realtor. I've been a realtor for years. I used to deal with short sales. And I chuckled. I was like, well, that's great. But short sales and being a realtor is phenomenal. Congratulations on your years of success. But being a note investor is different than being a realtor. She says, well, I know how to pull comps. I'm like, that's great. But do you know how the comps and how the debt and the payoff value and the legal balance all affect your offering in the foreclosure time frame? And she couldn't answer that question because she didn't have an answer. She didn't understand it. And then she wanted to go immediately, well, what about buying seconds? And I just chuckled. I'm like, well, seconds, there's not a lot of seconds available like there was back in 2008. Seconds are pretty much overpriced because the values of properties have gone up, and now these seconds are over-encumbered. There's no reason for the bank to take a big discount like it before. So you've got to look at what you're doing. And both people, I read an article on Bigger Pockets. I'm like, how old was the article? Oh, it was like 3-4 years ago or 5 years ago. I'm like, well, understand that Bigger Pockets is a dumpster fire. There's a lot of stuff on there that's outdated, or you get people that are on there commenting and they got thousands of comments, but that doesn't mean they've closed thousands of deals. So it's important, if you're sitting on the sidelines or looking to get started, you want to dive into wholesaling notes or buying notes for your own portfolio, you got to understand that, hey, you can shoot yourself in the foot by not understanding what you're buying, what are you looking at, how to bid effectively, how to evaluate these deals, because they're different. Note investing is a form of real estate investing, but it's not fix and flipping. It's not going about and buying a property and putting a renter in it. Every niche is different. I had the same lady ask me, well, what about multifamily? What about self-storage? I'm like, well, do you understand how to evaluate those deals? Because they're different than buying a single family. Well, I bought a fiveplex. Well, that's great. A fiveplex is great. Do you understand it's a little bit different process on that stuff? It's a longer process with commercial deals than residential deals. And look at here. I know there's a lot of people that will hit you heavy on the head they'll pitch you to death. They'll pitch you into a 2-day class and then pitch you into coaching, and they won't tell you anything. I get that. That's not the way we work. Yes, do we have a coaching program? Yes. We have classes that we teach. Yes. But my biggest goal and my vision when I started this years ago was I was that humble guy coming out of Ron LeGrand classes, traveling the country, and I promised that if I got to where I could be, I would try to help as many people achieve success as possible. Yes. Is my time worth something? Yes. Is my experience worth a whole lot more? Yes, it is. But I understand, and if you're hungry and you are seriously thinking, then take a class, take an 8-hour class at least. If you're not going to do that, I can't help you. If you find that valuable, then guess what? It's worth signing up for our WCN, our monthly membership at $97 a month. it's worth taking the different classes that are involved with that on the 3-day note buying for dummies workshop, the 1-day wholesaling class, the 1-day calling banks, the 1-day in due diligence classes. All those classes are included in that, and it's so valuable to help you understand that how note investing is different. There's more to it. You have to think like a banker than a fix and flipper. And so that's what I wanted to just take a second to you. We've got, YouTube University is great. We've got the #1 YouTube channel. Obviously, we have the #1 podcast for note investors. That's not boasting, it's just true fact based on downloads, views, everything that's been around. We're just here to deliver content for you to help you make educated decisions. Can you piece together how to be a note investor by listening to our videos and watching our YouTube channels? Yeah, you could, but it's going to take you a lot longer than if you actually just gussied up and paid for a 3-day class to make things come into picture for you. Because if you try to take a little bit from one person, another person, and what they offer for free, they may not even be talking about the same thing. Yeah, Italian sounds a lot like Spanish, or Spanish sounds a lot like Italian, but there's a big difference to that language. And people speak differently. You got to understand asset managers are going to ask you something, and if you don't know it, they're going to know exactly that you don't sound like you belong. And the last thing you want to do is do all this hard work to hustle just to shoot yourself in the foot, when if you just took a little bit of time and took a class, you'd be a much more educated individual out there. And that's what I just want to go out today. Don't shoot yourself in the foot. Get educated. Learn the craft. We're all going to be real estate investors for a long time, hopefully. And if you're going to focus on 1, 2, or 3, or whatever niches you are, it is worth you. It is worth your time. It's worth your energy. It's worth your money, and it's also worth your future investors, whether for you to understand exactly what the hell you're doing. Because how can you replace my 16 years of experience? You're not going to do it in a day or 2 days or in just an hour, but you can do it by getting coached, sign up, and let me try to help you avoid those big potholes. Let you avoid those landmines out there that if you don't know, you don't know. I get it. Ignorance is bliss until you've actually stepped on a landmine and blown up your deal or blown up your investment opportunity out there. There's nothing more frustrating than doing a bit of work only to have it blow up because you do something stupid. And, I'm a big believer that there's a lot of great deals out there, plenty of deal flow. Don't let people tell you that, there's no deal flow in notes. This there is, if you'll know how to market. And part of it is taking somebody's expertise like mine, taking the class, learning how to market, learning how to go find deals, because we're not running out of deals. We have plenty of deal flow coming in on a regular basis because we know how to market. We know how to make connections to the bank and asset managers and hedge funds and show you how to find those things. So if you're interested, yes, this might sound like a bit of a pitch, but go to noteweekend.com. That's our free 1-day class. And here's the big thing, ladies and gentlemen. I want to help you close deals. If you are sitting on the sidelines with money in your retirement account, a checking account that you want to invest, you got 10 grand, you got an LLC, and you don't know where to go, please reach out to me. Book a call at talkwithscottcarson.com. Let's help you close your first note deal. Are we going to charge a commission? Yes, but we'll help you. We'll help you with the due diligence. We'll help you find a deal. We'll help you make a decent return. We're not going to knock 30, 40% returns for you because those, but we'll help you find a performing note that'll pay you 8 to 15% that you'll have in your IRA or your LLC. It'll be a note that you own, and you'll learn so much more by doing and taking action and understanding that. But you got to learn, you got to crawl before you can run. Or really, you got to crawl before you walk. Most people are trying to run out of the gates, and they're falling flat in their face because they don't understand the foundation, the mindset, and how you have to approach note investing differently from your fix and flip or your rentals or your wholesaling classes. It's just a different process. So, like I said, we want to help 100 new note investors buy their first note before year end. Plenty of deal flow, plenty of great deals out there. We're not talking, you don't need a ton of money to do this. You got 10 grand at least. We've seen some deals that would be a pretty good little yield. So yeah, probably better than 0% sitting in your IRA account for the last 6 to 12 months. So please reach out to me, talkwithscottcarson.com. You'll probably hear me talk a little more about it later on. We just discussed this last night on Note Night in America. So make sure you check out that episode on the Note Night in America podcast, or by going to our YouTube channel and checking out the YouTube replay video of the Note Night in America from last night on August 28th. So go take some action. Learn learn your craft. That is so important to be an expert. And being an expert, I think Grant Cardone said it takes 10,000 hours of doing something to become an expert. And if you're trying to do it on 10 hours or an hour, yeah, that's a recipe not for success, but a recipe for failure. And if you'll just be a little humble and a little patient and take some training, you'll be a lot better off. Okay. It's kind of like this. Think about this. When you're trying to drive a car, how many of you got behind the wheel and just started driving without practicing, or without your mom or dad sitting next to you holding the steering wheel or grabbing the brake, or having you drive around a parking lot? A lot of you're getting into a car and you're like trying to drive on the interstate right off the bat with no training, no practice, and you're going to get in a wreck. You're going to end up in a ditch, or better or worse off. So don't do that. Avoid the train wreck, or avoid the car wrecking your car, wrecking your vehicle. Get a little training, have somebody hold your hand and walk you through the process so you don't end up hurting yourself or hurting your business, and make some money along the way. So anyway, that's all I've got for today. Go out, take some.
Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closures and our Money Mondays webinar here for our coaching students. And I've gotten a lot of questions over the last few weeks, especially it's been interesting as people get into the first of the year. They're wanting to make good returns. They're wanting to get started investing. They're wanting to take action. And if you've been through my workshops, or you've been to at least my Note Weekend, you always know that I'm telling you, hey, get out there and network, get out and talk to people locally or online. I mean, especially if you're not going to go do it locally in person, you got to be online. You got to be sharing information, sharing how to really capitalize in today's market and what you're focused on. And I don't care if you're investing in tiddlywinks, crypto, or whatever it is, you've got to be out there sharing what you're looking for and telling people what you're looking for. But I've gotten questions from investors like, well, Scott, how do I make money as a note investor? How do I make six figures? Because I don't want to go from my job paying me 50 grand a year, create another job that's just going to pay me 50 grand a year. And I'm like, I totally understand that. All right. Totally understand that you don't want to do that. So I wanted to go back in. I've kind of, every year we usually record this kind of episode because it's always a good thing. How to make six figures as a note investor. All right. And six figures is just the starting point. Okay. That's all you're going to make is 100 grand. That's it. We've got quite a few of our coaching students are making $250,000 a year and more. Because if you're going to do something, it should do something that makes money. It is not too much work. And this has a way of really helping you to do it passively. Yes, you've got to do a little bit of work. You've got to kind of log in. You've got to spend some time finding deals. You got to spend some time marketing. If you don't have your own money, you got to really market for private capital. But this is not a difficult concept. And this presentation is one of those favorite things. Now, I've tweaked it a little bit. If you've heard me talk about how to make six figures or how to make 100K as a note investor and watch before, I really want you to hang around because, yes, a lot of it's similar things. But the very end, I literally went out to a platform, pulled a list available today that you all could purchase today if you had money. Okay. If you don't have money, you can still use OPM, pay them a good return on their money, IRA investors, friends, families, and stuff like that, and still put six figures in your pocket on an annual basis on almost a passive level with performing notes or non-performance. I like non-performing because it's higher returns, but there's great ways still to make double-digit returns in the performing paper side, especially a couple different ways to do it. So I'm excited about this episode. I'm excited to share with you. Look, there are no dumb questions. If you're watching this live or watching this on the replay or joining me live in Zoom as one of the WC crew members, ask questions. That's the only way that you're going to get educated and understand how to do the voodoo that we do. All right. Good morning, Paul. Good morning, SK. Good morning, a lot of other folks out there. I see we've got a good group joining us online here. So let's get into it. Let's talk to how you make some bank as a note investor and why I think it's the sexiest side of real estate. Okay. And it's important for you to understand, ladies and gentlemen. Will this happen overnight for you? Probably not. This is not a get rich quick scheme. This is a build wealth strategy that if you stick into it and use it, you totally can do this and really change the way your life is, change the trajectory, and get rock and roll. So let's dive into this. So anyway, so first and foremost, it says making six figures in 2024. I got to tweak the slide, but anyway, you get what I'm saying. In the next 12 months, let's break it down to basics. Okay, let's just assume, and I'm just saying assume that you need $5,000 in cash flow per month to cover your bills. Okay, not five. That's well, Scott, $5,000 times 12 is only 60K. Yeah. Just chill with me for a second here. I'll discuss this and just follow me on this. So $5,000 per month, just a basic. You need $10,000 per month. It's $120,000 a year. Then just double these numbers. All right. Now, one of the great things about what you're going to want to do is you're going to target assets, whether you're using your own money or using other people's money, assets with at least a fair market value of 50,000 plus. Okay. 100,000 plus. Okay. Doesn't matter. Whatever you want to set your base, your floor level of assets, I wouldn't go below 50. So that's why we're doing it 50. Okay. Now, if you're buying non-performing notes at roughly 50% of fair market value on a one-off basis, which is about what you would see on a $50,000 asset, you pay about 25. Okay, 25K for it. That's kind of normal. We're still seeing stuff like that, especially if they're non-performing, that's occupied, that you can get back on track. That's a big key. Okay. You want them to be occupied. It gives you the most amount of flexibility. Okay. Plus buying at 25K and 50, that gives you plenty of money if you have to foreclose. You've got money to foreclose to make money as an REO sale or do some like upkeep and then still sell it and make a profit. Okay. Obviously, we want to see where rent rates are higher than existing payments. That's pretty much the case now these days. In some cases, rents can be lower than existing mortgage payments, but it's preferable if rent rates are high, because that's the thing is if you're dealing with owner occupied, they're already looking to see what rent is if they're behind on their mortgage payment. I had a conversation with a guy today who was called in and was looking to potentially modify his loan because he'd been out of work. And I'm like, well, what's market rent? Well, market rent's a lot higher. I'm like, well, then there's not really a lot of room for me to justify reducing your interest rate, reducing your payment, because it's already about 60 cents on the dollar of rent rates. If you get foreclosed on, you're going to pay a whole lot more. Okay. And this is a base model. I only say this because you want your payments to be at least probably in the $500 range, $500 in a month range. Sometimes lower, sometimes it all varies how the mortgage is structured. But that's kind of the numbers that we're going to run off of here. Yeah, sometimes it could be under that at 400, sometimes be over that at 600 or 700. I mean, we had a coaching student bought a note the other day, a week ago today, actually closed on it. The monthly P&I on it is $792 a month. He paid $35 for the deal, and the house is worth $70. Okay, so these are very feasible deals that we see all the time. All right, now when you buy these notes, it's not to foreclose. When you buy these notes that are owner occupied or have tenants in it, part of the servicing side is to reach out to these borrowers and say, hey, let's get you back on track. You're behind by more than 6 months or greater. That's why we get a bigger discount. Let's get you back on track. Can you bring 4 months to the table for us to do a forbearance agreement, loan modification kind of aspect to allow you to get back on track? So 4 months of back payments at $500, that's basically about $2,000 you wanted to bring to the table. That's not a lot. Okay. If somebody's going to get up and move, they're going to spend more than probably $2,000 on moving costs, deposits, and all that fun stuff that go along with it, right? Give or take a little bit. All right. And here's the thing. Well, Scott, I don't have 25 grand. I don't have 100 grand. Well, okay, that's fine. You're going to use OPM, other people's money, okay, investor money, and you're going to pay them anywhere from 6 to 12% to purchase the note. All right. And the reason we say 6 to 12% is because when you're talking to these investors, you don't want to just go out and offer them 12%. Now, some people, yes, we have it 12%. Others, we have it 6%. This is why we teach so much in our day 2 about the conversation, the mental side of the money raising side, and asking potential investors, IRA investor, hey, what's that money been doing? Where's it been sitting? How's that performed for you? If they're getting 0% on their money, it's been sitting there for 2 years, don't give them 12, give them 6. You can always increase it later on deal number 2 or deal number 3 to see if they're a good fit. But if they haven't done squat with their IRA funds in 2 years, then don't go out and give them 12%. Okay, because if they want to find 12% or greater, they really need to go do it themselves. Okay, but I'm just giving you that scenario. So let's just say we're getting it low. Okay. If you borrow 25,000 at 6%, okay, that's basically 6% is just flat interest only. You're paying $1,500 per year out to these investors, and that's $125 per month if you break it. 1,500 divided by 12 months. Okay. Now, if you're gonna get 5,000 in cash flow, and the monthly payment roughly is 500 at minimum that we're looking for, you take the 125, that comes to $375 a month net to you. Well, if you divide that into 5,000, that equals roughly about 14 deals. It's like 13.3. Okay. But we round up because you're not going to do a third of a deal. Okay. And do 14 deals. All right. Okay. So 14 deals. And just so you know, 5,000 by 375 is 14. What's 375? Well, that remaining $125 is being paid to your investor on a monthly basis or quarterly basis, is what I would prefer. Okay. Now, if you do that in a year, $375 a month times 14 deals times 12 months, that comes to $63,000 in annual cash flow on the front side. Okay. That's the pay-in monthly basis through a servicing company. Okay. Now, one thing we didn't add to this was that extra $2,000 at a minimum. Okay. So if you take 4 payments of 500, that's $2,000 skin in the bank that goes into your HIP National Bank. All right, right here. From your borrower to modify to forbearance agreement, stuff like that. And then if you take that 2,000 times 20 times 14 deals, that's $28,000 in income that goes to you off of that. So if you add those two together, 63,000 plus 28,000 skin in the game, that's $91,000 in income just off basically the buying side. I'm buying a non-performing note, and we're getting the borrower back on track. Now, here's the great thing. Yes, not every borrower is going to perform, but if you're coming to somebody who's occupied and they're living in the property, you're going to probably be able to get them back on track about 70% of the time. All right. Especially if it's in fast foreclosure states. Definitely. If it's a longer foreclosure state, they may drag it out, but that's going to happen. But still, if it's occupied and you look at the servicing notes, you can find people that will want to get back on track pretty relatively easy. True story, able to do that. All right. Now, moving on. If you want to let's talk about this. So you buy these notes, you get them reperforming, and you want to sell them all off. Well, if you bought 14 assets at $50,000 in value, I'm obviously going to be probably more than that, but let's just do that, okay? That's a $700,000 portfolio that you're holding in fair market value, okay? The UPB is going to be greater than the value, so they're a little upside down, but still you're sitting in a good spot, okay? Remember, you're only at 50% of the fair market value or UPB, whichever is less, right? So 25,000 of what you paid purchase price of notes times 14, it comes to $350,000 funded. The funding partner is getting, remember, 6 to 12% payments that you're making out to them quarterly. All right, not once a month, but quarterly. All right. So how do you return your investors' principal if at 12 months they want to get back out, if you get the borrower back on track? Okay, well, the great thing is once you have a borrower who's made 12 months of on-time payments or 12 months of performance, that's a re-performing note. Okay, that's reconsidered a performing note or re-performing note. 12 months of on-time payments from skin in the game. Why not? They're committed to staying back on track. Whatever kind of hiccup they got into on the front end, guess what? They're here for the long term in a good way. Okay. Now, you can sell your re-performing note now at 80% of fair market value. Remember, the UPB is a little bit higher, so roughly 80% of the fair market value. Now, if you're buying loans where there's equity, you wouldn't be paying, you'd sell at 80% of basically the legal balance in that case in a lot of cases. But for what we're trying to make here is underwater notes, okay? So you sell it at 80%. Well, if you take that 80% and multiply it times the $700,000 portfolio you have of those 14 notes at 50,000, that comes to $560,000 in note sale proceeds. Okay, that means you sell them all, you get 560 in, you pay back your investor or investors the 350 you borrowed at 6% or whatever it is. Remember, they're getting their monthly interest paid back to them. So guess what? You would then net, all right, 560 minus 350 comes to a whopping $210,000 plus in note sale proceeds. Now, if you add in the $63,000 in monthly cash flow you've gotten, plus the skin in the game from these 14 borrowers, That's a pretty good chunk of change. That actually comes to $301,000 in total income. Now, this is gross. Well, that's grossly high. I'm trying to be as conservative as possible with these guys, going off of raw numbers. When I looked back at portfolios that we've bought, yeah, 500 plus was where the numbers came in. 500 was basically the minimum number in a lot of cases. Now, there's notes that if you're using your own money, you can go higher or lower, you can be differently here. But the idea here is that you're paying somebody else's money. Now, if you're using your own money on this, guess what? You're netting in that cash flow on a monthly basis. You don't have to worry about splitting it with anybody else. Okay, your ROI is higher. You're not have to pay back your investor because you're paying back yourself basically and still making a great return. Okay, so the ROI on this is actually to you is infinite because you didn't use your own money. Your investors made 6% or greater, whatever you wanted to pay them, and that's a great thing. Flat interest rate loans, and you still got plenty of money there at the end for it. That's a pretty good day. That's a pretty good 12-month salary. Can we agree to that, ladies and gentlemen? A chunk on the front end with skin in the game, monthly cash flow, and boom, a big payout in approximately 12 months, give or take a little bit. So let's say that it takes you 18 months to sell your notes. Okay, it sells 18 months. So you're making 100 grand net every 6 months if it takes you 18 months. Okay, just to give you a little bit of an idea on that. All right, let's move on here. Now, what does the funding partner get? Well, your funding partner is just getting a flat return on investment. They're getting their 6 to 12% on a quarterly basis. If it's in a self-directed IRA, it's going in passively. They can't be active. It's a beautiful thing using IRA investors, okay? It's not paying zero to them, and they're not getting a negative return with costs and things like that. It's actually putting some money into it, and that's a great way to get the ball rock and rolling. Savings and CDs are paying less than 1%, often 0.01% right now, unless they put in 100 grand and tied up for 10 years. This is what your competitive is. This is what your competition is, CDs, okay? Now, if an active investor comes out, well, I want to make 12% or greater, and I'm like, well, what have you done? Well, I'm fixing properties, I'm private lending. Okay, then you're probably not a fit for what I'm trying to do. I'm looking for passive investors who want to make it above average return than what they're used to getting, okay? And you're not doing these long-term deals. You're doing 24 to 36-month deals. That gives you time to get them back on track and turn around and sell them all off. Biggest mistake I made was setting up my agreements at 1 year initially. Get it done, and just drags that a little bit. But that's the thing. You're doing short-term 24 to 36-month deals, not 30 years. All right. When people start talking about mortgages, oh, I'm going to be tied up for 30 years. No. We're talking 24 to 36 months. Buy non-performing, working to rehab the borrower. Once they're back on track making payments, we're going to turn around, sell that note off, and cash out of the deal. Okay. They're making 6 to 12% without having to do anything. It's a pretty good day. Like I say, flat interest rate loan agreements, not difficult to do. No joint venturing, no violating securities laws, selling CDs or selling certificates. I mean, selling securities. That's not the thing we're doing here. Now, here's the thing you got to keep in mind. 33% of all self-directed IRA accounts, roughly, are at 0%. There's money sitting there not making them anything at all. Ouch. All balance sizes. Okay. Now, could this be one investor that funds the 350 for you? By all means, it could. Could it be 14? Yeah. It's not going to be anything greater than 14 because you're not going to pull people's money together. You're going to do one investor with 50K to buy one note and get rocking and rolling. Okay. Using your using an LLC as your main entity. Maybe it's a series LLC. Maybe you're setting up one or two LLCs for every 10 investors that end up funding the deal. Just that there's a variety of ways to do this, okay? Now, let's recap. What are you getting? You're basically netting $375 a month after cash flow at 12 months times 14 deals is $63,000 in cash flow to you, okay? You're collecting at least $2,000 of payments from the borrower, skin in the game. Hopefully, sometimes more, all right? But usually that's the minimum we're looking for. So that's times 14 deals. You're paying your investor 6 to 12% flat return on a $25,000 funding amount, okay? You keep for cash flow or sell the reperforming note and cash out. That's the thing. If you're getting a great return on some of these deals, you may want to pay off the investor so that you keep the deal for yourself. Or if you've got them in at 10, maybe you get somebody at 6%, you refinance them out of their deal, okay? You rinse and repeat and go and rock and roll. Now, here is basically a spreadsheet I put together showing you if you were to buy one note netting $375 a month to you, okay, that's your net, and you did one per month for 24 months, okay, one performing note, that's the same thing. Maybe it's not a non-performing note. Maybe you go find a performing note on a platform or in the Facebook group, or you get a list of notes sent to you from a lender who's willing to sell some stuff at a discount. It happens, okay? But at $375 a month in 24 months, down here, 375 times 24 comes to $9,000 a month in monthly cash flow. Now, over this 24-month period, you would have also made an additional $108,000 in cash flow because it grows every month. It compounds. First month is 375, second month is 750, third month is 1125, fourth month is 1500 if you're buying one note per month. This is not rocket science. This is not 40, 50 hours a week to find these types of deals. But we all know, ladies and gentlemen, how many of us are going to be around for at least 24 months? Well, most of us, right? A few of us are probably going to pass away or have something weird happen. But for the most of us, real estate investors don't die. All right? But this is how you build $9,000 a month in cash flow coming in on a monthly basis. If you did this for 4 years, that's quite a bit of chunk of money. That's 18 grand a month. That's 18 times 12 is enough. That's $216,000. That's just under $250,000 a year. And just on that, this is not them bringing anything extra to the table. This is not them paying you off or anything like that. Okay, this is just holding it for cash flow. Yes, well, you'll have some notes that they refinance out that pay you off. Will they go non-performing? Yeah, let's talk about that. Let's say you like to buy non-performance, which we kind of talked about. And instead of you looking at the cash flow model, you'd like to make roughly $120K a year. I've had several students that come to me like, well, how do I make $100K a year? Well, you figure it this way. And this is from somebody who's been in the business for roughly about 20 years. If you're buying a mixture of performing and non-performing, your non-performing is going to kind of go a couple of different ways. And unfortunately, not every non-performing note will re-perform. I mean, if you stay in that higher profit range, higher profit, like if you're saying at 300 and above, most of the time, it's not going to be in your best interest to reinstate those guys and gals or modify or work with them in a forbearance plan. Your better bang for buck is probably going to foreclose on that because they're going to have a lower interest rate and it's be harder. So the profit margin on that, really the $250,000 loan and above, is really the foreclosure side. But under that, it can basically be reperformed. But let's say if you take 50% of the loans that you buy will reperform, they'll turn into monthly cash flow for you. The other 50% is going to be some sort of deed in lieu, cash for keys, or you foreclose. All right, you work with a borrower to get out of the property because they can't pay on time, they don't want to pay on time, or if they stick their head in the sands, or you find a property that the borrower's moved on, or a reverse mortgage, you just foreclose on the deal. Okay, that's just kind of a quick 50-50 aspect. Now we see it's higher about if we're buying occupied assets, it's going to be closer to 60-70% get reperforming, so that means 30 to 40% won't pay you if to foreclose. It just adjusts by what you're doing. Now, if you're targeting vacant assets, guess what? You're going to foreclose probably 90% of the time and go that route. But if you're wanting to get 60K in cash flow annually to 5K per month to split this 120,000, so that's 10 on average, 10 grand a month. Remember, all right, you've got that cash flow. We talked about building those notes, okay? 60K in big checks means it's going to take you about 10, if you're getting 10 to 15K per deal minimum on the lower balance. I wouldn't do a deal where I could foreclose on it and make less than 10 grand. That's not a good sign. I prefer 20 grand, but if you're going to make 10 to 15 grand after your money costs and it's a pretty clean property, that means you're going to do 10 to 4 to 6 deals on the side. All right. And remember, we talked about that 60K cash flow in the previous slide. So that's 14 deals to get to that. So if you figure in, you buy 14 non-performing notes that get reperforming, plus 6 notes that you actually end up foreclosing on. That's 20 deals. Okay. Everybody who's watching this is capable of doing 20 deals this year. Now, whether you do or don't, that's completely up to you. All right. Completely up to you on what you do, how much you market. And of course, I don't have that much in private capital. Okay, that means you need to go out and market for private capital. You're going to dive into the postcard systems, the self-directed IRA system that we teach to connect with people. Okay, So that's 20 deals. Now, how many offers do you need to make to hit that 20 deal mark? Well, most students, most new people who've gone through our class and listened to what we say have about a 10% closing ratio to begin with. You make 10 offers, maybe you get 4 or 5 accepted, you end up closing on 1 because the due diligence kills everything else. So let's just assume a 10% closing ratio. Some will be higher, some will be lower. Okay. Well, 10% closing ratio 10% times 20 notes means 200 offers you need to make in 12 months. 200 divided by 12 comes out to 17 offers per month. That's 4 and a quarter per week. So you need to make an offer about 1 a day. I mean, 1 a day is pretty easy. I mean, you may make 5 on Monday and that covers your whole week, but that's what I'm getting at. This is not, I got to make hundreds of offers every month. No, no, no. You make 17 offers per month. It's pretty feasible if you'll understand how to market and how to stand to reach out to things to make some things happen. Okay. Now, let me show you a way that you could do this right now. Okay. With a platform out there that, it's out there. Sometimes there's deals on there. Other times there's not deals on there. Okay. But we, in the spirit of making it easy where there's zero excuses that why you can't do this. All right. So we went over to an online platform that we downloaded what their available notes were available for. We got rid of some things off it, but after we got rid of the low interest rate, the low yields, we got rid of the offers of the properties that were non-performing or they didn't have a solid sales price. Like making offers great, but I wanted something that I could physically show you. And we also then got rid of higher assets that are over like $500,000 in price. Okay. So when we narrowed it down from 140, 160, I don't remember exactly what it was, we narrowed it down to 57 performing notes. Okay. And they had the sales price. So out of those 57 performing notes, it's a 2.69 million sales price, which is at 77% of the loan to balance. Now it didn't have values on there. On these, a lot of these were newly originated loans in the last year. Some were land loans, but they were all performing and basically underwritten. I actually know some of the sellers. I actually am interviewing the seller of a chunk of them in a few minutes on the podcast. So basically, if you come in at what they want to sell these for, the firm or flexible price, flexible we'll get to in a second. It's a 3.5 million UPB, unpaid principal balance. Okay. Now, if you take the 57 loans and multiply the monthly P&I payment times 12, that's $658,000 in annual cash flow. Okay. Now just taking the 658, subtracting, we'll just say $25 a month in servicing costs, because it's a performing note. You can do that in a couple different servicers. You take 658 minus, that's your net cash flow. Divide that by the 2.69 million sales price. That's a 24% ROI after servicing. Now, let me share you the spreadsheet. Let me go through this with you. I don't mean to blow you away, but, well, Scott, I don't have $2.7 million. I know you don't, but let's talk about how you can do this, okay? You've always heard the analogy, how do you eat an elephant? Well, one bite at a time and not the asshole in first, okay? But I can show you how to do this. This is not difficult. We've helped plenty of our students do this, and this is one of our focuses of doing this. This is why you can, it does, maybe you don't need to buy 57. Maybe you need to buy 10. Who knows? Or maybe you need to buy your first one to build some confidence in putting systems together for you. So let's go through. Let me bring up my spreadsheet here. All right. So I think this is it. All right. Just making sure you can see. Yeah. Okay. So this is all for sale. You can see the list prices on these are anywhere from like 49 all the way up to like 146. But there are a lot of like lot loans. Okay. And here you can go. You can see the performing, the unpaid principal balance, the interest rates all over the place. The interest rate on these is anywhere from 7% up to 15%. Okay. That's the interest rate, underlying interest rate of these loans. Yield is anywhere, if you just figure the yield is anywhere from 15 to 20.5% based on it. Now, the average term of this is 84 months. Oh, no, I'm sorry. The average term was actually less than that. You've got some all over the place, 56, 59. Yeah, 57-month average. Some are longer than less. But this we're talking, that's 5 years. Okay? You'll be in and out of these deals in 2 or 3 years, the way I teach you. Okay? But if you go over here, and I just add these numbers up. So 57-month average, if you take this Total UPB is 3.504 million. Okay. The sales price, if you add these up based off the website, is 2.7 million there. Okay, so 2.7 divided by 3.5 is 77% loan to balance. Okay. Now the average sales price, obviously, if you take 2.7, divide that by 57, there's 57, no, it's not 58 because the first one there is that. So basically, average purchase price of these is 47 grand. 47 grand. Okay. All right. And you're at 77% loan to balance. Okay. So you got 23% of equity. So average is about 60 on these. So let's just do this here real fast. So I did not do that. Divide that by 57. So yeah, 61 is the usual average UPB on this. There's about $14.2 thousand difference between the sales price and this. So we're selling at a 23% discount on average across the board. Okay. Now, if you figure $57 loans times $25 a month in servicing costs, that's $14.25 a month in servicing costs that you're paying to the servicing company. Okay. Now, if you take the annual cash flow, all right, total cash flow $674,960. Where did I pull that from? I went over here to the P&I payments. Here you go. Monthly is $56,246 if you add them all together. And payments on these are anywhere from $160 all the way up to $9,300. Because you have some big loans on some of the stuff here. Okay, let's see here. Let me check. You get a big condominium there in Georgia. It's a big payment. Okay. We can even get rid of some of those off-brand ones so you can make it more vanilla. But I'm just saying, pretty simple. So taking that monthly cash flow, all right, total cash flow is $674,000, just under 675 net. After you remove your annual servicing costs, it's 657. 657 divided by the purchase price of 269 or 2.7 roughly is a 24% cash and cash return. Pretty good. Pretty stinking good. Okay. Now, a lot of these are flexible. So let's say you can negotiate an additional 10% discount on these. All right. 10% of what you're paying. So 2.69 means you're buying it for 2.425. All right. It's just under 79 or under 60. Sorry, under 70% loan to balance. Okay. That means 42,548 would be the average purchase. So it drops another 5,000 roughly off. Okay. So now you're at almost $20,000, 18,500, 18,600 in equity. Okay. Now, if you bought these at 2.4 million, your new ROI is roughly 27% on the gross side. Okay. After servicing and stuff like that. That's pretty good. Okay. Now, that's if you use your own money. You got 2.5 million sitting around. Here you go. Here's some opportunity for you. Okay. Now, if you don't have 2.5 million just sitting in your piggy bank, okay, that's fine. Let's say you got to pay money to your investor. So you're getting money at 8% interest. Let's just say that. 8% means you're paying off 8% on the 245. Let's see here, B67. Yeah. So you're netting 194. All right. I'm sorry, 194 is what you're paying your money. You're netting 463 on that deal annually. If you're paying 10%, you're paying 242. You're netting 415. You're paying 12%, that's 291. You're netting 366 on the cash flow. Now, let's take it back. Let's do a different thing. So this is at the 10%. Let's do it at normal amount. So let's just do here. We'll just copy this down. Boom, boom, boom. C is equal to, I didn't do the net is equal to, let's go here. Times 0.8. Yeah, that's right. Is equal to just the total sales times 0.1 is equal to the 269, 2.7 million basically times 0.12. So that's what you're paying, 323. You deduct that number from the cash flow. And there you go. So it's a little bit less. So if you are paying, you don't get the 10% discount, you're still paying 2.7 for the 57 notes, and you're paying 8% money, that's 442 net to you. 10% is still 388. 12%, it's almost a split right down the middle of 334. Do you see that, everybody, ladies and gentlemen? That's buying average one note at 42,548 average. Okay. Now, some of these, we could get rid of some of these definitely. If you want to go stay below that, great, we can stay below that. But you see these on average, most of these, the purchase prices, there's nothing greater, 144, 163, you got a couple larger ones on there. But you're getting a pretty good little discount there too for you. Everybody can go do this. All right. But it comes down to, if you have your own capital, guess what? Go put the money to work and make a phenomenal return on your investment. Okay. Hold these for a while, sell them all off. Now, one thing that you would want to do, obviously, if you're buying this at 42, you like the bigger hit, like the bigger spread and the balance with it. You're going to have to pay your investor off in 2 to 3 years. So this is not for 30 years, but hey, guess what? I would be taking a chunk of the money that comes in and putting it to the side to pay off some of these higher valued assets, or continuously keep marketing. So as you get good investors that come in that like a lower, are happy with a lower term, 6 to 8, you can then sock that money aside and refinance out your more expensive investors. Okay. One thing you would definitely want to put in the funding agreement is that you have the right to refinance them out at any given time. Okay. And do that without a penalty. But their minimum investment is being in this, and I would say at least 24 months for you. Okay. And the thing that you'd want to go do is look at each note's amortization table to see, okay, we're buying it here, the balance is this right now, we're buying it below this. As they pay down, how many months do I have until that balance equals what I invested or I borrowed? And that's your you're like, hey, you got to get rid of it before now and then, or sell it back to them, give them complete cash flow, get them the whole payoff back to them in a lot of cases. You could do that too. Okay. Any questions, any comments, any concerns about this type of strategy? I mean, this is not meant to be difficult, but ladies and gentlemen, you can all do this. Maybe it's not 57 at once, maybe it's not 20 at once, but maybe it's one a month. Maybe it's one just to get the ball rolling that's going to put some cash flow in your pocket. Because if you're making cash flow off other people's money, it doesn't matter whether it's 7, 8, 12% net. It's actually technically infinite. All right. And the confidence that you will build from close on your first deal is so worth it. Just get the ball rocking and rolling. Pull the trigger. Now, look, I've had students that have bought small balance notes, $4 grand, $2 grand, $3 grand, just because they were scared and they went out and did that. They're like, oh, I could do this. We put it with the servicing company. If the borrower doesn't pay, there's plenty of room there to foreclose. If you're buying some of these land notes, a lot of times the sellers may even put clauses if the borrower stops paying that they'll buy it back from you. And then you don't have to worry about having to go through the foreclosure process. You get paid, they go out and sell it to somebody else because they're in the development space, stuff like that. So something to think about for you, ladies and gentlemen. But that's what I wanted to go through with you today. We're just talking about how to make 6 figures as a note investor, show you a way to do it, show you it's not rocket science, okay? Everybody can do this if you just will market. And that means talking to IRA investors, getting out and networking, finding people. Because if you find a deal that's going to pay 20%, hey, put somebody into it at 12% for a couple years. That's the thing to do, or a year, and see what happens. It comes in from talking with people. The more you talk with people, the better off you're going to be in getting better interest rates. When I first left banking years ago, I approached a lot of my clients there that had CDs making 1, 2, 3, 4%, and started talking about making 12%, and they got scared. Like, oh, that seems risky, really risky in the stock. I'm happy making my 4%. That was a big learning factor as I came across the top, and they sounded like they weren't educated in real estate. They weren't educated in note investing. And they none of them wanted investment because they thought it was all 12% was too high, too risky, and go from there. So you guys, that's why talking with other note investors or talking with other IRA investors, going out and networking, going to your real estate clubs, networking, whether it's online or posting, things like that. Look, your success is all at your fingertips. It's up to you to dive into those deals and go make some stuff happen. Otherwise, if you don't take action, Nothing's going to change. You're just going to be disappointed. So get off your ass, get off your keister, go out and take some action, and hopefully we'll see the top. Thank you for listening. Thank you for joining in. Thank you for the comments and questions, guys. I highly encourage you. Come on out to Austin in 2 weeks here, the February 14th, 15th, and 16th. We have our 3-day workshop live in person here. We don't do these very often. We may do a second one this year back in next August, but come on out Valentine's Day and we'll show you how to fall in love with note investing. Go to notebuyingfordummies.com, get signed up. There's still a discount code. Get signed up today before it goes away. Otherwise, good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Close Show. As always, Scott Carson, excited to be here today. Today, we have a double follow-up, okay? You guys ask me all the time about the case studies. We're going through the case studies. Well, we've got one of the case studies here that we profiled. I think it was about 6 months ago here in the local Austin market, actually Round Rock, Texas. I went through a case study, talked about some of the different options as the bar was older and there's a ton of equity to buy these notes. And we've also had one of our coaching students on before when he wrapped up his one-on-one coaching. He's done a great job, a really, really phenomenal job. Really proud of what he's accomplished and what he's going to continue to accomplish as some stuff is closed. So we've got our buddy from north of the border, Mr. Cal Ewing, join us today on the podcast to share a deal that he outbid me on and won it and bought it, worked with it. And I don't want to share any thunder about the story, but it's a really, really great story of a true win-win in this situation. And Cal's been a real estate investor for years, done wholesaling, tax overages, stuff, a variety of stuff, but he's been a note investor. And I don't want to take any of his thunder because I'm so proud of what Cal's doing. So Cal, what's going on, buddy? Glad to have you back again.
Hey, Scott. Good to be back. How are you?
I'm doing good, man. I like your tan. You've got the baseball coach's tan of, kind of like me. We're ghostly white on the forehead and a tan from the eyes down, right?
It's the first time I haven't had my ball cap on in weeks.
You're enjoying letting the air get to your hair, huh?
Yeah.
Well, talking about home runs, let's talk about this deal that you just recently closed on recently. And for those that haven't listened to the podcast previously of us talking about this, this is, and first of all, thank you again for that great testimonial that you sent me. I appreciate it greatly. It's always good. But this is your biggest deal you've ever closed. Is that correct?
Yes, by quite a bit. This is the biggest deal out of any real estate transaction I've done since 2009. So
basically, wow, 16 years, and it's is it the first six-figure deal?
Yep, first six-figure deal.
That's good. So if you're listening, yeah, it's really, now it's not the first six-figure deal any of our students have closed. We see this happen pretty often with different things, and we've obviously had plenty of six-figure deals, stuff like that go through. But we're really, really proud of when you see somebody who's doing a good job, who's coachable and taking action, making offers, and working through things, continuously asking for updates on deals and to see how he's doing and pricing the market, stuff like that. We're just really proud. So your first big deal, I was your wife pretty happy, I would imagine, like pretty excited about it?
Yeah, absolutely. We're all just totally pumped about it. The note deals I've done in the past have been some smaller ones or more performing notes where, little chunks of cash flow coming in every month, which is great. But this is the first big non-performing deal that's basically a proof of concept for me of what can happen with a foreclosure or a deed in lieu. So I've had some non-performing stuff that I've bought in the past where we got the borrower paying again. But this is the first one that I've done where we ended up negotiating a deed in lieu and kind of proving that concept and going through that, which is really exciting. And this is even bigger than any of the flips I've done in the past, remodels and stuff like that too. So
yeah, and start to finish on this deal, when you finally closed on, when you wired the money to buy the note to getting the check at the title company, the wire from the title company, what was that time length like for you?
So we bought the note, I think, in September of 2024. So it was about 8 months from start to finish on this deal.
Very nice. And like you said, you have bought notes where you were targeting for cash flow. You were shooting 16 to 20% cash flows because then you'd be paying your investor, a good return, 8 to 10% underneath, and you're making cash flow and paying bills that way, kind of funding your note business along the way, right?
Correct. Yeah.
And your background, previously, you said some fix and flips or wholesaling. What's kind of been that background for you?
you're learning?
Yeah. So I first got started, did some flips right in 2009 in Vegas and in Phoenix, and did some. This is when, the market had crashed and there was tons and tons of foreclosures to be had. And so we did some basic fix and flips, and we held a couple for rentals, and then got into the Houston market and did some flips and that kind of thing as well. But I found it really hard to do from afar, from up here in Canada. So I ended up moving more into the wholesaling space, which was nice. But as you know, with wholesaling, typically you're making 5, 10, 15, 20 on a deal. So nothing big like this. So this is really good. And with your help being my boots on the ground, which was lucky that it was in your backyard, made it really easy to do from up here in Canada.
What was your biggest headache when you're rehabbing properties in other areas like Houston? Was it just finding good quality work, or uh, contractors, or pricing? What was the big headaches for you?
Yeah, contractors for sure. I had some contractors that stole from me, even though I had boots on the ground type guys watching over, but we said plumbers stealing things and not showing up. I had a contractor that really messed up a big deal of mine, and we had to really scramble to pull it through and get it sold. So just to me, it wasn't worth the headache. And that's why I eventually got into notes and kind of left that construction side behind.
Mm-hmm. Exactly. All right, let's dive into the nuts and bolts of this
Sure.
deal here. Now, it's located in Round Rock. We won't give away the address, but if you want to, I can post a video in the notes of a link so that people can see the exterior of the property. But it's a nice looking property. I mean, I saw it. I was like,
Yeah.
oh, this is not bad. Let's go through the numbers on the deal.
Sure, I got them here.
Okay, good. Now was it a four bedroom? I'm trying to remember. Three upstairs, four bedroom house, right? Four bedroom,
Yeah.
five bath, or four bath, something like that.
Yeah.
And what was the situation? Obviously, it was non-performing, but let's talk a little about the bar a little bit.
Yeah. So I think she was a widow as of 2016, and some stuff happened with her health. And I think she ended up going away for a while in a home of some kind. And then I don't know if she just got into some difficulties, but her mortgage hadn't gotten paid. And so she was about 15 months behind. The lender that owned this note prior, they had paid all the property taxes for a couple of years to get them current again. So she was behind on that. So all in all, the legal loan balance that she owed on this mortgage was 233,000.
233. And then when we were looking at numbers, what did you think the values were on your conservative, like BPO fair market value side?
My BPO came somewhere between 430 and 480, and we ended up selling it for 450.
Yeah, pretty good. So there's about 200 grand in equity there.
Yeah.
And a lot of people think, well, okay, so this leaves behind. She's lived in a house, as a widower for 10 years, because you're still currently living in it when we got involved with you there. And you offered a variety of reasons. Now, before we get into the exit strategies offered, what'd you offer for the note?
We ended up paying 147 on a $233,000 note.
Wow. So you bought it at 147, which is about $5,000 more than I offered at 142, if I remember correctly.
Could be something like that.
And you bought this from a hedge fund, a bank. Who was we won't give away names and who the fund was, so we don't want to, take away, add more competition.
I believe it was a hedge fund.
It was a hedge fund. Yeah, exactly. Yeah. And it was off of a list that they had available for sale or something like that, or a one-off, or how?
Yeah, it was a large tape of notes. I think if I remember correctly, it was a mix of performing and non-performing. And so I bid on a couple assets on there. I think maybe 7 or 8. And then this is the one that my bid was accepted on. So
now 147 on a 230 balance. That's pretty good. That's right at, was it 70 cents on the dollar for non-performing?
Yeah.
Right.
Yeah.
And here in Texas, had they started the foreclosure process?
63 cents on the dollar, actually.
63 cents. Yeah, exactly. So it's better than 70.
Mm-hmm.
I don't, and the thing that I kind of crack up is these hedge fund guys are supposed to be note investors as well, right?
Yeah.
Why they didn't do the foreclosure and make, $70,000 in profit boggles the mind a little bit, right?
Yeah, like the foreclosure process had barely started when I ended up buying the note. So they hadn't gotten very far on it. So we had time to work with the borrower and try to figure out what was best for her.
But that's the thing. Here in Texas, it's the fastest foreclosure process in the country, 21 days. I mean,
It's not a judicial process filed with the courts. Basically, you go and file at the Williamson County, but because somebody went to the Williamson County clerk for you a couple times and filed some stuff. And I'm literally took a picture and sent it to you where I'm standing in front of basically the foreclosure default list, right? There's a bulletin board in Williamson County. As long as you go in and file that you're 21 days prior to the first Tuesday, you can foreclose the first Tuesday of the month. And that was always, I was just like, wow, they accepted that. That's freaking awesome. Yeah, close on this. So how did you at 147? So how did you fund the deal?
So I had a private investor that I'd been talking with for a few months. Amazing lady. She's also a newer note investor. So she'd been looking at investing in notes herself, and we had connected and had some conversations. And so I think she had some deals she'd done that were smaller, but she wanted to get involved in a deal with me because I had the experience to take down a bigger deal. And so she liked the idea of being part of it with a nice return, but not having to do all of the day-to-days on the deal. So it was a win-win in that case because she got to get her feet wet a little bit more in the note space without, being on the front line.
Now, what state does she live in?
She's in Utah.
She's in Utah. Okay, great.
Yeah.
And how did she fund it? It was just retirement savings. How did she fund it?
I actually don't. It wasn't a retirement savings account.
Okay.
It was her own capital.
Okay,
Yeah.
it was cash. Okay. And so did you have her fund just the 147 or did you fund something extra? Or how much did you end up having her fund?
Yeah, so we did it in two parts because I didn't know how this deal was going to end up. So she funded the purchase, the 147 plus a little bit for due diligence and that kind of thing. So we did that first, and then it was an interest-only private loan, and we had her name on the assignment of mortgage along with my company, so that way she was secured. And then once we actually negotiated the deed in lieu of foreclosure and took ownership,
let's go back to the let's not I don't want to put the cart before the horse because this is important. So you're talking to Miss Utah and telling her, hey, I got this deal. It could go A, B, or C. And you talk her through all the different strategies that would happen with it, or what was the thing?
So when we looked at the deal, because she had quite a bit of equity, we thought that perhaps maybe she could just sell the house and then pay off this loan. Because as we pointed out, she owed 233 on a 147 purchase. So if she would have just sold the house and paid it off, I'd have been happy with that. So I told her that might be an option. We may have to foreclose. Maybe we could do a deed in lieu of foreclosure. Or the other thing was because she was older, she was around 70 or a little bit older, she could potentially qualify for a reverse mortgage. And this is something you helped me with, Scott, because we don't have them. At least I don't think we do in Canada. I don't know. I don't know a lot about it. So you pointed out that she might be able to qualify for a reverse mortgage. And so then we could be refinanced out in that case.
And she not have any payments, and she has that equity. They could probably give her some money, right?
So, right. And then she could keep that coming in, help her with her living expenses and keep the house. Mm-hmm. So I told my private lender that this is, all the scenarios in front of us. We're probably not going to work with her to get it performing again. It's not really what we want to do. So she knew it was a shorter term deal. And so she got on board with that. And then we approached the borrower with those same options.
And did she, I know that she wanted to try to modify the loan initially, and you're like, no, we're not going to accept that because it's just not going to get a good deal for you or your investor at that point, right? No. And she didn't really have all the money to come to the table to reinstate the loan too, correct?
Correct. And she wasn't super motivated to stay because we told her about selling, refinancing, and she said that she just didn't really want to mess with any of that. I don't think she wanted people walking through the house if she were to list it, have the real estate agent and all of the showings. And she didn't want to deal with refinancing and talking to lenders. And so she basically told me that she wanted to downsize and find a place that she could afford that was smaller. And so that's how we came to the idea of a deed in lieu of foreclosure.
Yeah. Now her family didn't live around her. That's the thing too. Right. I went out and visited with her and helped her, sign some documents on the deed in lieu. And we visited with her a couple times, just a sweet lady, very nice. But yeah, it was a lot of house for this lady. I don't think the upstairs had been walked in a while. And the house was in pretty good condition. I mean, obviously carpet needed to be done, paint, some just general upkeep. One of the fences outside had been fixed by the next door neighbor. You could tell there'd been some water
from like maybe the hose coming off the washer machine. Nothing that was anything difficult stuff like that. But yeah, she told me the same thing. Like, I don't want my family dealing with this. I just want to move into some place like an apartment, assisted living facility where I can enjoy my final few years and stuff like that, right?
Right. Yeah.
And you were very specific in the documents. We talked about this before her signing the deed in lieu, like, hey, going through and making sure she signed off and acknowledged all of these things so that you weren't like, you never wanted it to come back where somebody would accuse you of taking advantage of somebody, right?
Correct. Yeah. Yeah.
And
So
how,
we
sorry, go ahead.
yeah, we presented her with just a basic agreement that outlined everything that she would be getting. So we ended up coming up with a cash for keys for her. So she got I guess, sort of like an earnest money deposit up front. And then once she was able to move out, it took her about 2 months to find a place and get organized. And then we gave her the rest of the money. And so she signed an agreement. And then we had the actual deed in lieu of foreclosure document that was signed, which basically deeded the property to us as the lender. And then we forgave her mortgage or her deed of trust. So that was released. So it was off her credit and everything. That debt was forgiven, and she could move on.
Now, how did you come up with the deed in lieu? How was the attorney? Because I think you had ran into a hiccup or two with a local attorney too, didn't you?
Yeah, on that one, it wasn't too hard. I basically I chat GPT'd it just to see an idea of what it would look like.
Yeah.
And then I sent it into them, and I'm like, obviously you're not going to use this, but this is kind of like how I want to present it. And then they tweaked it and made it correct for the state of Texas and got it worded as it should be. So we got it figured out.
Yeah, a couple back and forth, and I was like, wait, we got to change some of the stuff up a little bit. It's not worded properly.
Yeah.
The attorney, I'm not an attorney nor play one. You should always consult an attorney or an expert, stuff like this. We're not here giving you legal advice. But how did the negotiations on the and before you tell anybody on the deed in lieu, as far as the cash for keys aspect of that, did she want a huge, like, all the equity, or where did you kind of come to the negotiation process of how much money to give her?
Yeah, I just looked at, so because the BPO for the house came in at 450 or around there. And then I looked at what she owed on the house on the mortgage already. And then from there, there was a judgment registered against the property as well for like 4,000 or 5,000. So I came up with what I thought was a fair offer based on the amount she already owed me and then some extra cash. And so we ended up giving her about 75,000 in walkaway money. And yeah, I just wanted to be fair so that she could get some of her equity out of it since she didn't want to sell and have money that she could use to move and get her feet, on a new path, basically. And so she agreed to it. She didn't have any trouble with my offer at all. We didn't really go back and forth at all. She was happy with the offer of 75,000.
Now, one thing, if you're out there thinking, well, she had 200, you're taking advantage. You think about this, ladies and gentlemen, in Texas, fastest foreclosure, if this property went to foreclosure, there's no guarantee she would have gotten anything above the 230, right, Cal?
Correct. Yeah.
And you still had to the 430 isn't in good condition. There's still some repairs that need to be made on the property,
Yeah.
I mean,
we ended up putting a new roof on it as well. So there was more than we actually expected. We ended up putting in, once we owned the property, we put in about 53,000 total to get it in sale condition.
And that 53 includes the brand new roof, right?
Yep.
You painted the interior, new paint, new carpet, yep. And there was some water leaks that we had to fix in the sheetrock and stuff like that, and then some little other
plumbing,
things.
new toilets and sinks and stuff like that.
Yeah, exactly.
Deep clean appliances.
Yeah, very, very deep clean. Very deep clean.
I don't know. It's easy for me. It didn't seem that big of a deal, Scott. I don't know. Did you guys know how good Scott is at cleaning sinks and tubs and
No. I didn't.
He's amazing.
I did not clean a single sink or tub. I did put on a couple toilet seats for you. And it was funny. I got my buddy Boyd, the realtor here locally. He became your realtor for that deal and helped got it done too. Did a good job. It was kind of funny.
Yeah, he did great.
Yeah, good guy. We got him doing another one here for us too locally. Known him for about 20 years. But yeah, I did do that. We actually had a cleaning company come in that I was very upset with. They didn't do a very good job cleaning, and argued with them, and got part of that fee reversed. And then we ended up going in and doing some cleaning. Steph did a better job on an afternoon. to help out with you there. But that's the thing, was like, we know you're remote. Let's help you save some money. And I think we probably saved you, I don't know, 10 to 20 grand in costs by helping out on it in a lot of
Probably.
cases. Yeah.
And the stress, like having you there was so helpful. I wasn't worried because I knew you had my best interests at heart and you could take care
Yeah.
of
Yeah,
what I couldn't
exactly.
see.
Yeah, I
So
mean,
I
like,
really appreciate
simple,
that.
like the AC. We called our local AC guy who came out there and, got it done for a couple $100 versus a couple $1,000. You know what I mean? When the water leak happened, when the fridge was still hooked up to the water, got taken off and turned off. There was a water drip overnight, and so the brand new carpet in one of the live in the dining room was completely sloshed. So I came over and helped clean that up for an afternoon for you. And then making sure that the painters went back and finished a couple spots that they missed.
Yeah.
I don't do that
That
for
that kind of
everybody.
thing. If I wasn't there, I mean, it would have just been unnoticed, right? Until we had a buyer potentially look at it. So
Yeah,
yeah.
exactly. And when we had, like, we even had a plumber come over and say, quote, like, $1,100 to put a disposal, and I just, like, or $800 for disposal, and I was like, what? No. So I put the disposal in because I've twisted it in a couple times, for $250 to get it in, and about 30 minutes of choice cussing to help out that, and then finding good appliances, making sure those got installed. I mean, there's a lot of
Yeah.
expenses that go into flipping a house, and if you're remote, yeah, it adds up because you're paying for
Yeah.
services versus somebody there as local for you. So I didn't mind doing that, helping out my good friend there and stuff. We enjoyed it as well. A little pride of you know um, osmosis ownership, as we like to say for our buddy there.
Yeah.
The now, so you gave her a grand to sign the documents, and then
Yeah.
74 when she moved out. And
Yeah.
then it was about what, 30, it wasn't long, about 30 days once the rehab crew went in. The painting crew was the first crew to go in to kind of get it on the market, right?
Yeah, I think about 30 days once we had, because the new buyer, they had an inspection and that's when they decided that the roof needed to be replaced. So we weren't planning on that. So
Right.
I guess that added a week or so onto it. But yeah, like in a month we had it ready for sale. And then once it was listed, it was only a couple of weeks before we had a buyer. So it wasn't on
I,
the
I
market long either.
I think it was like 8 days it was on the market, if I
Yeah.
remember correctly,
Yeah, I guess you're right. Yeah.
because it
Yeah, it
went
was
on the
really fast.
Friday, and then by the following weekend, you had 3 or 4 people walked it, and then somebody put an offer on it for you.
Yeah.
And you priced it
Yep.
to move too. That's the great thing. You priced it a
Yes.
little bit below value so that it could get moving. You probably could have got more for it, but it was probably taking longer in the market, and that difference in profit would probably washed out for you, right?
Exactly. Yeah.
So when you called your investor, now how did you fund the rehab? You said your investor funded the note purchase, and then what did
Hmm.
you have them do? How did you come up with that extra money for the cash for keys, and then the 50 grand for rehab?
Yeah. So once we had the note and we knew what we were going to be doing, I had approached her saying, I'd like to borrow more if you're available to invest more in this deal. I'll give you first shot at it. And I said, if not, we'll find other ways to finance it, or maybe get a hard money loan and just pay her out. So I knew I had a few options there, and she said, no, I'm happy to increase the loan amount and do another loan. So we had a new promissory note and everything, new funding agreement to cover the cost of the cash for keys and the rehab and the holding costs and everything. Yeah.
Because now, once you accepted that deed in lieu, it was no longer a note. It's now an REO. You own the property, right? And,
Correct.
and so
That's a good point.
she had a first lien trust deed then, basically, at that point, right?
Yes. As soon as we took ownership of the property, we put a deed of trust in her name as a first lien mortgage and then a second lien mortgage for the extra amount we borrowed. So she was secured to title or on title as a mortgage lender. Yeah.
Now, in the deed in lieu, when you have that record, I don't remember. Did that just went into your property name at the time, with the lien then being attached
Yes.
afterwards, right?
Yeah. Yeah. So my company owned it, and then she was just the lender, had the loan against it. Yeah.
Awesome, awesome.
Yeah.
And then these are new homeowners. What they want, FHA, something like that, right?
FHA. Yeah.
Yeah,
Yeah.
yeah. And like you said, you had to put a new roof on. But I liked what you did with the roof too. Boyd had a contractor that was willing. Because let's talk about this, because I think this was an interesting aspect. That you put forced place insurance on the property, right, in case of anything happening,
Correct.
right?
Yes. Yeah.
And you put the amount that you were basically borrowing. Is that right, roughly?
Hmm. Yeah.
And what happened? Did you end up filing a claim, or when you came to the
Yeah,
insurance company? Let's talk about that because I think that's
so,
important for folks to understand.
sure. So when we found out that we had to replace the roof, I can't remember if it was you or the realtor had said that there was some hail damage. First of all, there's hail damage on the roof, and that there had been some recent storms, like within the last couple of months. So that property may have been affected by those recent storms. And so we contacted a roofer, and he had the storm maps, or however, I don't know how they really track it, but you can track which houses were hit by various hailstorms. And that house was in the area that would have gotten hit. And so I filed a claim. And unfortunately, I guess the policy that I had set up, basically the amount I would have had to pay was the exact amount that the quote for the new roof. So they would have been able to give me like $500 to cover that cost. So we didn't go through insurance at all. So that's something I guess I maybe messed up on or didn't quite understand, that next time I'll be watching out for is like making sure I have that coverage.
So basically, yeah, they want to charge you your deductible for the insurance claim would have been 17 grand, which is the
It was
cost.
17 grand, and that was basically how much the roof cost to fix.
Yeah.
So that
So
was
you
great.
just, but the roofer though, you were able to put it on where you didn't have to pay that 17 grand. It came out of closing docs, right?
Correct. Yeah, he got paid out of closing, which was excellent.
Now, did he offer that up, or how did that come about? Because that's not something everybody thinks about too.
Yeah, so the roofer was a friend of Boyd's, I believe, right? The
Yep.
realtors. And so I guess because of the friendship, he was willing to do that. He trusted Boyd to make sure that he'd get paid at closing. So that was convenient because I didn't want to have to borrow more or come out of pocket for that cost. So it worked out really good that way.
Well, I think it's
Yeah.
nice that you got a solid offering, and it's got an offering, it's on the market, and you can see the kind of condition. I think that adds to it as well
Yeah.
too,
Yeah.
which is
Oh,
great.
a couple other things your viewers might be interested in. So when we did our due diligence and title search on this one, there were some massive IRS liens in her name and her husband's name. And so, some people that maybe aren't as experienced with title searches, they may have looked at that and ran away because it was like $100,000 or something crazy in IRS liens. But the expiry date had passed on a couple of years ago on most of it, and then there's still 20 grand that just expired like a year ago. So I knew that that wasn't something I would need to worry about paying off if we did a deed in lieu. And so those got wiped out, which was great. And then there was a small judgment. We were trying to find that creditor, and we're actually still working with them to have that released off of the property because it was a homestead property. So I'm thinking that all of that will be wiped away. I won't have to pay off that judgment, but the title company is still holding a little bit back in order to pay that judgment if we have to. So
And that brings me to things. So the bank was willing to go ahead and fund, the lender was willing to fund on the purchase and everything and close with this lien still outstanding, but money held back in escrow for you
we
in
held the
case it
money
needs.
back in escrow.
Yeah.
Yeah. Yeah.
Yeah. But that's a beautiful thing. I mean, like, oh, we got this stuff. Here's the money. And of course, if it gets released, then you get a little bit more profit. Otherwise, it stays.
Yeah.
If it doesn't happen, did the title company give you a time limit? Is it like 90 days from closing, or do they know anything more about that?
No, they didn't give me a time limit, but we finally got in contact with the creditor, and they were going to hopefully process it and excuse it basically off the title of our property. So that's great. We don't even have to pay it probably. I'm hoping still.
There you
So
go. That's awesome, buddy.
yeah,
Good stuff. Good
yeah,
stuff. Um, and like I said, it's a win for you. Nice profit margin. It's a win for the borrower. They were able to get out of a bad situation, too much house, put some cash in
yeah.
their pocket when they would have probably lost it completely. Maybe made a little bit at the time if it did go to foreclosure. You know what I mean? And your investors are they pretty happy in Utah?
Yeah, I think she was really happy. It worked out well. She said that she'd like to do some more later down the road. So that was great.
Have you gotten a testimonial video from her about investing with you?
Not yet. That's coming though, for
There
sure.
you go. There. So, yeah, has your focus changed anything with the note business? I know that you've done some things. You're still working part time sometimes, as you need to and stuff like that, and you up there in where you're located. But how's your mindset changed a little bit? Has this deal helped you with a little more confidence, stuff like that?
On the non-performing side, definitely. I got into notes wanting the cash flow, and the performing side I find is pretty straightforward. But I still like when I got into these deals, I've got a couple non-performers now on the go, when you're trying something new, you're always a little bit nervous. And I feel like my background in US real estate, I feel pretty confident about it all, but I've never completed something like a deed in lieu. So you never know. So now I feel a lot more confident going that route and what to expect, what to look for, how to work with the borrower. And yeah, I'm excited about non-performing notes, maybe a little bit more than I was.
Now you're working, you have another non-performer down in Laredo. I think you were working on one down there. Is that right? Or no? What happened with that one?
Yeah, not too far from there. Well, actually near the border, Hidalgo County. There's a non-performer there, and I've got another one in Pennsylvania actually that's going to be next week foreclosing. So
Good stuff. Good stuff,
yeah.
man. I won't ask that. I can ask that off camera. That's gonna be kind of funny. um, your what's your goals for the second half of 2025?
Well, I'd like to acquire some more performers, get my cash flow going a little bit more. My goals with that is to be able to drop my oil and gas job eventually, just having enough passive income coming in from performing notes. And then I do have some private lenders that are wanting to get in on some deals that more on this side, the non-performing side. So I am looking to acquire a couple more non-performing notes here before the end of the year for sure.
Awesome. And I noticed you did your own video about this case study. Did you get some good positive feedback from other folks in your network and marketing and stuff like that?
Yes. Yeah. If you are out there and you're looking to raise capital, these kind of case studies on any deals you've done in the past really help. I've been able to connect with some people I didn't even know before, just because they were in Austin and they saw the video. So I got some new friends and contacts in the business. So I'm looking forward to maybe working with them someday. Yeah.
Oh yeah. Yeah. It's a good area in a lot of cases there for you. So, any advice to those that are sitting on the sideline, waiting to dive in at the right time or waiting for the perfect deal? Cal, I mean, you've been a note investor, what, for over 2 years now, roughly?
I think 3 now.
3 years. Yeah. Okay.
Yeah. Yeah. In my experience, mentorship is huge. So every strategy that I've done, I've worked with some kind of mentor. So having you as my mentor for notes has been crucial because there's a lot of questions. As you know, we've had many conversations over Zoom and phone calls, and it's a little different than your typical real estate investment deal. And so I think having a good mentor like you, Scott, and having the coaching where I went down with you for a couple of days really helped me get it clear in my mind. And you're also pretty good at keeping me accountable. You don't really put up with my excuses, which is nice. So,
well,
yeah, so I just think,
yeah. I'll let you go ahead. Let you go ahead and finish.
Yeah, so that's one thing is like just get a mentor, even if it's just a friend that you buy them lunch or a beer or something. That helps, and then just taking action, figuring out like what are those steps that you can fearlessly take, and the sooner you take them, the better. The more you just wait around and make excuses for yourself, it's just not going to happen. And I amaze I'm not tooting my own horn, but I amaze myself that how quickly some of these results come when I get started on a strategy like this, and it seems like, oh, it's so far away. Like I can't find any deals or can't find the money. And it just seems like so far in the distance. But if you take action daily and weekly, suddenly you have a deal like this that lands in your lap and it's like, oh, here it is. Okay. And then, a few months later, you've completed it and you're moving on to the next one. And it's like, okay, so this isn't so bad. It's not so scary. And I just got to keep doing this. And it's not just some fictional thing that'll never come for me that, you just got to take the action steps and do it.
Now, you don't have a lot of bad excuses. I'm gonna tell you that right now. You're a guy, and you reach out to me, and we go through spreadsheets and your offers, and does this make sense? Yeah, it makes sense. Yeah, and I do. The only call I remember where you were kind of like bullshitting was the one when you called me nervous about the deal, like you're about to close on the purchase of this note, and you wanted somebody to tell you again that this was a good deal, that you were nervous about it, right? And I just said, listen, it's three things. If you buy the note and it just goes to foreclosure in 60 days or less, that's a good ROI to you and your investor, right?
Yep.
Right. 60 grand in 60 days is never a bad deal, right? Second, if you can get some cash for keys from the borrower, great. You have a chance to make more money on the deal and sell it as an REO, right? Or third thing, which is really number two, before the foreclosure, if she refinances, it's still a good deal, 60K if it takes 90 days for refi. It was truly a win-win-win across the board. It was nice that you were able to talk with the borrower. And you didn't talk to her until you bought the note. right?
Right. Yep.
And we went through them and, how should those phone calls be? I think we had a couple phone calls back and forth about
Yeah.
conversations, because you're a nice guy. Cal is a nice guy, ladies and gentlemen. And he was like, she wants to modify. And I'm like, Cal, you run a business, you don't run a charity on this. And,
Yeah.
give her some money, give her some of her equity, not $5,000, but give her a good chunk and make it a win-win there for you. And she liked that idea, and that's how it panned out.
Yeah. Yeah. It went really smoothly. We didn't really have any hiccups as far as she was concerned. And I was happy that she was happy at the end of the day.
Yeah. Yeah. And
Yeah.
she was actually, the title company needed her to sign something too, correct? At the end, and
Yeah.
she was willing to show up to sign that and everything.
Yeah. We had to send a notary twice to get some stuff taken care of afterwards, and she was willing to sign it. So that's always the scary part. It's like, please, like, you've got your money now, but please help me just do this one extra signing, and then we're good.
Yeah. Yeah, exactly. And then did she have any family involved in the thing, or sister or daughter, stuff like that?
Yeah, she had a daughter and a sister or a friend or an aunt or something that I talked to, that helped out quite a bit as well. So
Yeah,
it's
that's
nice
good.
when you're dealing with elderly folks. It's nice having some younger family members, just so you know that they're understanding what's happening and that they have someone that's also agreeing with what's going on. So that was nice that she was involved.
Yeah, and one thing I can give you guys out there too, when we went by, Steph's a notary, so I took Steph with me as my notary when we went over there initially to have her sign the deed in lieu. I went the first time after reading it, and I'm like, we're just going to leave this with you. We want to leave this with you, because she wasn't really active in email too. She liked the
Right.
in-person stuff. And I was just visiting her. I read through all three of the documents with her step by step. I said, we're just going to leave it with you. We're not going to sign anything. I'll come back on Monday or Tuesday. There was a couple of things I wanted you to tweak. And
Yep.
she was very appreciative of that. I know that. You also had Boyd. Boyd helped her find a spot too, assist her and find a spot as well, if I remember
Yeah,
correctly.
he helped her find a place to rent. Yeah.
Yeah. I don't think he did himself. I think he had a referral agent to help them out with it, but
Yeah.
she was very appreciative of that. So that's the thing. Help those folks like that. They're in a bad situation. It can be a really nightmare. And I know some people would have tried to squeeze this for every dollar you could have gotten out of this thing. Could you made a little bit more? Yeah, but you made enough. You know what I
Yeah.
mean? And
Yeah.
that's the great, and the value that was this is the well, I know it's the biggest profit, is the most expensive asset you've purchased so far.
No, there was one other one after Hurricane Harvey in Houston. It was a little bit more than this one, but probably the second
Very
biggest asset.
second biggest asset, but the biggest profit. And
Yep.
that's what we love. That's what we love about notes, right, buddy?
Mm-hmm. Absolutely.
Often the less the risk, the higher the returns. You know.
Yep.
Because you think about this, if a traditional art fix and flipper at 450, what's 450 times 70 cents in the dollar? You know what I mean? That's normally, if you think about, that's what they would have probably come in and paid. So 450, or let's say 425 because of the repairs times 0.7, they would have paid 300 grand for it. You got this deal done in under 300 grand,
Yeah.
and made it a
Or if you
win-win.
do 0.7 minus repairs, that's even
Yeah,
maybe
exactly. Or if
something.
and I didn't even deduct money costs of that thing too. So,
Yeah.
besides six figures, have you figured out your ROI in the deal? Annualized the ROI on this thing yet?
Yeah. So because we did it in 8 months, it was a 72% annualized return on investment. So that's pretty huge.
That's
Pretty good.
huge.
Huge.
72%. That's something to sneeze at. And then, and on your investor, did she get a flat interest rate return, flat return on investment, or what?
Yeah, so we did an interest only loan. And then the second loan that I borrowed from her for the rehab and the cash for keys, because it was going to be a short period of time, I actually told her that I would pay 6 months of interest regardless of how quickly we did it. And so when you factor all that in the time, she ended up getting a 12.7% interest rate.
She's pretty happy on that. And that's a nice thing too.
Happy,
When
yeah.
you have some of the shorter deals, if there's room enough there to do a prepayment penalty, we like to say it, or minimum interest amount,
Yeah.
that's a nice kicker for folks looking for a decent return on stuff like that for you. So,
Yeah, no one really wants to go the hassle of lending money for a month and getting 1 month of interest back. Yeah.
yeah, exactly. I mean, it's still a decent return, but you want to see something the time worth of it. You want to see a little bit higher yield, which is good for her.
Yeah,
Awesome.
and I find you want those investors to come back and lend again on a deal. So if you have the room in the deal to make it really good for them, they're going to come back over and over again. So
exactly. So
yeah,
time to go shopping for some more notes, huh?
Yeah, let's do it. Time to make some more offers. I made some offers today, so we'll see.
Well, good stuff. I might have a couple deals to shoot your way as well for you.
Awesome.
So, all right. Well, Cal, we are so proud of you, man. What's the best way for our listeners and audience to connect with you, to see what you're up to and keep track of your deals?
Sure. You can go to calewing.com. That's EWING. Or you can go to talkwithcalewing.com if you want to book a call with me, and we can have a Zoom or phone call and talk about notes and real estate.
Sounds good, buddy. Keep up the great work, man. We're very proud of you.
Well, I sure appreciate all your help on this deal, Scott. You made it so smooth, and having you there scrubbing those fridges out and doing the plumbing and getting on that roof for me, man.
That's not me. I am not a handyman. But I've rehabbed plenty of houses and didn't mind helping out. It was easier for me to do it and make sure that your costs and budget were being watched like a hawk as well for you. So, and doing the little things like the flowers in the front yard, stuff like that, and making sure that those mammoth shrubs were trimmed. I've never seen bigger shrubs on a house. You know what I mean?
Yeah.
Good stuff. All right, buddy. Good stuff, man.
Thanks to Steph as well. Appreciate her help as well in this deal.
She sends her love. Yeah, definitely. Good stuff out there. All right, guys and gals, if you are interested in doing note deals, not every deal is going to be a six-figure deal. I tell you that right now, but it's always nice when you can see a home run hit. Like Cal mentioned, he liked doing singles and doubles and getting some good performing stuff for cash flow, stuff like that. And that's a smart way. Cover your expenses along the way, and then build some confidence, create you some private funding sources. And then when something comes along, hey, he figured 2-3 different ways to get creative to make sure that the deal happened, either A, B, or C. And either way, whichever way this would have gone, still was going to be a profitable and a good day for him and a good day for his investor. And most of them would have been a good day for his bar, except for the foreclosure. But he made this a win-win, turned lemons for one person and lemonade for everybody else out there. So go out, take some action. If you'd like to learn how to do this kind of stuff, feel free to reach out to me as well at talkwithscottcarson.com. But go out, and we'll see you all at the top, everybody. Bye.
Hey, note investors. So you want to dive into the world of note investing, but know how to get started, or you don't want to pay $30,000, $40,000, $50,000 for a one-on-one coaching program that just completely does not deliver the deals or the funding or the access that you need to take your note business to the next level. That's why we have our one-on-one coaching program. I'm Scott Carson. I've been buying notes for 20 years. I've helped thousands of investors buy their first note direct from banks using either their own funds or other people's money to buy non-performing, reperforming, or performing notes, yielding them an above-average return. Now, what's involved with my one-on-one coaching program? It's unlike anybody else's, because guess what? You're working with yours truly, not some paid student, not looking at some recycled list of stuff. Now, what we do is differently than anybody else out there, and that's why we have such a huge success rate with our one-on-one coaching program. What's involved? Well, once you take in our 3-day class, our Note Buying for Dummies workshop, sign up for our coaching. You get 10 weeks of one-on-one coaching calls. These are on Zoom in the morning, the afternoon, the evening. What works best around your work schedule? We accommodate this to help you start looking at stuff. And during those 10 weeks, we focus on finding deals, making offers, getting your website, your social media stuff set up so that you are a lean, mean note buying machine. After spending 10 weeks of Zoom calls with yours truly, that's right, live, not somebody else, we'll spend 2 days one-on-one. And usually people come to Austin, Texas to hang out with us on a Thursday, Friday, or Saturday, Sunday. And those 2 days are focused on whatever you are still lacking and need the most amount of work on. Sometimes it's making offers. Like Larry came in, we made 50 offers that he got 20 approved in a weekend. Other people came in to raise capital. So we helped them find IRA investors to fund their deals so they're able to raise hundreds of thousands, if not millions of dollars for their note deals and other investing stuff. We're also going to give you a list of asset manager contacts for you guys to dive into. That's right. This will be either LinkedIn profiles, emails, phone numbers, names, all for you to start reaching out to people. No, you don't need to buy notes directly from me. We're going to show you how to go to banks and contact them directly. We're also going to make introductions to our top 12 hedge fund managers that send us deals on a weekly or monthly basis. That's right. You go straight to the front of the line. And guess what? There's no 10, 20, or 30,000 upcharge for the deal. You buy direct from the hedge funds because we make the introduction. That's why, because why do we do this? Because we know, not we believe, we know there are more than enough deals to go around. And yes, we make most of our money from buying note deals for ourselves. Some people will say, oh, you're creating competition. No, because there's plenty to go around. All right. We're also going to give you a 1-year membership to our WCN membership for 1 year. That's $97 a month. Usually that's going to allow for you to continue support, weekly coaching calls, along with access to our base camp group for other things, other tapes, other resources for our coaching students. We're going to help you with raising private capital, putting your pitch deck together, putting sample deals together, or either case studies that we've done, other students have done, or that you're doing, so that you help raise capital or help you find IRA investors in your local market or the markets you're looking to buy in. You're going to also, basically, for you plus your partner, spouse, person you're going through this with, you're going to have VIP access to me. That's right. Whether you need to jump on a quick phone call, a text message, a quick Zoom call to go through tapes or notes that you're making offers on for us to review your bids, or to help answer a question when it comes to loss mitigation, foreclosure, bankruptcy, whatever it might be about a deal you're working through, get VIP access to me most of the time. Come on now, everybody. We're also going to do a 6-month follow-up day after you spent 2 days with me. 6 months later, if you want to, we can do a half day, a full day Zoom follow-up just to see where you're at, what are you dealing with, where you're looking to go. Because within 6 months, you should have already closed on several deals the way that we teach. It's because we will help you find your first deal and then some. We've had students who've closed on their first deal in 30 days. We've got others who've closed on 6 deals in their first 35 days. Other people have closed on 100 deals in their first year. We're here to help you because guess what, ladies and gentlemen? There is plenty of inventory out there. We're not going to focus on owner finance notes. We're going to focus on how to get people calling you with their deals, or how to get banks sending you lists on a regular basis that you can cherry pick and show you how to raise all the capital that you need. Our one-on-one coaching program is the most complete program out there. That's why you have such a high success rate. And it's cheaper than most of the others out there. And we also give you the biggest bang for the buck by helping you make the introductions, looking at the tapes, helping you bid if you are coachable. Now, not everybody's coachable. Not everybody can afford this, but what we can do is we can set up payment plans and different options for you. I encourage you to either book a phone call with me at talkwithscottcarson.com, and we can talk about it, see if you're a fit. Not everybody's a fit, and that's A-okay. But go to talkwithscottcarson.com, book a call on my schedule, and we'll gladly talk about our one-on-one note coaching program to see if you're a fit. One of the very requirements is we do require people to go through our 3-day class, but that whatever you've paid for that 3-day class is applied to the tuition for your one-on-one coaching. And we also have a third-party provider who's willing to finance this and carry financing for 2 to 3 years to help you pay it off. But we're going to work with you until you get your first deal closed. We want to help you make your money back in the first 6 months, if not sooner. So check us out. Pick up the phone. Give me a phone call. Talkwithscottcarson.com. That's talkwithscottcarson.com. Book a call, and let's see if you're fit to take your business next level. Sometimes all we need is just a hand up to take you to the next step, to show you the way. This is not a blow smoke up your tail, give you the crappy tapes left over, or upcharge you $10,000, $15,000, $20,000 per asset. No, we want you to buy direct, and we've always found if you can show a man how to fish, you'll feed him for a lifetime. So let's get started, you being a note investor for the rest of your investing lifetime.
So today's all about how the hell do you find big pools. I'm not talking about the one you go swimming in. I'm not talking about the ones that your kids pee in during the summer. I'm talking about the ones that you get that are spreadsheets, they're Excel tapes, and they've got hundreds of potential deals for you to take a look at. And today's a good day. I got one in just a few minutes ago with 274 notes. Out of that, 230 of them have equity. 41 of them have 0 to negative equity. Some are performing, some are non-performing. And when I get a tape in like this, I already kind of know my price point. Especially there's a lot of equity. I know I'm probably come in at 80% roughly the legal balance, and that's where I'm gonna start at. Well, I've got over a week. I actually have about 10 days to get bids in. Actually, more than that, I have 12 days to get bids in. And I'll probably get in, I don't know, 200 based off of, there is a chunk of this tape that has New York, but there's stuff in, well, quite a bit in Texas, quite a bit in Florida, God's waiting room, North Carolina, South Carolina, a couple in Georgia, a couple in Nevada, like some in California, one in Arizona that we're looking at. So it's actually a pretty good tape on some stuff. So I'm really excited about it. I know who the servicer is on it. They're a good servicing company, so maybe able to retain servicing with them. But I get excited about this because even though there's 274 of these, and I'm not going to offer on all of them, even if I offer like 100 on these, there's a second avenue to this. I mean, a lot of these are occupied. Some are in the foreclosure process, so they could be potential REO deals we take back, and so I don't mind paying a little bit more, or cash for keys. We're going to negotiate, some money to the seller, and they avoid a foreclosure, and we take the asset back. There are also potential subject to deals, and I could drop a letter or postcard campaign out to these borrowers who are now. Are they a lot going to respond? No. If I'm lucky to get a 10% response rate, probably 4% response rate is more accurate. But those are borrowers that will pop up and say, yes, please take over my loan. And I know then if I can take over their loan, then I can probably negotiate a deed in lieu on their behalf, or I can buy the note and get a deed in lieu from them to walk away. Or if it's a vacant property, work with them to avoid seeing a foreclosure, depending on obviously what's on title and stuff like that. But it's a great opportunity. And then I also, my weekly email to my different hedge funds. I got an email back today. I said, hey, what do you got? He's like, I don't have anything right now, but I will have over 300 loans for you to take a look at in 2 to 3 weeks. I'm like, that's what I like to hear. He goes, what states are you looking for? And I'll make sure and pencil you in so you're the first one to get the list. And that's a great feeling when you have an asset manager who's glad to carve out a list or send you a list first and foremost. I know I'm not going to be the only guy or gal taking a look at it, but be the first ones to have access to the list. That means I can get some bids in pretty fast based on these notes. And there's probably going to be a chunk of them that are reverse mortgages. Some might be some home equity loans and stuff like that were our first liens I can take advantage of. But it's the same thing for the ones that are occupied. It could potentially be subject to deals as well. And you know how much I paid to get this list? An email. And that's one of the great things that I love about the note business. If I were to try to find 274 or 574 leads, I'd have to send out. Let's figure that. Let's do some math. Let's just figure the 274, because that's what I have in hand today. If I take 274 and multiply, let's just say 4%. If I had direct mail rate, how many mailings would I have to mail to get a 4% response rate? I have 274 assets to look at, right? Times divide 274 divided by. Let me do it again. 274 divided by 0.04. I'd have to send out like 66,850 mail pieces at a 4% response rate to get 274 responses. If you figure, let's just say 50 cents on the dollar. Let's say you've got the postage is all you got to pay for, which I think postage is 55 cents. But now let's just make it $1. That's $6,800 for a mail piece, right? Well, I didn't pay that. I didn't pay that at all. I have internet. Yes, don't get me wrong. I have some marketing, I have some ongoing costs. What we pay for Infusionsoft or Keep, stuff like that. That gets expensive, but it pays for itself. But that's the thing that I love is I don't have a huge overhead to find deal flow like so many fix and flippers and so many rehabbers and people looking for subject to deals, stuff like that. Now, yes, if I send out mail piece, and what's great is these borrowers probably are not getting bombarded with mail pieces in a lot of them, because a lot of them probably aren't, the foreclosure hasn't been started, or it's been delayed, or it was a filed bankruptcy that's been delayed or discharged. Nobody's following back up. So that's the beautiful thing. And I had a student reach out to me. He's like, hey, Scott, I've got this much money and I want notes. What do you have? And I'm like, I've got stuff, but they first go to my coaching students. They first go to my one-on-one coaching students, and then second to my WC incredibles. Well, I've been a student of yours. Like, yeah, but you haven't been a student in a while, and you just took the class. You don't sign up for the special stuff, so I can't give you special access. If you'd like special access to these tapes, all you got to do is pay $97 a month and join our WC and crew membership. And this is not an ad for that. It's just that if you've taken my class, you've been through a 3-day workshop, I teach you to send email blasts. I tell you to follow up with servicing companies. I tell you to jump on LinkedIn. And that's the big thing between those that are looking for deals and those that have deals. The haves and the have-nots comes down to one thing, and one thing only, ladies and gentlemen: marketing. And be with the follow-up of marketing. Continue to follow up, to follow up, to follow up. Because I get this from all the time. I see it on TikTok, I see it on Instagram, I see it on Facebook, I see it at real estate clubs all across the country. I can't find deals. I can't find deals. There's no deals. And then everybody's like, oh, there's not going to be a crash. Well, there's not going to be the traditional crash you see, but we are seeing a crash. We're seeing increased defaults. We're seeing these tapes starting to come around. When you see a big tape get sold off from PacWest last month, or earlier this month or something like that, to ARS, to Ares, for $3.5 billion, where it was non-performing residential commercial loans and all sorts of debt instruments and stuff like that. Stuff is being sold, but it's being sold to private equity guys. It's being sold to Wall Street, or being sold to investors like me who can do something with that note before it ever becomes an REO, before it ever becomes a fix and flip, before it ever becomes a potential rental. And that's the thing you got to realize. The note business, ladies and gentlemen, it's marketing. You've got to think differently than the old way of doing business, of sending out a ton of mail pieces, killing the Amazon forest with stamps and letters and print and then lumpy mail and all that crap. Yellow letters, we want to buy your house. Please give us a phone call. You know, that kind of stuff. And I got so many friends that are doing that in the fix, and that's great. They've got their systems. They know they're giving up a right arm every first of the month from mail. I just didn't find that to be an effective way of working just one market, and I'm working a variety of markets. Yes, are these 274 all across the country? Yes, they're all across the country. They're not in all 50 states, but there's a chunk in states that I want to take a look at that I may not look at. Like I said, there's one in Arizona, which is kind of cool. I already got somebody who's going to go buy that next week. There's several. You don't usually see some stuff that in places like there's a good chunk of stuff that's actually decently priced in California, even though California is kind of dicey. With those assets, I'm not going to buy those myself. I would literally probably flip those to somebody else, just because California is just a dicey place to own real estate with all the craziness that's going on there. No offense to my California friends. I know we've got a pretty good, strong contingent of folks out there that listen to the show. But what you have to realize is if you're in one of those places that's getting crazy and getting stupid, and you see like what's going on in San Francisco and Portland and even LA and other areas around there, you've got to start looking at ways to get the hell out of Dodge, or start investing in other places if you can't find something in your backyard. And that's what, Austin's been a very competitive market. If I'd have been just trying to buy real estate in Austin, I'd have gone bankrupt a long time ago. And that's why I love this, because I'm literally with an email and a follow-up. And this guy that sent me the 274, I get stuff from him all the time. 2, 3, 12, 200, 66, 75. I get stuff from him all the time. I would make offers on. Do I close on a lot? Not always, but I do close on some stuff. And what's better yet is my coaching students are closing on stuff from them on a regular basis. So that's the great thing. So like, yeah, there's like 1, 2, 3, 6 in California. How many are in God's waiting room, Florida? Even though my opinion of Florida has changed with the amount of tax, money that it costs for insurance there. So there's 43 in Florida, 5 in Georgia, a couple in Hawaii. I guess we could go out to Wailuku and make it a tax write-off to go do some due diligence on these 2 Hawaii assets. Why not? Hey, make it a full write-off to take a look at 2 non-performing notes. Who doesn't want to do that, right? A couple in Iowa, some in Illinois, which I'm not going to buy. Illinois is one of those rougher states. A couple in Indiana, some in Kentucky, Louisiana, Massachusetts, Michigan, Maine, Maryland, Missouri's got a few in there, Mississippi, Montana, North Carolina. I like about a dozen. North Carolina, a bunch in New York and New Jersey, which I know those will go to one student that's up that neck of the woods. Ohio's got a chunk in here. Pennsylvania, South Carolina, Texas has got about a dozen. Virginia's got about 8, and then some in Washington State. Surprise of all, about 8 in Washington State. A couple in Vermont too, but and a couple in Virginia. But that's the thing, guys, is it's all over the state, all over the country. I'm going to run some numbers, make a bunch of offers. If I make 100 offers and it gets narrowed down to 40, 50, that's a good day. It's a good starting point. And I got another 300. And that's the thing that I love about note investing. If you're marketing, and most people aren't, you can have continued deal flow coming in with just an email, just a phone call, just a text message, just a follow-up, gentle touch-base reminder with these asset managers. Hey, I'm here. What do you have? What do you have? What do you have? What do you have? And you'd be surprised what you have on your plate to take a look and go from there. So you may see people on LinkedIn say, hey, I buy non-performing notes, and that's great. Those are students of mine, or people that are copying students of mine, because that's what we showed them to do. It works. You get deal flow in that way if you just tell people what the hell you're looking for, ladies and gentlemen. So if you're looking for deal flow, we'll probably stay tuned. We'll probably do a live stream on these 274. Probably not on this Monday night. It'll probably be on the following Monday night right before I submit bids in. Or we may do it on a Saturday. Probably we might do that next Saturday, stuff like that. But this is the kind of things that we go through in our 3-day workshop to show you how to get these deals in, how to evaluate them, how to get these, what's the way to make them work. If it's a lemon and not a deal, maybe it works better as a subject to deal, or maybe it's something you can wholesale flip off to somebody. But that's my whole goal with the pricing and the equity. I know I'm probably going to have to be at 80% of legal balance, which is going to be good in some cases. In other places, it's going to be too expensive. Just a matter of running my ROIs, my numbers on this stuff. But I expect when I see something like this to have 100, 150 offers out in the next couple of days, and we'll see what sticks against the wall there, and start working those deals, and then we get another 300 we'll make offers in on, and go from there. And that's, guys, I love the note business because of that one thing alone. One lead isn't just one deal. One lead is a bank, an asset manager, seller who's going to have regular deal flow for you, which is a total different mindset and mind blowing. Some people, because most people realize, oh, one lead is one distressed seller. Well, they probably only have one property most of the time. Yes, you'll have some folks that have a portfolio, things like that, but I see portfolios like this all the time. And when I went in front of this mastermind group I was a part of, and I pulled up, threw up on the map of the existing portfolio we had and the stuff that we were looking at and stuff that we were making offers on, it just blew their minds because they couldn't wrap their head around the fact that we were buying 30, 50, 60, 100 assets at a time. It just had a meltdown in a lot of cases. So if you guys want to take it to another level, hey, join the club, come to this dark side, the sexy side of real estate, and join us as a note investor. But I just wanted to share that with you guys today. A lot lower deal flow cost means you've got a lot more opportunities. You don't have to kill a tree or kill a forest, kill the Amazon by just bombarding everything with flyers and postcards and yellow letters and door knockers and stuff like this. And like I said, I've already found a good, from looking at stuff today, 20 deals. One in San Antonio, Texas, to take a look at. Another one in Corpus Christi I've looked at probably before. Right? A couple in Las Vegas. I already have a realtor out in Las Vegas driving by. One in Glendale, Arizona, and a bunch in Florida. That one I know I'm going to be bidding on and stuff like that too. So, guys, love to share that stuff with you. If you're listening to this podcast, reach out to me. If you think you want to do this, let's talk. Go to talkwithscottcarson.com. That's talkwithscottcarson.com. Book a phone call. I want to help you. I want to take you to that next level. If you're not achieving the success you want, let's talk. I'm not here to pitch anything. There may be just one or two things that you're doing differently, or you need to start doing and being more consistent and define success. And that's what I want. I want my students to be successful because there's plenty of deal flow to go around. No, the bank didn't expect me to have millions of dollars in the bank before they sent me this list. When I make offers, they're not going to ask for proof of funds. It's a beautiful thing. So, because I know I'm probably going to kill a bunch of all accepted offers through due diligence or fade my bid because of different taxes owed and stuff like that. So it's a great day to be a note investor, and it's only going to get better, ladies and gentlemen. So if you're looking for that big tsunami of REOs, you're not going to see it because, like I said before, note investors are buying the stuff up and they're working it out, or they're working to dispose of it without going through the foreclosure process or stuff like that, working with the borrowers. And it's like having cheat codes to your favorite game. It's like getting that backdoor alley into the, kind of like that scene from Goodfellas, when he walks in the back of the restaurant through the thing and they have a table right up front for him. That's what it's like being a note investor. You're so close to the deal flow because you're close to the source. You're not waiting for a foreclosure to hit. You're not waiting for a foreclosure to happen. You're not to show up the auction. I'm sending stuff to auction, so people are bidding on my stuff, and that's the beautiful thing. So hopefully this is valuable, guys. If I'm rambling a little bit, I apologize. Just excited, and it's just going to be, it's a great day. Great way to end up really the last true working day of Q2 of 2023. So go out, take some action, everybody, and we'll see you at the top. Bye.
Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closer Show. As always, Scott Carson, excited to be here with you today. And today's episode kind of ties in. We've been seeing an alert of on my downloads, especially a couple episodes when we start talking about how to get a hold of bank asset managers. And I was like, oh, that's great. We're seeing, it's about a 6-month-old episode. We do that episode usually once a year, at least, sometimes twice a year, depending on what's going on. And so while I was searching around, I was like, okay, what other podcasts out there are talking about buying notes from banks, right? So I'm doing some due diligence. I'm like, okay, flipping through. I see about, there's a few note investing podcasts that have been around for a while. I'm like, oh, here's one. I'm not going to name any names, but you can probably figure it out. And they had an episode a couple months ago, and their title was The Myth of Buying Notes from Banks. And when I see that, it starts to make my blood boil a little bit. I've been a note investor since 2008 is when I bought my first note, okay? Wasn't anything big, but it was from Wells Fargo Financial back in the day. And then I bought a couple more from another small lending institution. And then I got a huge list of notes from Banco Popular that we bought some from, okay? So what you have to realize is when I see the myth of buying notes direct from banks, it automatically pisses me off, and it tells me that people haven't done it. Okay? So I listened to the episode, and I'm like listening to these guys talk about how it's a myth. They only know one person that's ever done it. It's not easy. There's no reason a bank would sell you a note. And I just have to chuckle. I have to chuckle because, first and foremost, anybody can have a podcast. And that's the beauty of being a podcaster. Anybody can have a podcast. But the amount of bad information being shared out there from people who aren't doing it on a full-time basis is just downright disappointing. If you've not done something, don't talk about it. Tell people, hey, I've never done this before. Okay, I can respect that. But when you get into, oh, it's never been done, I only know one person, I know that straight up is a fallacy and a lie. Straight up. All right? I know one of the guys used to work for a guy that used to get stuff from notes and traded those papers. I helped him do that. It's just funny, too. Another guy's really good friends with one of my big buddies that I actually performed, a wedding for 8 years ago, who's bought from bank notes, bought BK Chapter 13s from all across the country from lending institutions. So before I get into telling you why some of these myths that people talk about all the time, or some of the gurus who don't focus on non-performing notes or want you pretty much just tied to them to get your note deals, let's go through some just common sense. These are numbers that I'm not, anybody can Google this information to find this information. Okay, they can find these numbers. What I'm about to share with you is pretty easy. So let's just take it. Let's take what are preconceived concessions about buying notes from banks or OPM, or from private sellers, whatever like that. Let's first look at a couple different things. Let's look at some numbers. Okay, and this is just Googling a couple questions straight into AI. Tell me about some of these numbers and tell me about that. And then we'll talk about the rule of numbers and averages. Okay, so before I get to the number, now I also reached out to one of my good friends, and I'll tell you what he shared with me too, because he's buying notes direct from banks as well. Okay, so let's talk about this number, 4,539. Now that number is going to fluctuate a little bit. Okay, that's the licensed number of lending institutions that were on file in 2020 with the Consumer Finance Protection Bureau. I saw another institution that said, hey, that number's grown to 5,311 in 2023. I don't have an exact number as of today. So I went on the low side. Let's just say there's 4,500 because we know some lending institutions have gone out of business. Now that's just licensed lending institutions. Some banks have bought and sold, grown, stuff like that. Okay. But that's according to the Consumer Finance Protection Bureau, not my numbers, them. 4,539 licensed lending institutions making loans. Okay. Now, the next number is 19,655. You want to take a guess what that is? Well, no, that's not the number of loan officers out there. 19,655 is the number of non-bank licensed mortgage lenders who are originating loans. Okay, and that's from the Cato Institute back in 2021. Now, that number has probably gone down a good chunk since we've seen a lot of things change. But let's just say that number's still been cut in half. Okay, it's still 10,000 plus non-bank, non-bank licensed mortgage lenders, mortgage brokers who are originating paper, institutional grade paper. Okay, all right. And that includes mostly mortgage bankers. A big chunk of mortgage bankers who have a line of credit or a warehouse line with a bigger bank will go into that. But that's a lot. Okay. You just add those two together, you've got 4,500 roughly licensed lending institutions, and then 19,000 plus non-bank licensed mortgage lenders. That's over 25,000, or roughly right at just about 25,000 institutions originating paper. Okay, 20,000 originators. Okay, 556,000. Nope, that's not the number of loan officers. That is the number of licensed mortgage loan originators based on what the NMLS had to say. So over 500,000 people, loan officers originating some sort. Now, that number's probably dropped down quite a bit because of people getting out of the industry. I know that in Texas alone, there are 65,000 licensed mortgage loan originators, where most of them are working for a bank or a lending institution of some sort or a mortgage company. Okay. So a lot of people originating paper. Okay. A lot of people originating paper. 1966. What is that number? No, it's not the year. Okay. 1966. And when you take a gander at what that is, you probably don't know, and that's okay. 1966 is actually based on the most recent Bauer Financial data that I pulled. Bauer Financial is a third-party company that evaluates the quarterly reports that FDIC chartered banks and then credit unions submit their quarterly report. So based on the most recent report I pulled from Bauer Financial, it showed me 1,966 banks who have 5 or more branches. Now, why is 5 or more branches something that we target? Well, it usually means they're a little bit more willing to sell. They've got a little bit bigger portfolio. Those that have under 5 branches usually aren't willing to sell any type of notes at a discount. They just can't sell a non-performing note at a discount. They just can't afford it. That's not being said they don't move some stuff. Okay. We've bought some paper from them. We have negotiated some stuff with some smaller banks, but for the most part, that's the number of banks out there that have 5 or more branches. Okay. Now you think about that. That's about, so basically, that's 40% of the total licensees out there. All right. So that means 60% have less than 5 branches, which is totally common to say, but that's still a tremendous amount of lenders, banking institutions. That's bank institutions selling paper or having paper for sale, right? 1,050. You may want to take a gander at this. This is the number, 1,050 is the number of licensed loan servicing companies, give or take a little bit, according to the CFPB when it last pulled it in 2023. Okay. 1,050 licensed loan servicing companies across the country. Now, some of those are going to be licensed in multiple states. Some are just going to be licensed in Texas. I think if you go to Texas right now, if you go to the Texas Savings and Mortgage Lending and do downloads, about 50 servicing companies that are servicing loans here in Texas alone and doing stuff elsewhere. But 1,050, give or take a little bit, that number fluctuates, but based on, like I said, most recent data pulled, that's servicing companies. Now, if you can imagine the amount of loans with them, okay, there's quite a bunch of licensed loan servicing companies servicing paper for the likes of you and me and other banks and lenders, right? Okay. Now, really the top 10, well, I'll just say the top 20 of these servicing companies are going to be like your Bank of America or your Chase. And you're going to have a mixture of some bank servicing and then non-bank servicing companies, or servicing companies that just work on behalf of lenders. Okay. But that still leaves 1,000 plus licensed loan servicing companies across the country servicing product, performing and non-performing paper. Okay. Lots of product, lots of opportunity, right? 67%. What does this number mean? The number of times you can strike out and get to the Hall of Fame, 2/3. That's about right. But no, out of that 1,050, let's go back to it one more time. 1,050 licensed loan servicing companies, 67% of servicing is being handled by non-bank mortgage companies. So if you take that back to the 1,050 as the number of servicing companies, 67% is being handled by non-bank servicing companies, non-bank mortgage companies. Okay, they're servicing the loan, and basically that equates to 87%. I'm not going to make you guess on this one. That equates to 80% of the total UPB being serviced right now by servicing companies. Okay. Now, can you buy notes directly from servicing companies? Yes, you can. You just have to get to the right person in charge of business development at the servicing companies. Can you buy direct from banks? Yes, you can, depending on some situations. We'll talk about that, okay? But this number is what I want to share with you, 625, okay? Now, I reached out to a buddy of mine out in Irvine, and he works for a company that gets all sorts of note tapes, and he's originally from Austin here. We were talking, and I asked him, I said, okay, what's your business mind? He goes, oh, we have about 30 to 40 people at any given time calling banks, calling lending institutions to get paper sent to us, to get notes that we sent. And I bought from him. There's a lot of stuff they said I don't buy, scratch and dent, some other stuff, some Fannie Mae insured stuff. But I asked him today, I said, hey, man, can you tell me the number of banks, just the number of banks selling notes to you direct at any given time in the last 12 to 24 months. And he came back, yeah, we got 625 banks that were direct to that have sent us product for sale. Okay? Sale. I'm gonna let that sit in there for a second. 625 banks from my one source of banks selling product. Now, one of the things that he has worked and his team have worked in is they call, they follow up, they dial for dollars, they pick up the phone, they leverage LinkedIn, all the things that we have done for years too. And we continue to follow up with drip marketing. That's one of the big things he said. The thing that makes us unique is that the fact that we follow up. We've got people that have portfolios with a list they call, they dial for dollars, they follow up on LinkedIn, they follow up with email, and we drip blast on an almost daily basis to people out there. And we get stuff sent to us and we market it all out. Yeah. Are you by yourself? Yeah. 40 people. Can you afford to hire 4 people? No, you can't hire 40 people. But guess what? You don't need to, ladies and gentlemen. There's plenty of opportunity out there, and that doesn't include all the other banks we were talking about. All right. Remember, 1966. Okay. He's not even got a third. He's just under a third of the total banks that there were 5 or more departments. Now, that's including the Bank of America, Chase, the City, Wells Fargo. Yeah, you're not going to buy from those guys. We know it. Okay. You're not going to buy from them. But it leads to a lot of opportunity for people out there who have lists, lenders, banks, non-bank lenders who are selling paper. Okay. You don't have to buy direct from a bank. God knows I bought from a lot of funds over the years, and institutions and banks, stuff like that. But guess what? The reason I go direct to these guys, stuff like that, is for a couple of variety of reasons. But if you're going to listen to somebody tell you that you can't buy from banks, it's because of a couple of reasons. They've never done it. Here's a list of just some of the banks that we've bought from over the years and institutions. Everbank, Synovus Bank, Carrington Mortgage Lending, U.S. Bank sends their stuff out once a year. Cityvest we bought from the Spurs Capital, Regions Bank, Pontus Capitals, Summerlin Asset Management closed on a couple of deals. Bank of the West, we got their stuff. U.S. Century Bank was one of the big Florida banks that still has stuff that we've bought from. Heck, I took 2 of their asset managers to Miami Heat game. Umpqua Bank out of California, Zions Bank. They got 1 person handling the residential. 12 people in the past have handled the commercial notes for sale. Wells Fargo, we've bought commercial notes from them. Wells Fargo has a variety of companies, not just Wells Fargo. Wells Fargo won't sell you a one-off residential note. I'm going to say that right now. They're not going to do that. There's no reason for them to do it, but they will sell commercial. They have a different division for their multifamily called Wells Fargo Multifamily. We've bought stuff from before. Capital One, what's in your wallet? Bought from them, one of the big banks we first got with. Greenpoint Mortgage was their part of there. Rocket Mortgage sends out their stuff once a quarter. Truist Bank, we just looked at a tape from Truist Bank about 3 months ago on the residential stuff. Oceans Bank out of Southwest Florida, bought a lot of stuff from them over the years. Wells Fargo Financial, the first bank that I bought notes from. Okay. Before they went out of business, we bought quite a bit of stuff. Crown North Corp is a commercial servicing company that we've bought notes before through on commercial assets from a variety of different lenders. Quicken Loan sends their stuff out once a quarter. We bought from Palmetto State Bank. We bought notes from them before. It was on a commercial. Okay, this is just a drop in the bucket, ladies and gentlemen. You know, I could go on. I've got files and files of non-disclosure signed with so many banks talking about the list that we've bought from them. Okay, now the thing is, why would banks publicize? Banks aren't going to publicize that they're selling notes. They're not going to do that. But you've got to get into the right department to talk about it. I mean, hell, Wells Fargo, if you look at the news articles, Wells Fargo took out a huge loan just this last week to stay in business in a lot of cases. If you had a line of credit with Wells Fargo, your line of credit probably got shut off or cut in half. Okay? There's a lot of banks in trouble that are not doing very well right now. It's going to lead to opportunity here, maybe like 2010, I don't know, but some portion, even a third of it, makes it worthwhile to learn how to buy notes direct from banks when you do it. So let's talk about some of these myths, why people are talking about it, okay? Myth, a bank won't sell to you because you are too small. You're too small. They won't sell to you. You're not smart enough. You're dumb. The truth is that straight up, flat out a lie, okay? Many banks, lenders will let you cherry pick deals. You don't have to have the next myth here, $5 million. But they don't care. As long as you pass the smell test, they would rather sell you something than nothing. When I got into Capital One, what's in your wallet? Okay. They sent me this big list. I've talked about this before, 33-page PDF. I was like, I can't buy this. Like, no, they're just like, buy something. Okay. Yeah, you look too small because you don't have any social footprint. You're not on LinkedIn. You're not marketing properly. Yeah, you look like a podunk little investor, like a lot of people do. You got to change things a little bit. Truth, I need to have millions of buy notes from banks. No, once again, you don't have to have millions of buy notes from banks. Now, if you're going to be buying $1 million apartments and things, then you need that. Okay. But most banks are not asking for a proof of funds on the front end. They figure that if you've gotten into the right department, you belong. You know what to say, what not to say, you belong. And they know people use money, OPM, private money to fund deals all day long. Okay. Yes, banks will let you cherry pick deals a lot of times. If they send out a tape to you, they're going to let you cherry pick it. Happens all the time. Residential, commercial. We've had a few sources where they did want the whole portfolio being sold, so it just wasn't a portfolio we bought. But there's been plenty of times we bought one-off notes. Other times we bought 338, 75, 25, 54. Okay. There were some trades that we had to buy the whole tape and we got a bigger discount for that. Okay. But you're not going out and buying a portfolio from Bank of America, Chase, Citi, Wells Fargo. Yes, you would need $50 million to get into those, but you're not buying from them. Guess what? That's 10 lenders. Remember, 1966. Okay, now you've got 1,956 banks to talk to. Okay? Oh my God, that would take you a while to call those many banks. You don't need to call every one of them. I just want to live along here. Myth, banks have no motivation to sell you notes. That's not 100% correct. They do have motivation. Banks have no motivation to sell you performing notes. There's no reason they're going to sell you performing notes. So that's the big thing. They have no motivation to sell you performing notes. There's no reason to sell that at a discount. They're going to hold that. That's what they want. That's how they're designed. They want performing paper, the cash flow. They want that coming in. That's how they work. Okay. But they do have non-performing stuff. And depending on what's going on in that bank's portfolio and the reserves as what they have, yes, banks will sell you notes. We had a bank in San Antonio, one of my mastermind groups, had 31 notes available for sale, 17 were performing. They just wanted to sell this whole loan portfolio off because they didn't want it to be the bad guys foreclosing in that neighborhood. It was a little smaller regional bank. Okay. I've had banks lie to me, tell me they wouldn't sell me, they had non-performing. I said, no, you do, based on a quarterly report and what I've heard. And they're like, okay, yes, we do. And get in that conversation. Is it always going to be a good price? No. Do we follow up again and again? Yeah, just like we would with any other type of real estate lead. Follow up, follow up, follow up. Okay. And banks will sell depending on where their bank's portfolio and reserves. What do they have on their books? Okay. Maybe they only move it once a year. Maybe it's the last quarter, the fourth quarter, or the first quarter. I've had banks that took 4 months of negotiation back and forth. They finally realized and go ahead and close on an individual asset with them. It just did what it is. It takes time. All right. Here's another myth. Myth of bank. A bank will just foreclose versus selling a note. No, they don't want to just foreclose. Now, yes, here in Texas and Georgia, it's a little bit different because it's fast foreclosure. And that's dependent on the state. Okay. If a note is non-performing and they're in a long foreclosure state, yeah, they would probably be glad to, most of the time, to sell you the note at a discount. Okay. And it all depends on their legal, where they're at reserves wise, what's going on in the market. Banks will sell notes to recoup cash. They would rather get that 50, 60 cents on the dollar of what's owed to them or the value, because they take that in and that frees up any reserves they were holding on that one non-performing note. Because if a bank has a non-performing note, they've got to hold money back in reserves. That stops them from lending. Okay. Yeah, they're not going to sell a Texas note at 35 cents on the dollar. That's not going to happen. Okay. But maybe they will sell it at 65, 70. All right. Or they'll just go ahead and foreclose because it's already done, especially if it's a note that they've gone through the foreclosure, most of the foreclosure process, and the foreclosure maybe in 30, 69 days. Hell, they'll probably still sell it off. Depends on where it's at. But it's not, the whole thing is that when you look at, every state's different in foreclosure timeframes, how problem a borrower is. Maybe they need to move some stuff off their books, a lending portfolio, other things, or they got some legacy assets they want to get rid of. Legacy assets means they took over a portfolio when they merged or bought another bank. There's a lot of reasons that they'll sell stuff, okay? But a bank won't always just foreclose versus selling a note, all right? It all depends on what state it's in, okay? Another thing, banks want to take my house in real estate. They want to own real estate. That's the big falsehood. No, banks don't want to own homes. They want the cash flow. An REO, a real estate owned asset to them, is a non-performing asset on their books. Now, we have had some banks foreclose on commercial properties. Some of these multifamilies are way over encumbered, and they don't want to sell them right now at a huge discount. They've found and adjusted their commercial lending side. In some cases, like, hey, we're going to operate this, but we're not going to operate it ourselves. We're going to bring on a partner to operate that asset, and we'll split profits and we'll ride through this wave, which makes sense. Okay. But you start seeing emails and letters and things like that, and like the real deal where there's banks out there selling their portfolio off. Signature Bank's legacy assets being sold off because it's been over a year now. Okay. Yes, do you need to have some money to buy that asset? Yes, if you're going to be buying $1 million assets, you got to have some money. But there's also a ton of residential notes that are non-performing that they're wanting to work out. Okay, it just is what it is. I've got a list of notes in right now that a bank is willing to sell at a bit of a discount. They want a little bit more, but there's private mortgage insurance with it. So I'm going to get a 20 to 30% of whatever I foreclose on. There's that insurance to cover, make sure I'm whole. Okay. There's a whole lot of things versus just being black. Bank wants to own your property. No, they really don't. They don't want real estate on their books. They really don't. Trust me. Okay. Now, here's the thing. Why would people tell you it can't be done? I don't care. You know me, guys. I don't blow smoke up your ass. The first thing they would tell you that is because they've never done it before. And I know they haven't done it before. Or one of them hasn't. The other one is worked on it. Maybe they forgot. Maybe they got amnesia from selling on their trade from Select Portfolio Services years ago. I don't know. Two is really where most investors are at, is they are lazy. No offense. I get it. You've gotten the habit of marketing like it's the old days of sending out direct mail campaigns and not having to follow up and just waiting for that 4% response rate. Or you don't under social media. You're afraid to be out there. You don't want your boss to find out you're on LinkedIn talking about notes. Okay. Look, it takes marketing to do anything. I'll be the first one to tell you, we used to dial for dollars, 50 phone calls a day. You don't need to do that these days with LinkedIn and Lane Guide and the Bauer Financial List and all some other things, Distress Pro. There are services that you can sign up for that will make it easy for you. It's just different marketing, okay? Here's the number 3 reason why, and it's probably the number 1 reason most of the time. They only want you to buy notes from them. If they tell you and convince you that banks aren't going to sell you notes, guess what? They just gave away their power. Nobody's going to look at their 100 or 130 or 160 or 75 crappy notes they have on a platform that are crappy notes. They don't want you to go looking for deals. They only want you to buy from them. Oh, you're too small. Here's a list of 30 notes that I've already cherry picked through. Okay. Oh, these have been sitting around forever. Yeah, that smells not dead fish. That's dead notes. Okay. And what's unfortunate is most people, let's be honest, the real estate bros guys, stuff like that, we all are kind of mafioso, right? To say otherwise makes us look weak or ignorant in our minds. Ignorance is out there, and that's one thing about podcasting. Everybody can have a podcast, we're a live stream, you can spout whatever falsehood you want or whatever limited belief you have as the truth. You can buy owner finance notes if you want to do that. You can spend thousands of dollars each month on direct mail campaigns to get a 4% response rate, and then have to argue with that borrower or try to negotiate that borrower down. Can you get some great discounts? Yes, you can get some great discounts off that stuff, but it's not a repeatable business model. You're not going to close on 100, 200, 300 notes to help you get to that retirement if you don't put money or marketing behind it. I like putting the marketing side behind bank notes because guess what? It leads to deal flow. Okay. And once again, I don't want people to look stupid or sound ignorant, but you need to know the truth. If you choose like, no, I don't want to do that, that's completely fine. But when people are out there blasting falsehoods and lies and saying, well, only one person has done it, that is a straight up. I can tell you right now, we've got 30, 40, 50 people who have bought direct from bank notes and other lending institutions. That's what we teach. Okay. I could go right now into my database and pull an email database of about 4,500 banks and contacts off that stuff and another 10,000 mortgage bankers from stuff that we've worked over the years. It's not that hard. Now, let's talk about what are some of the advantages of buying direct from banks. Well, it's pretty easy. It's a repeat deal flow, like I just said. Yes, will a bank have maybe just one note every time? Yes, but other banks have other stuff. So the great thing is getting repeat deal flow. Maybe it's once a month, maybe it's once a quarter, maybe it's only once a year, but that's okay. You should not be relying on one source just for your deals. You need to be going out and constantly developing lead gen. It is what it is. The number two is one of the biggest things for a lot of people. I know a lot of real estate investors out there are bootstrapping their marketing. No direct mail costs. Okay, we're not sending out letters and campaigns and trying to get, spending thousands of dollars on direct mail campaigns that gets burned up when you could hire somebody $1 for dollars for you. You could use Octopus CRM for like $22 a month to reach out to asset managers, or you can download a free list of mortgage bankers and do a drip marketing campaign. Okay. Number three is that bank paper is cleaner paper. And by cleaner paper means it's got uniform files. Every file looks pretty similar. Yes, don't get me wrong. Some files are gonna be different, but it's the same type of file. You read a mortgage from a bank or institution, it's probably gonna be about the same type of thing. The assignments are gonna look similar. The allonges, the 1003 loan application, you're gonna have more information versus owner finance notes will differ by so much. You may not have any qualification docs, no financial docs. It's a complete shit show sometimes when you look at owner finance paper. Now, if somebody's going through an RMLO, it's usually in a pretty good spot, but we all know now everybody does that. And then you have the issues of people not servicing their loans properly, trying to self-service. Well, you're not going to have that from a bank or a lending institution. They're going to have a third-party servicing company or servicing software that gives you everything you need to know in a nice, clean package. Okay, that makes that paper much more valuable. Okay. And yes, I think you're going to get bigger discounts and less headaches over time. We've seen that done. Yes, are you getting, are you going to get a bigger discount on maybe an owner finance sell note from time to time where people are motivated and stressed? Yes, you will. But you will also get big discounts from banks and lending institutions of paper they need to move off or the tail end of the tape where they've purchased. Okay? It's not like 5 cents of the dollar like it used to be. Will it ever go back to that? I don't know. Yes, we bought stuff at 5 cents on the dollar or less. Okay. And the fact that you get bigger discounts is still leading to higher returns most of the time, depending on what you're doing. Specifically on non-performing notes, usually a non-performing note is definitely going to outperform a performing note or even a reperforming note in a lot of cases. But you've got strategies. You've got 10 to 11 different strategies with non-performing notes to make some money. And here's the number one rule why you have to understand the process of non-performing. Because every note at some point is going to go non-performing in some case. Borrower stops paying, what do? We just had a guy that was like, I bought my first note, didn't really take a class, and I screwed up in 4 different ways because I thought I knew what I was doing. You got to understand it's different. You got to understand buying notes is different than buying real estate. Okay? And you can't listen to people that have not done it. It's like the 4-minute mile. Oh, it can't be done. You're going to die. Well, guess what? You can run a 4-minute mile now. Oh my God, we can't go to space. Well, we sent a monkey up, we sent a man up, and now we got people trying to move to the moon or going to Mars. You get what I'm saying? It's not as difficult as it used to be. During the 80s, the Resolution Trust Corporations, a lot of portfolios being sold, a lot of assets being sold. Notes is where everybody wants to evolve to. Those aren't my words. That's Corey Raymer's words from one of the guys we had on this week, but it's the truth. And you have to grow. Yes, it's comfortable just being in your own little thing and looking at a couple notes as a hobby, especially if you're working a full-time job and you got all your benefits paid for. But an employee mindset will never teach an entrepreneur to succeed. If you've got $5,000, $10,000 a month coming in a salary, kudos, good for you. But quit telling people things out there that you haven't done as the law. Okay? Now, what are the disadvantages? I'm going to be equal on here. What are the disadvantages of buying from banks? You have to market differently. We talked about this. LinkedIn, down for dollars, having a website, passing the smell test. That means you have to act professionally. You got to look it. Okay? You're not going to show up at the local RIA club meeting. You got to dress the part, look the part. And you're going to have usually higher price points, not price percentage, but price points, because they're not usually doing loans under $100,000. So if you're going to buy, be prepared for what's going on in that market. That doesn't mean you can't get it at a discount. That's not what I'm saying. But usually price point's going to be higher than your mom and pa or people who are owner financing property because the borrowers won't qualify traditionally, okay? And now a bank may also only offer notes 1 time per year. You got to keep them on. U.S. Bank sends their stuff out once a year. Okay. Well, that once a year, I got a portfolio to take a look at. You can't live on that for the entire year. Maybe you can depending on how you buy, but that's the thing is buy, create multiple sources for deal flow. Plenty of sources out there. Number 5, you're not going to buy a partial note from a bank or sell a partial to a bank. Just not going to happen most of the time. Now, there's like First American, a FNAC, FNAC out there, First National Acceptance Corporation. They're a bank out of Michigan. They will offer buying a partial. That's an exception to the rule most of the time. Okay. You're not going to get performing notes for sale from a bank most of the time. Occasionally you will, but usually you won't. Like that one situation of buying 31 notes, they got 17 performing and 18 yield. Okay. Sometimes you'll get it. It all depends on the lender, what they're trying to do. But most of the time, you're chasing performing notes. You're not going to get performing notes most of the time. They may get some performing notes that are matured beyond their term, and you could do that stuff. But most of the time, a bank's not going to, I want a portfolio of performing notes at 15%. No, a portfolio of performing notes you can sell at par. Okay. And you're going to have some notes that require special servicing, special licensing. If you want to buy VA loans, FHA loans, your servicing company's got to be licensed in that area and be willing to do that. Those types of loans that may cost a little bit more. All right. Of course, you got to do everything else. Never buy a note you don't want to end up owning. Make sure it's doing the due diligence of BPO, O&E. Those things are uniform across the board. Okay. But I always love getting more deal flow in that I can cherry pick from. I'm not required to try to do a skinny deal or only limited to 100 notes on some platform or 30 notes that some guy is sending me out there. Okay. This is what we teach in our virtual note buying workshop, guys. How to find deals, how to fund them, how to flip them, how to build relationships with banks and asset managers. I literally give you the step-by-step process of how we follow up, how we connect with bank asset managers, how we find the right people on LinkedIn to start connecting, what to say, what not to say, screenshots of what we actually say to get people to reach out to us. And yes, it's all about the follow-up, okay? Our upcoming workshop is July 25th, 26th, and 27th. It is the #1 investor recommended workshop for non-performing notes, okay? Well, you'll learn how to become a note investor by taking the 3 F's and applying them. You've heard of the BRRRR strategy, right? We have that same strategy for note investing. Buy, rehab the borrower, and get them back on track, okay? Or take the property back and turn it into an REO and keep it if you want or sell it, okay? It's live on Zoom, Friday, Saturday, Sunday. We'll be going live on Zoom at 10 a.m. Central, so it's a little bit earlier. It's a little bit later than those on the East Coast, but better time for those on the West Coast. 10 a.m. to 6 p.m. on Friday, Saturday. Sunday will be 10 a.m. to probably 3 on Sunday, so because we know your mind can only absorb what you're asking withstand. All right, but it's recorded. You can sign up today. Still discounted tickets available at notebuyingfordummies.com, or you can go to our website, weclosenotes.com, and get signed up there by clicking the upper link under training. All right. Look, we are here to help you take your business to the next level. I encourage you to pick up the phone and call me. I know I make my schedule available to you guys. If you go to talkwithscottcarson.com, you can book a call with me. I will take your questions. I will answer your questions. If you have fears about buying notes, so what's up? What's up? Somebody else said this. Look, I'm glad to lay it all out there, but you have to use your head, ladies and gentlemen. I'm not here to sell you notes. Okay, if I do come across you, I'll sell you some notes and make some profit on them. But I'm going to disclose, hey, we're buying these direct. If you're part of our coaching program, guess what? You get access to our database. You get access to our resources because it's being done. And we've helped hundreds and hundreds of investors over my 15 years of teaching since 2010 learn how to buy notes direct from banks. Okay, if it wasn't possible, I would not be here today. And as you should see there's plenty of lending institutions out there. Plenty of non-bank institutions creating bank paper that you can buy, that you can work with. It's all comes down to YOU and how much you're willing to market and how much you're willing to reach out to. If you want to be lazy, that's fine. But I know a lot of folks have some big goals and you're not going to get that big goals by being lazy. You got to put a little WORK. That's work. Put some work into it. It's not that hard as most people think it out to. People only say it's hard because they've never done it or don't want you to do it because they want you beholden to them for deal flow. All right. That's the truth. Nothing but the truth here, ladies and gentlemen. And as always, I want to say thank you for listening. I hope this was intelligent. I hope you enjoyed it. I hope you saw the overwhelming numbers alone of paper out there that you can reach out to. Is everybody going to have something available for sale? No, they're not. but you're going to have a whole lot higher success by reaching out via LinkedIn or reaching out some of the lists we show you how to do than you will by dropping 1,000 mail pieces. All right. Go out, take some action, buddy, and we will see you at the top.
Hey, real estate investors. So you want to dive into the world of note investing, but don't currently have the funds to sign up for an expensive class or a workshop or one-on-one coaching. Well, then you definitely want to check out the biggest bang for your buck in the note world. And that's our WCN membership. It get you an all you can learn access to our class workshop replays, tapes, weekly coaching calls. For $97 a month, it's the biggest bang in the note industry because you get access weekly with me. You can book one-on-one phone calls with me. As we get different tapes in, we'll share them with our members after our one-on-one coaching students get access to us. We share a variety of tools, like I said, replays to the previous workshop, special discount codes to other events that you can take advantage of to help you get more bang out of your dollar every month. We've been investing in notes for over 20 years, and one of my biggest passions is helping note investors, big and small, get started buying notes. Yes, I got started years ago with no money, no savings, and no list. And I love helping people close on their first deal, get their first private funding partner to help them fund more deals and help them both make above average returns. If you're looking for somebody to help you take your note investing from 0 to 60 and want to get started, my WCN membership is a great place to get started. Like I said, we upload lists to it, video training, coaching calls for $97 a month. What can go wrong? The only thing we ask is you hang around for 6 months, and then if you don't like it, you can cancel. But check it out at noteumbrella.com. That's noteumbrella.com. That's our WCN membership. Get looking at assets today. Start putting your fingers on the trigger to pull the trigger on some note deals here before too long. Yes, anybody can buy notes. I don't care your age, your savings, what race, color, whatever it is. Note investing is all about what action you take, and the first action you should take is signing up for our monthly membership at $97 a month. That's noteumbrella.com. You can also access it by going to weclosenotes.com and checking on the monthly membership. But we are here to help you. Scott Carson, the Note Guy. We look forward to seeing you at the top. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closer Show. Hope you are doing well and rocking and rolling along today. Happy Monday. It's hard to believe that today's the last day of June. The year is officially halfway over, and I thought I would take the time to share some good stuff with you because, as I like to use, you guys know I'm usually pretty savvy here, all right? I'm seeing a lot of people making mistakes. And as I was going and messing around with AI, especially some of the new stuff with YouTube likes to give inspirations, you know? And so I clicked on the inspiration. It gave me a bunch of topics. And one of the topics was what we're going to talk about today. And I was thinking, man, it does make sense for this topic, especially based on what we produce. And it looks at our channel and other channels in the note industry, stuff like that, and sees gaps that are missing. And I'm seeing a lot of people making mistakes. I mean, I'm like you guys all. We have the scroll throughout the day. You'll take 5 minutes here, 10 minutes here to scroll through your socials, alerts, stuff like that. And I'm a part of several Facebook groups, right? Just like anybody else that are focused on the note investing side, mortgage note investing, stuff like that. And I constantly see the same people posting the same stuff. And that's all that I see them posting is in a Facebook group with a few hundred members. You're not going to be successful posting that, hey, I buy notes. We buy first and seconds. We buy anything in Facebook groups. And I look at those people's profiles on Facebook. I don't see a lot of stuff personal. I go to try to find them on LinkedIn. I don't see that much stuff on LinkedIn about what they're doing. So today's episode is dedicated to you guys out there that only posting on Facebook groups. I could name some names, but I'm not going to. All right. But these are 10 strategies, 10 tips to help you in the second half of the year get more out of your note investing. And it's a mixture of finding deals, raising capital, and marketing to market your business. And if I had to start all over again, if I had to start from ground zero today, everything went away. The YouTube channel, the podcast, my Facebook groups, everything went away. And I had to start over as a brand new person with no email database, no website traffic, none of that. These are the 10 steps that I would do right now. If you're a brand new investor, if you've been a note investor for a while but haven't had any success, you've taken somebody else's workshop and they just focus on the nuts and bolts, but they don't teach you how to actually market like it's the 2025. I mean, most Betty blue hairs are Bill blue hairs because we have older folks. They like the theory, the in and out theory that works in their one or two markets, or works if you listen just to what they say, you drink their Kool-Aid. Cheers. Bottoms up on the Kool-Aid there, Jim Jones. You have to start thinking smarter. You have to start using things because you can work smarter, not harder. And I see most note investors out there bludgeoning themselves to death because A, they're not embracing marketing, and B, they're only listening and drinking the Kool-Aid. They don't think anything else is out there. I'm here to help you. And these things I'm going to go through are not complicated. Everybody can do this. We're not talking about a ton of money. There's a few things that you're going to want to sign up for to help you maximize what I'm going to talk about today. We're talking a few $100 in total, probably less than $200 per month to help you get rock and roll. Yeah, there's going to be other things to do, and it's going to vary state by state, obviously. But these are the things that I would do. So we're going to call this episode, all right, Note Investing Strategies for Beginners in 2025. And everybody on here can do this. Let me move that down here. Okay. And if you're not doing this and you're an existing note investor, you should start doing it. And I see experts out there, people that talk about note investing on one strategy or here, they're not doing these things. And these are the things that we have done to make ourselves successful. These are the things that we have done starting all over. And like I said, if I had to start from ground zero again, everything blew up and went away. Pardon me, my phone's going off here. These are the things that I would do immediately. Start doing these things. So the first thing is you're starting brand new. Some of you guys have probably already had this, okay? Open your accounts. First and foremost, you got to go get an LLC. If you're in California, guess what? You're going to pay an $800 fee to register in California. Nothing you can get around that. Open a self-directed IRA account. Go do that. Throw a couple $100 in there. There are going to be some options you see that you can wholesale flip notes and put some huge profits into your IRA, your self-directed IRA, Roth, or traditional IRA. I think you put up to $6,000 per year to 2025, or no, maybe $7,000 now in 2025. Do that. You ain't got to put the full seven, but put $500 in your IRA. Get it, start it. We'll talk more about that later on, but that's one of the biggest strategies you can do to leverage even small IRA, small amounts. That's a great thing, or partials in your IRA. An LLC. Big mistake people make is they go out there and create an LLC with fund, banking, investment, or something like that, or they create an LLC name and none of the social media accounts are available. So go to CheckName, CheckName, or NME. Check, just Google checkname.com. Type in what you want to name your LLC. See if it's available at the Secretary of State, at the state you're registering, and then see if the socials are available. It's CheckName.com. Checkname.com. I should have put that out there, but I forgot all about it. But check it out. So that way, if you create a name, the socials are available, or something close is available for you for your LinkedIn, your Facebook, or whatever you're going to use as a group or business profile. Okay. Important to do that. Try to keep it unique. I see people out there creating different things, and there's that name's been reused. You know, it's in podcasting, we call that the kiss of death. If you create a name of your podcast and there's like 40 other same podcasts after the same name, don't do that. Find something unique, but don't use the kiss of death words: bank, investing, funds, that kind of stuff. Our good buddy Merrill Chandler from GetFundable.com talks about those are the names you don't want to use. So management, associates, something like that. Make it simple for you. Okay, but get that set up. That's the first thing in getting rock and roll. You need to be a business. An LLC is going to be for your business. You can't. Yeah, can I do a trust? Yeah, but go get you an LLC. Come on, be professional. Let's not make this difficult. This is not rocket science. Okay, that's the first thing. Okay, second thing, update your LinkedIn for the love of Jesus, Mary, and Joseph. Okay, go over to your LinkedIn profile and completely fill it out. Put a good photo, an updated photo of you smiling. Put your banner behind you, your header, and update about you. Tell people what you're looking for. LinkedIn is really the number one place that bank and asset managers are going to go to take a look at to see if you actually pass the smell test. So make sure you look at it. Make sure you're posting things about real estate. Okay? About note investing. You can use octopuscrm.io to help you with connecting with more people on LinkedIn. And that's going to be like $21 a month. Or you can do $14.99 a month if you set it up where you pay on an annual basis, or $21.99 a month to do month to month. That's the first thing to do. No, you don't need a premium LinkedIn. No, you don't need to create a new LinkedIn account if you already have one. Just start posting about your hobbies and post something about real estate investments. That's the first thing. That's where asset managers are going to go to when you start reaching out to them sellers to see for real and legit, and go do that first and foremost. Okay. Go do that. And a lot of people are not doing that. LinkedIn is the number one spot that we use to find asset managers, find bankers, all that stuff. And if you're not doing that because you don't want to waste your time doing that, then go do something else. Please stop wasting time posting shit in Facebook groups if you're not going to take the time to make yourself look professional. Okay, it's the 21st century. Please start acting like it. Okay, serious. Now, it is the 21st century. You need a website. You need a landing page of some sort so people can tell who the heck you are. And while LinkedIn is a good kind of placeholder, you need to get something. You could go to leadpages.com, and for $37 a month, they'll give you like 5 landing pages, 1 custom domain that you need, which you could use like whatever your company name and associates like that to have you a landing page that's simple. I would go ahead and upgrade to REI Black Book, because that's going to give you landing pages and a CRM to email blast out to text. There's a lot of stuff with REI Black Book that you'll be using. You're probably not going to use it all at once, but REI Black Book is a great resource to do it. It's our preferred CRM for those that are starting off brand new. Okay. David Army's done a really great job. His whole team over there. So Black Book REI, check it out. I think I've got a link in there. I'll post a link in the actual description so you guys can take advantage of our discount that is offered to our students. But lead pages, create your website. Don't go and create your free Wix account. Wix is just horrible. Lead pages is pretty easy. Drag and drop. There's some great templates to make you look professional right off the bat. Don't use Wix. I would prefer that you guys actually, if you're going to use a website, you're using a WordPress website, which would be better for you. But I get it. That's heavy lifting. Most of you are not in the website development stuff. Go create your web page. I've got lead pages. I've got landing pages with Keep, Infusionsoft formerly. But we still have like 4 or 5 lead pages that work for us for specific websites, or we've used it for assets. When we started off, we used a lead pages website and then converted to our own WordPress website. So starting off, I would do a lead page. It's $37 a month, and that's a great spot for you to get rocking and rolling. Okay. And you can have out of that 5, you have your custom domain, like whatever your LLC or website name is, and then you could have a landing page for raising capital, for deals you've got available, for other things. All right, so go get you a website or someplace to get landing pages. MailChimp will also give that stuff to you, but MailChimp really doesn't like real estate investors. And you might as well go to REI Black Book. It's going to be cheaper anyway for you with the contacts there. Okay, so create you a website. You don't let this stop you from going out and doing other things, but get this rock and roll. It doesn't take long. You can have a website up and going in just a few hours by using the landing pages templates, and then just custom, tweaking your URL and your logo and stuff like that. Okay. Now, once you have that, now the third thing is start contacting sellers. Now start contacting sellers. You can go to LinkedIn and search for note sellers, note investors on there through Octopus CRM, and start contacting them directly on LinkedIn or some of the different LinkedIn groups. You can also go to PaperStack. Now, I don't buy a lot of stuff on PaperStack. You're not going to find a lot of non-performing notes on PaperStack, but what you are going to find is a list of people that are selling notes. And it doesn't take a rocket scientist to be able to download the list on a weekly basis and looking at the company names they're selling. Out of the company names, you're going to be able to find 10, 20 sellers via Google or LinkedIn, whether it's a company name or the person's name, and contact those people directly. Because 9 out of 10 times, those people are going to have more than what they list on PaperStack. If they list 1, 2, or 3, they're probably going to have 30. And that's a great way to get lists start sent to you directly or reaching out. Some of the comments like Boston Note or 1,000 Keys or a few others that are out there. Go reach out to those people, get their full lists, because that's going to come in handy for you to start marketing those deals or start looking at more deals that you can get out to your database in a couple different ways. Okay. But start contacting sellers to start getting deals in and start going through the due diligence side and identifying opportunities that you can start marketing. Okay. And that leads us to what's going to scare most of you away from not doing this. While most of you will go to a Facebook group and say, hey, we buy and sell notes, and you won't post anything else, you should be marketing your business or marketing the deals that you're getting off of PaperStack or getting from the direct sellers. You ain't got to be crazy and stuff. Like we're talking about, you could film 1 deal video per day under 3 minutes. And how you start this off is you start by doing it with a TikTok video. Yes, go get your TikTok account. It's free. Use the green screen app, put a picture of the property off the Google view, off the address, put it behind you, and talk about the deal. Or just don't do your picture on it, put the green screen and do it, talking about it over the video. All right? And talking about 3 minutes. Hey, here's this performing note, or here's a non-performing note, or here's a reperforming note that's available at a 17 yield or a 16 yield, whatever. But start cranking out one video per day and do it Monday through Sunday. That's 7 videos under 3 minutes. The reason we start with TikTok is TikTok's going to create it video for you in 3 minutes, and it's going to download it to your phone. And you're going to take that video that's downloaded to your phone and upload it to YouTube as a YouTube short, upload it to LinkedIn, upload it to Facebook and the Facebook groups you want to be a part of, Twitter, Instagram, Threads. I forgot Threads on there, but do that. But that's also something you could send out in an email to your database once a week. Here's our 7 deals this week. Deal of the day. Deal of the day. Here's a note deal of the day. And like PaperStack or other servicing accounts or note sales accounts, don't do that. I don't get it, because it will lead people to follow you on all across the platforms and start reaching out to you, seeing that you know what the heck you're talking about. Okay? This is one of the most valuable things that you can do. We did a test run on this earlier this year, or the last couple of years, a deal, one little short per day, and it led to thousands and thousands and hundreds of thousands of views on TikTok, and a lot of people reaching out to us to either buy or get on our buyers list. So it's a great way to use the social media and SEO to build a network. And that's what I would do. When I started off at with the No Close Show, we started doing, Facebook Lives. Those were big back then in the day. We did 150 days of it to build a following. It's so much easier to build a following today than it was when I started off. So do these things. Don't be afraid. Like I said, if you don't want to have your face on camera or you have a face for radio, then just talk about the deal and talk over the, hey, here's the deal that we're working on. Check it out and go from there. All right. This will not cost you anything. Your CRM to send it out will cost you something at some point, but posting across the social medias takes you about 30 minutes to do. 3 minutes to record it once or twice, probably a couple minutes to create the image properly, square it, and then rebroadcast. And what you want to do is take the image. If you're going to use a Google Maps image, crop off the address, and just sharing the details. Don't give away the address. Okay. It's okay to say, I got this note deal in Dallas, Texas, or San Antonio, Texas, or Orlando, Florida, whatever, but don't give away the address. Make people reach out to you to get the address and get more information about it. And that's a great way for you to build brokers, a buyers list, sellers list, stuff like that, and marketing it. I guarantee sellers are not going to be disappointed that you're out marketing their deal to help them get them moved. Trust me on that. They're not going to give a rat's ass. They're going to be excited that you're actually sharing information. That is what I have found across the board. Okay. 1 deal per day, 3 minutes, 30 minutes in total, probably to fix it all up and post it, repost, re-upload, repost, a couple lines, 2 or 3 hashtags, and you're off rock and roll. This is not difficult. Everybody and their dog can do this. Okay. And this is one of the biggest things that's stopping you from having success, because just posting to a Facebook group, you're only going to see 1% of your followers, or even like 10% of that Facebook group is only going to see it. But if you post to Facebook, only 1% of your followers, really less than 5, are going to see your stuff. So this is why we cross-pollinate the same video across all platforms and helps you build it. It's going to take a little bit of time. You got to stick with it, but this is going to be valuable for it, because it's also going to help when asset managers, note sellers go to your profile and then see you're posting these deals of the day on LinkedIn or other things. Hey, this guy or gal knows what the heck she's talking about. It builds credibility. You ain't got to close on notes, but showing that you know how you're talking about will add value exponentially. And like I said, this is not 8 different things. It's one thing you're rebroadcasting 1, 2, 3, 4, 5, 6, 7, 8 times. Let's work smarter, not harder. Okay. And most of the people out there, the experts, aren't going to teach you this. This is valuable for you to get the word out as a note buyer or note seller for you, or to broker notes or wholesale, whatever you want to do. Okay. Next thing is start contacting banks. All right. To get and one of the easiest ways to start contacting banks is you could go over to LinkedIn, start typing asset managers. But if you're looking for hot lists of distressed assets or lists of distressed notes, non-performing notes, start looking to foreclosure lists. Here in Texas, we like the Roddy's List, the foreclosure listing service. That's flsonline.com. For 45, 75, $85 a month, I can download a county like in Travis County or Williamson County or Dallas County or Harris County and start looking at the foreclosure list and start contacting the bank asset managers or the attorneys on that list to get on their note buyers list. If you're not in Texas, you can use foreclosure.com. It's another alternative to start looking at lists in your county, wherever you're located. Both are pretty inexpensive. That's the first thing that's probably going to cost just $50 to $75 a month, depending on where you're located. Obviously, besides opening an LLC. All right. But start looking at lists. And this is one thing that we used to do is then dial for dollars or contacting the asset managers or contacting the special asset managers for such and such bank. Well, the great thing about the foreclosure list, it'll list who the bank is or the lender. There'll be a lot of private investors on there. That's a great way to contact them to see about either investing or selling their note at a interest level. And we've used it quite a bit to raise private capital. So it's kind of killing two birds with one stone. And yes, get rid of the bigger banks, the Bank of America, the Chase, the Wells Fargo's off the foreclosure list. Narrow down to your smaller banks, your regional banks, and start dialing for dollars. It's going to help you. Spend 2 days a month doing this. It will add value exponentially. If anything, it'll give you some other content to talk about foreclosures in your area that you can do with your deal today. Hey, if you didn't guys know this, there's this many foreclosures going to foreclosure this month. That's a very valuable video. It's been one of our most successful videos every month is when we talk about foreclosure numbers, residential and commercial. And you can actually get that information relatively easy at the less online. Foreclosure.com is a little bit different, but still gives you some ideas. Okay. But start contacting banks. Start taking, that's why we talk about your LinkedIn. That's why we talk about posting content there. That's why we talk about getting a CRM and a landing page. These are things to help you, all right, help you grow and look more professional. Not expensive. You don't have to do this every month. Pick it a month out, start contacting, dialing for dollars, go on that route. If you're in an area where there's a foreclosure auction taking place, go to the foreclosure auction once. Go once or twice, start hanging out. You'll start rubbing elbows with other investors who've got cash to buy stuff. Okay. Next thing, start trolling conferences. You ain't got to attend conferences. I think attending most conferences is a waste of money. Oh, I like to break bread and network. Yeah, that's a great thing. But if you don't have the budget or you're halfway across the country, it doesn't make sense to spend a couple grand to go to a conference for panels. And that's what most of these things are, panels, or people who couldn't tell you how to market out of a paper bag. All right. We're always amazed that we see like things like the MNN, IMN, Information Management Network. We'll have a list of different events you can go to. Distressed Mortgage Expo will see a list of speakers or sponsors. The Mortgage Bankers Association, different servicing conferences. You can see who the speakers are, who the vendors are, stuff like that. Start trolling those. Go and finding those people on LinkedIn, connecting with them. Don't say anything negative, but just start contacting them. Start making those connections and say, hey, do you have anything? I mean, the speakers, the companies, the sponsors, and the vendors, that's a wealth of information. And it's pretty easy to find different funds that have stuff available, different note sellers. If you want to hire a VA to do that, that's what we've done. Taking a list of the previous attendees list or seeing who there and start reaching out to the key information, key people at those conferences, and it becomes a wealth of information that's just publicly sitting out there. Save your money, go do it now. Another thing to do that could be it's a more of an advanced strategy, but on some of these bigger conferences, I wouldn't waste my money targeting like a conference only get like 200 people at. But most of these conferences, since they're in person, you can identify the conference center location and then go onto Instagram or Facebook and geo-target and geo-market around that location, like a mile around that location for 2 or 3 days with people that have different interests, like real estate investing or income. Facebook's really good using the algorithms, and you can identify some great sources, offer up a free ebook or a free resource, or target, share an asset that's available for sale, your deal of the day. This will get some great people to reach out to you, and phenomenal thing. And you don't need too many people to reach out to. $20 a day, or for 2-day conference or 3-day conference, it's well worth it. It saves you a whole lot more money than buying a ticket to the event or flying out and have to pay a hotel and crappy food and airfare and Uber drivers and stuff like that. So work smart, not harder. Okay. This is a thing we've been doing for years. We target all the different conferences that take place throughout the year. This is a simple thing. And it's one thing that my VA runs for me. We give a list of conferences, we set our budgets, we look at where they're going to be, and we start trolling. Okay. Now, while you start trolling, it's also a good thing. We talked about deals of the day. We've also talked about marketing and foreclosures. You need to start raising capital. So start contacting self-directed IRA investors by going to your county appraisal district or your county clerk, county recorder's office, and start searching. Now, Equity Trust is the largest self-directed IRA company out there. There's quite a few counties in Florida, Ohio, Indiana, stuff like that, that you can actually download the list relatively easy of people who have purchased a property, investment property in their IRA, or if you're using the recorder, the clerk, people who have lent money out of their IRA to people for real estate. So go there, scrub it. This is where you're probably going to spend the most amount of money in sending out postcards, letter campaigns to people in your area. Besides Equity Trust, there are over 50 plus self-directed IRA companies out there, Avana, New View, American IRA. Find out who's near you. And if you're near an IRA company in your local area, see what they're doing, target their area, because that's really probably where most of their accounts are going to be, is around where they're located. And just start pulling lists and start contacting them. Start reaching out to people on LinkedIn. Start reaching out to people on Facebook. If you can pull their first and last name off it, which most you can, you don't need to drop expensive mailer postcards. Start contacting people directly. Hey, came across that you had a property bought with your IRA. Are you looking for more deals? Let's talk. I'm a note investor. This works to raise capital. You just got to reach out to people and follow up. 80% of sales comes after the 5th contact. And part about connecting with people on LinkedIn or connecting with other people is that you're posting, you will be connecting with them multiple times if they see your stuff, okay? Directing them to your website where you can capture their information, or they opt into your email list on lead pages, or REI Black Book is things to help you do all this work. You might as well start connecting and working smarter, because all that you really own is your email database. Okay, Facebook, TikTok, those accounts get shut down, you get booted out, you don't own anything. It's free. Start creating an email list so that you own that email list. Will people unsubscribe? Yes, they will. But guess what? If they unsubscribe, they're probably not your ideal client anyway, either to buy notes from, sell notes to, or raise capital, because everybody is one of those 3 things: a buyer, a seller, or a funding source. And this is to help you get funding sources by contacting IRA investors. Easiest thing to do. You don't have to explain what investing is. Literally, if they've closed on a deal, you know that they've got money and they're pull the trigger, versus working with a lot of tire kickers or trying to explain what note investing is or real estate investing is. That's a uphill battle we don't want to waste our time with. Okay. Start networking in your local area. Now, this is one thing I would go to, not flying across the country for a conference that you've never been to, but I would start networking locally. All right. Start connecting with people at your local real estate investing association clubs, BNI groups. You could go to all these BNI groups and attend basically for free once a year. Here in Austin, there's 40 groups. So once a year, I could go to 40 different BNI groups and meet all these professionals who are working hard, and many of them have money, but they don't have time to invest, and add them to my database or connect with them on socials. Okay. Great thing. Also looking your local area at different real estate meetup groups, meetup.com. Some are going to be good. Some are going to be shitty. A lot of groups have gone away during COVID. But look at those that are active. It's still a great way to network locally with local people who either be net investors or buyers or people looking for deals. Start networking local. One of the most important things to do. But the great thing, while we talked about, you can start doing this immediately. But if you have your website, you have your LLC, you got the stuff, you're going to look much more professional and stand out from all those that are just showing up and not doing shit. Look, if you want to be a 1%er, you've got to start doing things that the 1% do. Not what 90 and 99% of people do, which don't do shit. Start doing things and taking action. And this is one thing. But the previous things that we've talked about are going to help you stand out from the crowd, look more professional. That's going to help you raise more capital, get people to send you more deals. Okay. Now, here's the thing that's very important. Besides networking and putting people together, create you a newsletter and an email that you send out to your database. This is one thing that's still the #1 ROI when it comes to marketing, is an email blast. And I don't tell you to blast out daily. Once a week email to your warm market, your connections. The reason we put a newsletter up there, a newsletter is not meant to be complicated. Okay. Very simple things you can do with an email campaign or a newsletter. Now, LinkedIn newsletter is free. You can go to LinkedIn, create you a newsletter on there, change up a couple settings on there. Google, how do I create a LinkedIn newsletter? But I've seen people who have more subscribers to their newsletter than they have connections on LinkedIn. All right. Now, we have 30,000 connections on LinkedIn. I'm capped out at adding new connections. And we have just under 5,000 people subscribed to the newsletter. The nice thing about having a newsletter, if somebody subscribes to the newsletter on LinkedIn, not only will it show up in their feed, it'll also show up in their inbox. Okay. And why do we want to have an email list that we send out to with an email blast? It's just tell them what's going on. 1 week out of the month, you're going to say happy whatever holiday. One could be your deal of the week. One could be your meetup meeting of the week. There's other things you can do, but just connecting with people, getting that rocket rolling. 80% of sales comes after the fifth contact. This is one way to share what you're doing, what you're focused on, some of the deals, some of the different things going on in your market, and become an expert and connect. This is probably the most valuable real estate is the email database, and also a LinkedIn newsletter is also just as valuable. It becomes very, very handy besides the other stuff you're posting out. So this is going to help you raise capital more because you're going to be able to communicate with people and they'll be able to see your stuff. Now, if you just send a flat email out without going through a CRM like REI Black Book, you're going to have some people see it and other people aren't. Only about 20% of people in the email list will open an email. Now, we have 30-40% of ours because we do send out weekly and we add valuable content. We're not telling you to send out your recipe of the week, okay? But adding valuable content focused on what's in your market or the market that you're focused on in 2-3 states is a great way to do it. All right. But that's one of the most valuable things you can do is sending out an email blast and LinkedIn newsletter. Makes you look more professional. If you need ideas, go to my newsletter on LinkedIn, go to my profile, scroll down, you'll see the news and notes newsletter that we have and subscribe to it. We share podcast episodes, we'll share news, we'll share deal flow. The idea is you're adding value so that when you do need to ask for something for funding, those people are ready to and primed to do it. Only sending an email out once a month is not effective. And once a week, some people say once a day, you don't have time for that, but once a week is something you can set up and you can pre-schedule your emails to go out when you want them to go out. The best time to send an email out is Wednesdays. The next best time is like Tuesday or Thursdays in the afternoons or evenings. I also, Sunday night at 7 p.m. Central is also a good time as well too. And your CRM can even sometimes adjust for it to go out at everybody's 7 p.m. or one time. It just varies on what CRM you're using and going from there. But this is one of the best things. And honestly, this is where people most of the time fail. Okay. But stay consistent once a week. You can even take your email that you're sending out and copy it and make it into your newsletter, copy, paste it over, add an image, add subscribe here or something like that. Very, very simple, not difficult. Shouldn't take you long to do. Pick the 4 or 5 best articles, the stories. Heck, I could use Twitter. I could use Gigi, my AI assistant. Give me the 5 most important or the most interesting real estate articles in real estate. Actually, let's do that right now. I'll just show you how simple it is to come up with ideas for this because we use this on a regular basis. Okay, so let's go to Gigi here or Grok. It's free. All right, voice mode. Hey, Gigi, can you give me the 5 most interesting news articles about real estate investing in the United States today?
Sure. Here's what I've got on real estate investing in the US right now. First, there's buzz about the housing market showing signs of strain, with a record gap of nearly 500,000 more sellers than buyers in April, pointing to weaker demand and potential economic ripple effects. Second, fractional real estate ownership is picking up steam, letting smaller investors with budgets around $50,000 dive into commercial properties for better diversification. Third, the U.S. real estate market was valued at $3.43 trillion in 2024, driven by economic growth and urban expansion, but it's facing headwinds like rising interest rates and construction costs. Fourth, Compass is stirring things up, claiming Zillow's banning property listings if they don't appear on their platform within 24 hours, which could shake up competition. Finally, home prices are creeping up at their slowest pace in nearly 2 years, with high mortgage rates making affordability tougher for investors and buyers alike. That's the Pulse today. Pretty dynamic stuff. Want me to dig deeper into any of these?
No, Gigi, thank you. What are some ways that we can share these articles across social media or these 5 stories? What are some ways that you would recommend people use to get the word out and make it more searchable or to grow their network?
Great question. You can share those real estate investing stories on social media by posting engaging snippets with eye-catching visuals, like a quick stat about that 500,000 seller-buyer gap, paired with a bold graph on Instagram or TikTok. Use short, punchy videos to summarize each story, since platforms like Instagram and Facebook prioritize video content for better reach. Think a 30-second clip on rising home prices with a question like, "Is now the time to invest?" to spark comments. Add hashtags like Mad Real Estate Investing, Mad Housing Market, or Property Tips to boost searchability, and include location-specific tags if you're targeting local networks. On LinkedIn, share detailed posts with your take on the market. like why fractional ownership is a game changer, to position yourself as a thought leader and grow professional connections. Encourage followers to share client stories or insights in the comments to build engagement and authenticity. It creates a participatory vibe that keeps people invested. You could also join LinkedIn groups or real estate forums to post these updates, sparking discussions that expand your network. Want tips for a specific platform?
No, thank you, Gigi. Have a great day.
You too. Let me know if you need anything else.
And as simple as that, I like using Gigi. She's I call her Gigi. It's actually Grok, but she got a female name, a female voice, stuff like that. But if I need ideas, that's the place I go. Give me 5 ideas for an article. Worst case, it's right there, and you ain't got to be the brilliant person to think about it. Leverage some of these tools to share across your social media, across your email list. Help you grow, guys and gals out there, because there's so many people just posting into these stupid Facebook groups that don't have that many people, and you're not going to grow that way by just continuing to recycle to the same tired list of people out there. Expand, get outside your comfort zone, and use these 10 strategies to help you grow your note investing business in the second half year of 2025. So go out, take some action, buddy, and we'll look forward to seeing you at the top. Bye, everybody. Hey, note investors. So you want to dive into the world of note investing, but know how to get started, or you don't want to pay $30,000, $40,000, $50,000 for a one-on-one coaching program that just completely does not deliver the deals or the funding or the access that you need to take your note business to the next level. That's why we have our one-on-one coaching program. I'm Scott Carson. I've been buying notes for 20 years. I've helped thousands of investors buy their first note direct from banks using either their own funds or other people's money to buy non-performing, reperforming, or performing notes, yielding them an above average return. Now, what's involved with my one-on-one coaching program? It's unlike anybody else's, because guess what? You're working with yours truly, not some paid student, not looking at some recycled list of stuff. Now, what we do is differently than anybody else out there, and that's why we have such a huge success rate with our one-on-one coaching program. What's involved? Well, once you take in our 3-day class, our Note Buying for Dummies workshop, sign up for our coaching. You get 10 weeks of one-on-one coaching calls. These are on Zoom in the morning, the afternoon, the evening. What works best around your work schedule? We accommodate this to help you start looking at stuff. And during those 10 weeks, we focus on finding deals, making offers, getting your website, your social media stuff set up so that you are a lean, mean note buying machine. After spending 10 weeks of Zoom calls with yours truly, that's right, live, not somebody else, we'll spend 2 days one-on-one. And usually people come to Austin, Texas to hang out with us on a Thursday, Friday, or Saturday, Sunday. And those 2 days are focused on whatever you are still lacking and need the most amount of work on. Sometimes it's making offers. Like Larry came in, we made 50 offers that he got 20 approved in a weekend. Other people came in to raise capital. So we helped them find IRA investors to fund their deals so they're able to raise hundreds of thousands, if not millions of dollars for their note deals and other investing stuff. We're also going to give you a list of asset manager contacts for you guys to dive into. That's right. This will be either LinkedIn profiles, emails, phone numbers, names, all for you to start reaching out to people. No, you don't need to buy notes directly from me. We're going to show you how to go to banks and contact them directly. We're also going to make introductions to our top 12 hedge fund managers that send us deals on a weekly or monthly basis. That's right. You go straight to the front of the line. And guess what? There's no 10, 20, or 30,000 upcharge for the deal. You buy direct from the hedge funds because we make the introduction. That's why, why do we do this? Because we know, not we believe, we know there are more than enough deals to go around. And yes, we make most of our money from buying note deals for ourselves. Some people will say, oh, you're creating competition. No, because there's plenty to go around. All right. We're also going to give you a 1-year membership to our WCN membership for 1 year. That's $97 a month usually. That's going to allow for you to continue support, weekly coaching calls, along with access to our Basecamp group for other things, other tapes, other resources for our coaching students. We're going to help you with raising private capital, putting your pitch deck together, putting sample deals together, or either case studies that we've done, other students have done, or that you're doing, so that you help raise capital or help you find IRA investors in your local market or the markets you're looking to buy in. You're going to also, basically, for you plus your partner, spouse, person you're going through this with, you're going to have VIP access to me. That's right. Whether you need to jump on a quick phone call, a text message, a quick Zoom call to go through tapes or notes that you're making offers on for us to review your bids, or to help answer a question when it comes to loss mitigation, foreclosure, bankruptcy, whatever it might be about a deal you're working through, get VIP access to me most of the time. Come on now, everybody. We're also going to do a 6-month follow-up day after you spent 2 days with me. 6 months later, If you want to, we can do a half day, a full day Zoom follow-up just to see where you're at, what are you dealing with, where you're looking to go. Because within 6 months, you should have already closed on several deals the way that we teach them, because we will help you find your first deal and then some. We've had students who've closed on their first deal in 30 days. We've got others who've closed on 6 deals in their first 35 days. Other people have closed on 100 deals in their first year. We're here to help you because guess what, ladies and gentlemen? There is plenty of inventory out there. We're not going to focus on owner finance notes. We're going to focus on how to get people calling you with their deals or how to get banks sending you lists on a regular basis that you can cherry pick and show you how to raise all the capital that you need. Our one-on-one coaching program is the most complete program out there. That's why you have such a high success rate. And it's cheaper than most of the others out there. And we also give you the biggest bang for the buck by helping you make the introductions, looking at the tapes, helping you bid if you are coachable. Now, not everybody's coachable. Not everybody can afford this, but what we can do is we can set up payment plans and different options for you. I encourage you to either book a phone call with me at talkwithscottcarson.com and we can talk about it, see if you're a fit. Not everybody's a fit, and that's A-okay. But go to talkwithscottcarson.com, book a call on my schedule, and we'll gladly talk about our one-on-one note coaching program to see if you're a fit. One of the very requirements is we do require people to go through our 3-day class, but that whatever you've paid for that 3-day class is applied to the tuition for your one-on-one coaching. And we also have a third-party provider who's willing to finance this and carry financing for 2 to 3 years to help you pay it off. But we're going to work with you until you get your first deal closed. We want to help you make your money back in the first 6 months, if not sooner. So check us out. Pick up the phone. Give me a phone call. Talkwithscottcarson.com. That's talkwithscottcarson.com. Book a call, and let's see if you're fit to take your business next level. Sometimes all we need is just a hand up to take you to the next step, to show you the way. This is not a blow smoke up your tail, give you the crappy tapes left over, or upcharge you $10,000, $15,000, $20,000 per asset. No, we want you to buy direct, and we've always found if you can show a man how to fish, you'll feed him for a lifetime. So let's get started, you being a note investor for the rest of your investing lifetime. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closer Show. Happy Monday. Hopefully it's nice and warm where you're at. It's kind of a little dreary gray day here in Austin, Texas, but it's not going to stop us from having some great stuff. This episode is dedicated to, I can't remember who reached out to me, but in the last couple of weeks, we've had people like, hey, how do you find non-performing notes? And somebody posted this weekend on LinkedIn, like, oh, there's no notes available, non-performing notes, and only stuff I'm seeing is crap. And I would agree to the second part. A lot of times, if you're just dealing with a low-hanging fruit and allowing your LinkedIn network or your Facebook network or Facebook groups to send you lists of notes, you're probably going to see a lot of individual notes, a lot of land notes, a lot of performing notes, people originating notes and trying to sell those after closing. Or you're going to get some folks out there that get some lists in that are a mixture of first and seconds. And that's what I have seen, because the guy posted a snapshot of the spreadsheet, and it was a bunch of first and seconds, low balance seconds, and a lot of low balance first. And I know who sent that out. And that source doesn't have a lot of good quality product to take a look at. They're not direct to a lot of banks. They may have a couple sources, but they're mostly from the second lien space. And there's not a lot of second liens recorded out there, or originated, I should say, in the last 10 plus years. Okay. We're starting to see more seconds come back on the market as people are cashing out the equity in their houses and don't necessarily want to refinance their firsts. But there is still a tremendous amount of non-performing notes out there. I mean, we're at about a 3% default rate. If you figure that at 80 million homes, mortgages across the country, that's still 2.4, somewhere between 2.4 and I'd say 3 million in loans that are non-performing across not only banks, but also private sellers, REITs, investment, mortgage companies and stuff like that. So the question is, how do you reach out to direct sources? Now, this is one thing that we have specialized in, and we're one of the few note educators out there that teaches this niche of note investing. A lot of people will say, oh, you're too small. Asset managers won't deal with you because you're too small. And that would be 100% correct if you're only targeting like Bank of America, Chase, Citi, Wells Fargo, some of the bigger banks, okay? Or you're targeting like these big commercial REITs or commercial notes, right? Like on a big 50 million, 100 million apartments out there. You're not going to go close on those. They're not going to deal with you because they can smell that you're inexperienced. But there's still plenty of different lenders, contacts that you can make that will send you lists of non-performing notes that you can cherry pick from. Now, you're not always dealing with Gordon Gecko, okay? Across, an intimidating character like that, even though fiction, a lot of asset managers at banks can come across like that, can come across as just assholes. And unfortunately, we see that kind of happening in the smaller space where, some of the people, if they're trying to sell notes, just come from being an ass, and you can't be that. Especially when they started off buying a one-off note a few years back. And we've taught plenty of people how to buy direct from banks and lenders, how to make those connections. And you don't need a lot of asset manager connections to really tap into a wave of notes for you to take a look at. All right. Now, if you're targeting seconds, yes, guess what? You're not going to be happy. I'm sorry. If you're chasing seconds, it's not a bad strategy. It's just not going to be very fruitful because you're not going to see a lot of great product out there. All right. I've only bought a few seconds in my life. They were behind the first that I owned because I found it easier to raise capital, being in the first lien position, and more profitable. Bigger checks. Yes, the ROI could be higher if you bought a second at $1,000 and held onto it for 5 to 10 years so the borrower actually paid you off. And that's possibility, but you're not going to buy them at like 5 cents on the dollar like you used to. You're not buying first at like 5 to 10 cents on the dollar like we used to. We're still buying them at a significant discount compared to traditional real estates. And so it leads to a lot of great deal flow. And the more you market, the better off you're going to be. Like when I first started, I challenged myself to make 100 asset manager contacts in the first year. Well, I tweaked that at the end of the first month because I made 100 asset manager connections in the first like 30 to 60 days. So my challenge was to get to 1,000. I did that in the first 12 months. And you can do the same thing too. It's actually easier right now. It is easier in today's world to connect with asset managers than it ever was back when I started this doing, 2004 to 2008 when we started reaching out myself. Now, there was, less then, there's more now, but it's easier to connect with the right individual through the use of social media, through the use of skip tracing things. We'll get into that, okay? And no, some people, I was talking to a guy this last week, and he said, well, I don't have 40 hours a week to turn this into a thing. I was like, well, you don't need 40 hours a week through some of the automation tools that you can use that work with LinkedIn or email blast, script marketing. Those things don't take a lot of time to do once you set them up. Okay. Yes, it's going to take you your first hour or two in setting up your first email blast to an email database of asset managers once you build it. But guess what? You can set up automated marketing. You can use like Octopus CRM to connect with people. There's some great skip tracing tools out there. You can hire a VA to do this for you for 20 hours a week. So I want you to take it from that aspect because there is a possibility. A lot of people have closed mindsets out there that there's no notes available. Some of our haters out there, oh, you can't find non-performing notes, not the way this guy does. Yes, you can. You just have to understand it is a process. Like any good thing, 80% of sales are made after the 5th contact, okay? And so you have to follow up with asset managers on a monthly basis because these guys are busy. They don't have time to sit around reading your Facebook posts, all right? They don't have time. If they don't have something right now, they're probably not going to send it to you, all right? But the whole idea is that they're going to forget about you 10 minutes after you make a phone call or make an email. But you got to set up systems so you can touch base with them through a drip marketing campaign. And we'll talk a little about that later on. But anyway, let's get into some nuts and bolts. I'm opening this up for questions, whether you're joining me live or watch the replays. I answer my questions. So if you have a question about something and I don't cover it, feel free to type in the comments and I'll make sure and come back and make sure to address it and or give you some resources to make this happen. So now here's the one thing you got to realize too, everybody, is what's the best way to say it? You might need to have a little bit of thicker skin. If you give up on things, you send out 10 like disc letters. Oh, it doesn't work. People don't call me back. Yeah, they're not going to call you back until you've actually connect with them, get them on the phone, get their, assistant or gatekeeper to connect with them. I mean, this is one of the great things that we used to love doing is we would do call blitzes. We would make, 3, 4, 5 weeks of call blitzes and get 20, 30 people on there. But people don't want to do that. Okay. So if it's easier than it's ever been before, I'm going to tell you that right now. And if you follow through with what I teach you here in these next 30 minutes or so, you'll find asset managers. Okay. Now, the first thing you got to realize is there are best practices. There are things you want to do and things you don't want to do. What you do not want to do, I had a realtor call me up and said, well, I'm calling these bank asset managers, tell them I'm looking for notes and REOs. That's the first thing you don't want to do. Don't mention REOs, okay? All right, well, I want bank REOs. I want to get those listings. Well, then just go deal with the MLS, because here's what's going to happen. If you're calling for foreclosures or REOs and you call the office of the bank, we call loss mitigation, guess what? They're just going to send you to the foreclosure department, and your message is going to go to a voicemail box that nobody checks, or it says call the listing agent. Banks do not need REO agents right now. Okay, if you're trying to find REOs or foreclosures, just jump on the MLS. I'm not going to sell you my REOs at a huge discount. It doesn't work that way. If I'm buying it in or foreclosing on the note myself, because it's a note that we bought, we're not going to sell it at 70 cents a dollar. We're going to sell it at the full value, unless it's trashed out or something like that is issues. We're not looking to just give you a 30% discount because it's a foreclosure. No. We bought it at a discount with that idea in mind. But anyway, LinkedIn is still the #1 spot to find asset managers. Okay, we'll talk about that. And you don't have to spend hours and hours and hours on LinkedIn to accomplish this. Okay. Next best thing is industry events. Yes, there is actually industry events out there that you can log on or go to the website and see who's attending, the vendors, the sponsors, the speaking schedule, and see the job titles of these people speaking. That's a phenomenal way to find things. Network, reach out, follow up with people from past events. Email is still a phenomenal thing to do. Yes, email. Okay. Remember, we said this earlier, 80% of sales comes after the 5th contact. You're just not going to send one email to people and they're going to turn around and send you all these notes. Okay. You're only going to see about probably a 15 to 20% open rate. And we'll show you that you have to follow up and follow up and follow up to people to automate. But this is where you're not talking. You haven't picked up the phone once yet in what we're talking about, okay? Phone calls, though, do go through. It's still a good phone call system to pick up the phone and dial for dollars. Now, this phone may feel like it's a 1,000-pound phone in a lot of cases, okay? Oh, my green screen's kicking in here. But this is still a very valuable thing. A lot of business is done this way, commercial, residential. We've gotten bank asset managers to call me based off social media posts about specific asset classes that we're buying on or working through, or foreclosures we're working through. This still works well to get asset manager. I can tell you, people have booked plenty of phone calls on my calendar. We've had great conversations with large asset managing firms or REITs and trusts and stuff like that who are looking for stuff, who have stuff, okay? So let's first dive into LinkedIn. LinkedIn is the simplest thing. If you don't have a LinkedIn profile, go get you a profile and make it look professional, okay? If you're not going to be professional on LinkedIn, you're just shooting yourself in the foot. I'll give you a great example. We've got this person in our WCN membership. They've been through the class, one of our classes a couple times. They will not update their profile. It's still this old grainy profile photos that you can't really see them. You can't tell if it's a guy or a girl when you're rolling through it, okay? There's no logo behind you. It looks like crap, okay? And if that's the message you want to portray to people, that you look like crap, well, guess what? Asset managers aren't going to give you the time of day. You have to look professional on LinkedIn, okay? You've got to have a good profile photo so they know what you're talking about. Not a fake profile photo. Don't put your logo up there, okay? Because when you start searching for job titles, specific job titles on LinkedIn, they're going to go look at your profile, and that's the first impression. Well, does this guy or gal know what the hell they're talking about? Does it look professional? And it doesn't take much for you to do it, all right? Let's see, got a comment here. Well, we got, hey, SK, that's my crap profile. No, I'm not talking about just yours. You need to update your profile. We've talked about this many times before. This is not a bash, but with what you want to accomplish in finding note deals or raising capital, you have to look professional. You've got to give a great first impression. If you're not going to do that, you're going to keep banging your head and running into it. And I say this with love because I know that you're capable of doing it. I don't get why you haven't done it, okay? And If you don't know, you don't know. I get it. But if I've told you 2, 3, 4 times, guess what? Go do it. It's not going to hurt you. Okay. Because when you start searching for these specific job titles on LinkedIn, special asset manager is one of them. I mean, literally going into the search on LinkedIn and typing in special asset managers and seeing who pops up. Secondary marketing manager. You're looking for people, doing a people search by their job titles. Secondary marketing manager, chief credit risk officer, hold and loan trading. Even looking for capital markets manager is a newer one. We see a lot of people that have this. Okay. You're going to see thousands. Now, if you have a very brand new LinkedIn profile with 0 connections, it's going to be hard for you to connect with a lot of people. LinkedIn's going to limit your ability to probably 20 a week. You're going to have to pay to upgrade your LinkedIn profile, and then you can start connecting with like 100 to 200 people per week as you start connecting. Okay. Now, we have capped out our LinkedIn connections. I have followers now, but LinkedIn caps you at 30,000. I don't know why they do that. They should really adjust that. But we used a service called Octopus CRM, a simple Chrome plugin that works specifically with LinkedIn. I could do a search on my LinkedIn profile for special asset managers, second degree connections, and then I could go to Octopus, and Octopus would pull over 1,000 of those profiles into the Octopus CRM. And then every morning when I get up, before I go for my morning walk or before I do anything else, I would go to Octopus and I say, okay, send out 100 connection requests or 20 connection requests or 50 connection requests to this list of special asset managers, or my list of secondary marketing managers, or my list of chief credit risk officers, or my list of IRA investors, or my list of note investors. And it would send out connection requests with a little bit of option. Hey, SK, see that you're the special asset manager for ABC Bank. Would love to see if you've got anything on your books that are looking to sell this quarter. And that was the first touch. Okay. That was the first contact in reaching out, sending a request to them. All right. And those job titles, there's millions and millions of people out there. Okay. Now, one thing is that if you see that somebody has a job title, looking at their profile is important, because if they haven't posted anything in their profile, they don't have any connections, guess what? They're not going to be checking LinkedIn for your invitation requests. And that's okay. If somebody doesn't respond to your LinkedIn connection request in 30 days, delete them and go pull some more over to reach out to people. Okay. But that's the first thing. LinkedIn, this is where everything starts at in the note investing space. It's one of the easiest places. It's not the dumpster fire that Bigger Pockets is, or Connected Investors, or these Facebook groups, but LinkedIn is still where business is done most of the time, first and foremost. And it's a great way to do it by looking for those job titles and just sending, hey, I'm looking to see if you're the right person at your bank that handles your note sales. Okay. Are you looking to sell anything off? Are you, not looking for notes and REOs? We don't waste our time doing that. Okay. We don't waste our time asking for REOs. That's a waste of time. I can't tell you how many times to do that. And don't bother contacting like Bank of America, Chase, Citi, Wells Fargo as well with these job titles, because they're going to want a $50 million to $100 million purchase. And that doesn't make any sense. You're not going to find a lot of good deals there because they're overpriced in a lot of cases. But you're still going to find plenty of institutions, plenty of smaller banks, regional banks that have stuff on their portfolio that they need to sell on a pretty regular basis, at least once a quarter in a lot of cases. Okay. Capital One, we get stuff from them on a quarterly basis. To just give you a bit of a bigger name, US Bank, M&T Bank, just some of those out there that we deal with. Citizens Banks and stuff off on a pretty regular basis too. There's just a few that can be done. And what's going to happen when you make that connection with the asset manager, they're going to send you what's called a non-disclosure agreement you got to fill out. They may ask you to fill out some information on your LLC, Patriot Act stuff. That's normal. Send it over there. But guess what? If you have a crappy profile, or you don't have anything talking about investing, guess what? They're not going to take you as legit, and they're not going to waste their time. Okay. The great thing about LinkedIn, though, is if you've got a profile, paid profile, you can actually see who's looked at your profile. That's a benefit. Okay. One of the great things that I like doing is going in once a week and looking to see who's looked at my profile in the last week, and actually reaching out to send them messages or connecting with them if I can, or asking them to follow them, since I can't connect with them anymore. You get what I'm saying? It's just a process, but you've got to spend a little time here on LinkedIn. This is not spending 40 hours a week. We're saying spend an hour, 2 hours a week on LinkedIn. And it doesn't hurt to post something about note investing or real estate or deals that you've done. That's going to add value as well. All right. Or articles about investing. SK asked, they're going to ask you to sign an NDA, non-disclosure, and what else? There's probably going to be a document. It's kind of with the Patriot Act information. They're going to ask you for your LLC information, your tax ID number for your LLC, articles of incorporation, some will do that. Rarely they're going to ask for proof of funds, but they may ask you, what are you looking for? What do you want to, what's your exit strategy? Some of that stuff, some of the basics of making sure that you're an actual legitimate business. All right. Now, if you're just an individual with no LLC, they're not going to give you the time of day. But if you've got a business or an LLC, great. What's the company that you're going to be buying in? That's what they're going to look for. Kind of like a buyer's profile sheet. All right. Now, after LinkedIn is going to industry events or paying attention to industry events is what I do. I don't attend industry events a lot. It's not worth my time to spend a huge ticket, because these big asset manager conferences or things like that, it's going to cost you $1,500 to $2,000 to go to. It's not really designed for the solo note buyer or the smaller mom and pop note buyer. Now, if you want to go spend some time and sound good, yeah, go do that if you want to. I've always found it more valuable for me to actually be smarter, work smarter, save my money, and target industry events to go out and find the people they're going to. Because if you look for special servicing conventions, or you look for mortgage banking associations that have their monthly or quarterly event, there's a big Western secondary marketing conference, there's an Eastern secondary marketing conferences, these big once a year conferences or servicing conferences or industry events, you can find plenty of asset managers there, okay? Like if you look at the registration list for these events, sometimes you'll be able to go to the website and find the registration event. Or like IMN, Information Management Network, if you're on their emailing list, they'll send you a list of who's attending, the job title and the entity. So if it's really easy for you to pull a list, there's 800 people going to this event, or 400. What are the special asset managers? What are the capital markets? What's the chief credit risk officer names? And then taking that info and going over and searching for that name and job title off of LinkedIn, or hiring, like I do, hire a skip tracing company or a VA to take that list and go over and find their URLs or any contact information as well. Or trying to find a phone number for them. Okay. If you're going to be calling the banks, do not call the loss mitigation number. Don't call customer service. If you can, try to find the main corporate office number for these banks and institutions. Then you'll get a switchboard operator or somebody at a front desk who can direct you in the right direction. If you just call the customer service number or the loss mitigation, they're not going to know who the hell to send you to. And that's a waste of time. Okay. But look at the speakers, look at the speaking schedule. If an event is nearby you, go hang out at the event. Don't go pay for the event. Go dress like you belong, dress professionally, and go hang out at the bar. Usually most of these places have a bar right next to where it's going on in the conference center. You usually can get to that bar pretty easy. Maybe it'll act like you own the place and just walk in. Maybe they've got a vendor hall you can get into pretty easily. Who knows? But look who's on the marketing. Who's the speaker? What's the schedule? Those will give you names and contacts that you can reach out to after the event or before the event to see if they've got anything or who the right person is over there. Okay. Look at the sponsors of the event. This is the easiest thing to look at. You see the sponsors of a mortgage event. You'll see the banks, the asset managers. Hey, then go to that company's website and look for the investor relations tab. But most of them will have a tab or a PR contact name to reach out to and say, hey, I'm trying to reach down to contact the special asset manager or the secondary marketing conference person. Okay. But that takes a little time. Yes, you can hire a VA to help you out with that. They just tell them exactly what you want them to do, and you're off and rock and roll. Okay. Email and phone calls. Oh my God, the dreaded email and phone calls. Okay. This is still by large the best way for you to systematize your outreach, by sending an email at least once a month to your list of asset managers. You can buy a list of, licensed servicers or licensed mortgage bankers. You can pay for it if you want to, but you can often go and find them at this different state licensing websites. Like here in Texas, we can download a list of mortgage bankers and servicing companies and reach out to them via email or the person in charge of licensing. And that gives us an in and say, hey, who's in charge of this? Who's your business development guy or gal? Okay. Phone calls. You still need to make phone calls. If you got a phone call with somebody, it's a direct line, cell phone, pick up the phone and call them. If it goes to voicemail, leave a message. Okay. 80% of sales comes after the fifth contact. This is the number one and number two areas where people drop the ball. I don't want to speak on the phone. Okay, don't speak on the phone. Send them a text message if their phone. But leave them a message with your phone number clearly stated or an email address that's easy for them to respond to. If you've got a complicated LLC that is not easy to spell out, or it's all long, keep it simple. Like that's why I have Scott at weclosenotes.com. Very simple. Okay. Very simple entity. And now I have multiple LLCs we buy in, but that's my big thing. Of course, I have a website. A website's important these days for people to see it. If you don't have a website, expect to have an executive summary that you need to send in. Sometimes these asset managers are like, okay, let's see, you pass the muster, you're on LinkedIn. Tell me what you do, or can you send information about your company? And we have an executive summary that we send over to them from the review. And they're like, okay, this guy is serious, or this company is serious, and go from there. You have to realize that, yes, you can jump back to LinkedIn and send a direct email to a lot of people. If you have, you get what, 40 or 50 emails a month to send out to if you got it paid. That's great. Okay. But look in LinkedIn groups too. All right. Besides just doing a search, look in some of these big asset manager groups for direct contacts to send to. And if you've got in a group together, you can reach out and contact that person. Hey, we're in this LinkedIn group together. I want to see if you're the right person in your bank who sells your notes. We're buying for our own portfolio. Okay. If you've got a mutual connection, ask for an introduction. Hey, Jim, or hey, Scott, I see that you're connected to these asset managers. Would you mind making an introduction? And, that'll work sometimes, and other times it won't work. If somebody calls me up and says, or hey, would you make an introduction? I look at their LinkedIn. If they don't pass the muster test, I'm not going to do the introduction. I don't want it to look bad. But somebody knows what the hell they're doing, I'm glad to make an introduction in a lot of cases. And of course, taking that list of contacts or emails or phone numbers or registration list, there are services that you can use to skip trace or search for emails. Okay. Some skip tracers are better than others. Okay. I like using Rocket Reach is a pretty good, cool tool. It's a Chrome plugin. If I'm looking for a specific contact name or email, that gives me a lot of good phone numbers. There's a freer version that doesn't give you the phone numbers. It gives you the emails in a lot of cases, and that works well because I'll just harvest those emails, drop it into an email blast, and send out a drip marketing campaign once a month. What's drip marketing? Well, drip marketing means it's dripped every month. So basically, I can pre-write my CRM, my email platform. I can pre-write 12 months of emails. All right, and as I add email contacts, I tag them my asset manager list. So like if I write emails for 12 months and I keep adding people to it, guess what? I don't have to send out individual emails to new people all the time. It's already pre-written, pre-scheduled to go out, usually the first Tuesday of the month. And then it follows up with a Thursday. The next Thursday, it goes out as well as a reply. There's a whole system for doing that. But email drip marketing, I have asset managers that still call me up and say, hey, I got your green email, because it's formatted to be green, and they want to see stuff. If I'm following up with them consistently, it helps me build rapport with them because they know I'm not giving up. I'm not just a flake. A follow up on a monthly basis is so important. Now, when you send an email blast, you're going to get email responses from people who are either out of the office. That's what's OOO. Read those emails, because it'll often tell you, I'm out of the office for the holidays, or I'm out for personal reason. Contact this person at this number or email address, or contact these people. Those are so valuable. Take those contacts and put those into your contact database to market to as well. If somebody's left, okay, all right, you get an email back, oh, so-and-so no longer works for the company, contact this person instead. All right, great. Now, if it bounces back where the email's bad and it's no longer a big thing, now keep that name. See if you can't find somebody else at that bank or institution and say, hey, I'm trying to contact the new person in charge. I see that Jim Bob has left. All right. Who replaced Jim Bob that I could talk to? All right. Or reaching out to people on LinkedIn and say, hey, Jim, I saw that you left the company. Who's the right person I need to talk to right now? Because people don't always update their LinkedIn. And that's one thing I get from people on LinkedIn, like, oh, I left the company a year or two ago. Oh, my apology. Do you have any idea who I would talk to? And a lot of times they'll give me names and emails that I'll follow back up with. All right. And make those connections. It works well. It's just that follow-up process. It's part of the marketing side that most people won't do. And that's why you're not finding deals. And like I said, rocketreach.co is a pretty cool tool to type in, taking a person's LinkedIn URL for LinkedIn, put it in there, and then Rocket Reach will go out and find contact information for you. I mean, the biggest thing you have to realize, ladies and gentlemen, is defining asset managers. Yes, some people will have stuff once a year. Others will have it once a month. It's what you have to do. If you want to get more inventory, more deals to look at, you have to broaden your network, broaden your contact list, because people that were selling notes 5 and 10 years ago have moved on, or they're not selling those notes. But there are always banks, always note originators selling their non-performing stuff because people are still non-performing. Okay. Yes, it's a low default rate in a lot of cases, but there's still people defaulting, especially when you start looking at what happened economically wise right now. Highest default rate of credit cards, highest default rate on car loans, highest default rate in student loan debt, right? It's a house of cards that's coming crashing, all right? Now, if you're looking for commercial notes, I would still do the same thing besides residential notes. Just look for your commercial asset manager, your commercial special assets, commercial events. There's plenty of people out there, all right? Now, if you really want to find more about how to find asset managers, how to connect with people, come attend our next upcoming workshop here in just a few weeks here in Austin, Texas. It's called Note Buying for Dummies, our virtual note buying workshop, all right? It's be February 14th, 15th, and 16th. The first full day is all about finding deals, and that means finding asset managers that have stuff. We'll walk you through the process. We'll share some of our tools in depth for you. We may even give you a couple lists of asset managers for you to take a look at that you can actually immediately go out and start contacting people for assets, for deal flow. Day 2 is all about raising capital and money and marketing. And day 3 is all about making money and putting the deals together and finding the deals from the duds. So if you go to notebuyingfordummies.com, you can get signed up there. I think there's still a discount code for you to attend us in person. If you're watching this after February 16th, our next in-person workshop is probably going to be later in August. We'll have a virtual workshop online somewhere in probably early May. All right. But any questions, comments, concerns? Look, finding asset managers is easy to do if you'll systemize it. If you're not doing that, you're not emailing, you're not jumping to LinkedIn, you're not going to find anything. You're going to have to rely on your, I'd hate to say it, but crappy contacts that don't have good stuff to find stuff. So plenty of deals, low. And what happens, the great thing you have to realize, ladies and gentlemen, is not many people are doing that little bit of reaching out to asset managers. They're not doing that. They're not sending an email blast. They're not drip marketing. They're lazy. Most people are inherently lazy. I give you that. If you've got 2 or 3 sources to send you notes, you're going to take, I got notes coming in. Well, if it's crap and bottom of the barrel stuff, it's time for you to go back and start marketing again. And a lot of people haven't done that or aren't doing this, but this still works, ladies and gentlemen. This still works. I'm proof. We get lists in all the time that we target, cherry pick. It's part of the stuff that we break down on a lot of these lists. If you look at our YouTube channel, you'll see us going through 66 reverse mortgages or going through 289 non-performing first. If you want deals, guess what? You got to market. And most people are not going to market. All right. If you haven't updated your LinkedIn profile, go update your profile. All right. It's not hard to do. And if you're just going to not do it, then go do something else. That's all I can tell you. All right. You're only harming yourself by failing to take the action to update it. Get a photo, take a selfie and put that up there. That's one of the first things. Create a header in Canva for your header behind you. Start posting things about note investing or real estate or distress stuff. Those are things that are going to help you take it to the next level. And actually, when you pass the smell test, you'll pass it versus stinking like nothing. All right. So go out, take some action. Get signed up today for notebuyingfordummies.com here. And we look forward to see you here in Austin, Texas, live for 3 days, Friday, Saturday, Sunday. And we look forward to helping you take it to the next level. And we'll see you at the top. Bye, everybody. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, Scott Carson, excited to be here with you today. Today's episode is a public service announcement. It's a PSA. Why? Because of this. There's a lot of bullshit out there right now in the markets, and I have to laugh. As a real estate investor of over 20 years, okay? Bought my first property in 2001, all right? 24 years, right? And being an active investor a note investor for over 15. I've seen a lot of the stupid shit that happens out there. A lot of people just absolutely talking out their ass. Blah, 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 blah is right, yes. And there are people out there right now talking about note investing, talking about doing things, and people are watching old videos from years ago, thinking they're an expert, thinking they're a jack of all trades, or they watched one podcast episode or one freebie class, one pitch fest thing, and they think they're an expert at some things. I can't tell you how frustrating it is when you try to help somebody who's marketing themselves and you try listen, don't say this, don't say that. You sound like a joker broker. You sound like you don't know what the heck you're talking about, and they will not take your advice. So And I've seen more and more people, and I don't get why people are doing this. Whoever they're learning this from is the worst thing they can do. It literally makes them look like a joker broker. So I thought we'd have a little bit of fun. Okay, a little bit of fun today in this episode to tell you the 10 reasons or the 10 ways to tell that you are a joker broker. We're going to do it David Letterman style, late night. You know what I mean? We miss Dave because the original late night TV was pretty good, him and Carson back in the day. People getting canceled, which I think is kind of good these days because late night TV is just a mess, but it's a mess. But anyway, let's dive into our special Note Closer Show Top 10 list. 10 signs you are a joker broker. All right. 10 signs you're a joker broker. All right. And I get it. Some people don't know because they just don't know. But when somebody tells you something and they don't do it in a mean fashion, they're trying to help educate you and you keep doing the same thing or you pay no heed to them, then you are shooting yourself in the foot and you deserve to be made fun of a little bit. Okay. And what's sad is I see the same things that's happening more so now that took place back in 2008, 9, and 10. So let's get into it. Yeah, baby.
Yes.
Yeah. The top 10 list, 10 signs you are a joker broker. Number 10. Brrr. You can't answer questions about your deal. That's right. When I ask you questions about the deal that you are talking about or the asset you have and you can't answer questions about your deal, that tells me you are a joker broker. Look, I have nothing against brokering a deal, but know what the heck you're talking about. Look at the spreadsheet. Look at what you send out beforehand. And this is one of the biggest differences in joker brokers and people who are actually really good brokers. I buy from brokers, but they know what the heck they're talking about. They know some of the details, or if I ask them a question about it and they don't know, they can get that answer back to me in a timely fashion. They know what's on there. They're providing color about the deal. All right. But if you're a joker broker and you're just slapping shit against the wall, you can't answer any questions, you don't know what the heck you're talking about, that's my first sign that you are a joker broker. All right. Sorry, but that's the case. You can't talk because you are full of. Exactly. Ain't bullshit, it's horseshit. All right, let's move on. Number 9. Drum roll, please. 9, you send out sanitized lists with no addresses. Yes.
Well, yes.
That's a sure to tell sign you are a joker broker. All right. And it's, I can't make an offer off of a sanitized list where there's no addresses, right? Exactly. I just can't do it. I can't, we got a listing today from a broker, and I want to say he's kind of a joker broker. It was a PDF. It was an Excel spreadsheet on a PDF. Like I can't even look at it to run formulas. It doesn't give me any, the address to the street address is removed. It doesn't show principal and interest amount. It's just PITI. I'm like, man, look, I get it. You're telling me it was a 20-year interest rate note, interest only, and they know what the amount of finance. I could run a number on it. But since it's on a PDF, I can't run a simple formula, okay? And I can't sure as hell look at values based off of a street name or just a city, state, zip, okay? There was one big guy who was trying to sell assets with values with no street address. It's like, well, the value's there. We'll tell you what the address is once your offer is approved. And I'm like, that's not a good way to run a business. That is just pure.
Sure.
Exactly. Don't do that. Don't send out sanitized lists. If you need me to sign a non-disclosure agreement, fine. I'll sign a non-disclosure agreement, which is what I'm going to sign anyway most of the time with the banks or a hedge fund in a lot of cases. But if you're worried about me trying to go around you, that screams that you're a joker broker and you don't know what you talk about. And especially if you sent me the list to take a look at, you should help me be able to do due diligence on it, not send me this crap and be worried about, oh, somebody's going to go around. I'm not going to go around you, all right? I don't have time for that, all right? If you send me a real deal with real information and full information, no sanitized list bullshit, I'll look at it. But that's number 9 on the list of the top 10, all right? Top 10 signs you're a joker broker. Let's go roll on number 8 here. Number 8 now. Drum roll. You're always having to jump on a conference call with your partners. Oh my gosh.
Yeah.
Are you a joker broker if you do this?
Yes.
Yes, you are. Because the fact is, if I'm calling you and it kind of goes to number, and I can't answer questions, but you don't actually have a deal. You don't know the details of the deal. You want me to jump on a conference call with somebody, with your partner, who's not a partner. There's somebody else representing somebody else, and it's called a daisy chain. I hate these things. Literally hate it when somebody says, well, I need to jump on a phone call with my partners to discuss the deal. Exactly. It's all blah, 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 blah. That's what I hear. I start hearing Charlie Brown, teacher, and I don't want to waste my time. I don't have time to jump on a conference call to talk about a deal, to talk about a deal, to talk about a deal. If you've got something legitimate, send it over to me. I'll take a look at it, make an offer on it. But if you want me to jump on a conference call and take busy time out of my busy day, or time out of my busy day, and you aren't the legitimate source for it, get the hell out of Dodge. Get the hell out of the way so the real buyers and the real sellers can make shit happen, okay?
Moment to offer my apologies.
Yeah, I may be rude with you on that, but the thing you got to keep in mind is, like, don't waste my time. My time is valuable, so is yours, and sure is who is ultimately the actual seller. If there's more than one removed between a buyer and a seller, you're part of a daisy chain, and you are a joker broker. All right, moving on. Number seven, drum roll free. Your investor has 20 million a month to buy notes. Okay, that is like the biggest serious. Exactly. Had this happen again yesterday. A guy reaches out to me, sees that we talk about note investing. Hey, do you have notes available for sale? Or he saw that little video I did about the 20 multifamily loans that came across our desk that we're making some offers on, right? Oh, you have notes for sale? I'm like, yeah. I'll tell you a couple of reasons this guy didn't pass the muster test. Like, well, we're looking for $20 million in the East Coast every month. And I just started laughing. That's number 7. I can't tell you how many times I hear this. And I don't know why 20 million is the arbitrary number that people talked about, but it's always that number. I think it goes back to Kenny Rushing, who ran Rush Enterprises. He was teaching people to say they had 20 million a month to buy notes. No, don't say that. If you had 20 million a month to buy notes, you're not going to be dealing with me, or your investor is sure as hell not going to be dealing with you. All right, 20 million a month, they're going to go direct to banks. Otherwise, they're just going to basically be wasting your time. Yeah, just blah, blah, blah on your ears off. So I'm
more sorry
that you don't really have a true buyer there, all right, or a true seller. And when I hear this, I just simply say, nope, not going to happen. Yeah, exactly. I'm going to take precaution by not sending you anything or blacking you out my list. So don't do that. It is better to say, hey, I've got some money to do so, or I'm going to buy for my own portfolio, and I've got, some private money to do things. That's always much more respected, saying, hey, I got $250,000 or $100,000 to put to work. But if you tell me I got a 20 million note buyer, and you don't pass the smell test, and you say other things on this list, you're a joker broker, and I'm not going to waste my time with you. And this guy yesterday, they said got 20 million to buy. I was like, dude, I'm sorry, you sound like a joker broker. Other things just completely. I said, hey, why don't you take this class, or why don't you sign up for something here? And no, I can't do that. I'm an expert. Okay, expert at nothing, or an expert in just pure blah 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 bullshit. All right, moving on. Number 6, drum roll, please. You advertise that you buy and sell everything. Yeah, exactly. It's DEFCON 5. We see this happen all the time. I should say you advertise in Facebook groups that you buy and sell notes, and that's the only thing you post. You have no profile picture. You don't have anything you're sharing other than that in the group. I don't see you posting anywhere else. Look, if you're just going to free Facebook groups and saying that you buy and sell everything, or I get a phone call that says you're buying and selling everything, no, you're not. I don't buy and sell everything. I like non-performing first liens, and I look in most states for that stuff. But I buy first, I buy everything. I buy first, seconds, I buy contract for deeds, I buy lease options, I buy thirds, I buy, No, you don't. No, you don't. When you say that, that's what I hear. Yep. It's just crap. And you sound like a joker broker. So stop doing that. Tell people what you're looking for. Hey, I'm looking for non-performing first liens, or I'm looking for performing notes with a 12+ yield. All right, with balances of 50K or more, that I can buy for my own investment portfolio. But if you say you buy and sell everything, you look desperate, and nobody believes you. Okay? Nobody believes you. Don't do that. Buy for your own portfolio first, and be specific. Know what you want. All right? The more specific you are, the more likely you get something sent to you. But if you say, oh, I buy a multifamily, I buy commercial, I buy hotels, I buy $5,000 notes. And that I see that too. We fund anywhere from $5,000 up to $5 million. I know the guy that's doing that. And that is just, he is seriously one of the biggest. He is full of shit. Okay. Full of it. Can't complain. I may piss some people off. I don't care because you people need to understand what you're doing. You're making yourselves look bad. I am trying to help you. Help me help you not look like a joker broker. Okay. Well, that's number 6. All right. You advertise it, you buy and sell everything. No, you don't. Please stop saying that. Okay. Let's roll into the top 5 here. All right. Number 5, drum roll, please. Your social media profiles don't pass the test. That's right. Your social media profiles don't pass it because it's the easiest way for people to go take a look and see what you're doing. Yes, I misspelled you. It's supposed to be your. But anyway, if you send me a direct message, guess what? I'm going to click on your profile photo and go look to see what the heck you're doing. If you have nothing to do with real estate or you don't look professional or you're not talking about notes or anything like that, guess what? That doesn't pass this test. Doesn't pass the smell test. All right. If you have a LinkedIn profile that says nothing about real estate with only like 5 connections or 10 connections, and it shows that you like work at a convenience store or something like that, there's nothing wrong with working at a convenience store if you show that you've done something. You've got to start looking at your profiles and realize they are your business cards. It's what people see. I mean, if you're over there doing selfies and squeezing your biddies together, that doesn't look professional unless you're trying to just to attract male asset managers, okay, to send you stuff. And some of those guys out there might just do that. But what I'm trying to get at is act professional, clean up your social media profile. It's okay to have fun, but talk about real estate or talk about note investing or share something specifically on LinkedIn. If whatever social media profile is your course of action, if you're targeting LinkedIn or Facebook, guess what? Make it look professional. The guy that reached out to me yesterday said he got 20 million a bot. Doesn't look like he has 20 bucks in his pocket. And I get not being and not having a lot of resources. Totally understand it. Been there, done that. Don't do this. This makes yourself look even worse. At least take the time, take a selfie in a collared shirt. Talk a little about, there's so much free ways to share information with YouTube videos or articles, talking about what you're doing. Post stuff on there. If you're not haven't posted anything in months or it looks like something you did years ago, guess what? Time to get rid of the glamour shots photo. We had a guy years ago, one of the nicest guys, but his LinkedIn photo looked like he had just gotten his hair dyed jet black. In real person, he looked like Santa Claus. Okay. So he looked like he worked, like the Keith Fernandez hair commercials where everything going, get rid of the gray and go black, dark sunglasses. In real life, he was fully gray and probably about 100 pounds heavier. Look, we've all been there, struggle with weight, stuff like that. But please make yourself look something new. If you've got a gold or pink boa around your head and you've got a photo from 30, 40 years ago because you're afraid of ageism, I'm sorry, update your photo. Hell, use an AI image at least to make yourself look better. But make sure that your social media profiles pass the smell test. If you have any questions, reach out. I'm glad to tell you, all right? That may sound harsh, but I'm just trying to save you some issues. Stop. All right. Sorry, moving on here. Number 4 here. Drum roll, please. Number 4. You don't have a website or professional email. I can't tell you the number of times I had a guy reach out to me who had a Hotmail account today. I'm like, how is anybody supposed to take you seriously if you have a Hotmail account? Now, I get it. I have a Gmail account. It's one Scott Carson at Gmail. Still use it most of the time, but I have a professional email, scott@weclosenotes.com. We have a professional website. You can even go get a freaking Wix account for free and set up a website for you. These things used not to be important, but they are important today to help you pass the smell test. Social media is the free stuff. Guess what? I'm going to take you much more seriously if you have a professional email and not a Gmail, Yahoo, AOL account, okay? Or if your email is TigerLily05 or StickyBun6969 at MSN.com, I'm not going to take you seriously, all right? Or if you've got a name, your email matches up nothing with your name. I had somebody do that, and I'm like, I don't understand. If you're going to send me an email, make it look professional. Take the time, go to Google, get you a free domain and host it there so you have a professional email. It speaks volumes and at least taking you seriously. TigerLily05, I'm sorry. Or StickyBun69, I'm not taking you seriously. So if you don't have a website or a professional email, you smell and look like a joker broker. All right. Moving on. Number 3. All right. Number 3. You are an expert because of YouTube and podcasts. Yes, yes. I'm sorry. Exactly. I've had people, I said, I always like to ask people, how'd you learn about note investing? And when they come to me and they're trying to say, I'm buying 20 million, and I ask them how they learned about note investing, who was their mentor, and they start rattling off YouTube and podcasts. I'm like, okay, YouTube and podcasts are not a bad place to learn some information, but don't count that as your primary education. If you don't have the money to take a class, I can understand that. But if you're just too cheap to take a 3-day class or a 2-day class from somebody, or even sign up for my 1-day class at noteweekend.com for free, you're a problem because you don't know exactly what you're talking about. I had a guy reach out the other day who's never taken a class, but he watched some video from 7 years ago about seconds. He's wanting to buy seconds. He wanted to buy a portfolio of second liens for 50 grand at like $2 grand a pop. I laughed at him. I'm like, first of all, I don't buy seconds. Secondly, that's not what seconds are valued at these days. They're way overpriced. So you have to understand, yes, podcasts, YouTube are a great way to supplement your income, to learn about new things, new strategies. But guess what? The best thing you can do is truly get educated on a normal class, a 2-day, 3-day class. Learn something about what you're truly diving into. Wouldn't go to the doctor and expect the doctor to, perform surgery on you by just watching a YouTube video or listening to a podcast about surgery, would you? You wouldn't want to investing your money into something that you just listen about a podcast. You got to learn the ins and outs, and also learning the ins and outs is going to help you be a more effective broker and a more effective investor. But if you just tell me a school of hard knocks, YouTube and podcasts, then you scream joker broker, and I can't take you seriously. All right. I'm not going to waste my time waiting for you to send me deals because I get people to, I want to just send you deals. I just want to send you deals. Like, I don't have time to go through your deals and educate you. I need somebody who's going to send me real deals. All right. If you want to do that, which I think is the short end of the stick, but to really know that it's a deal and not a dud. I don't need you to throw spaghetti against the wall and see what sticks. Don't do that. Your time is more valuable. You'll learn more about it. And if you reach out to a lot of these educators, maybe not all of them, but a lot of them will have different discounts for like military. If you're in past military, first responder, stuff like that, there may be even a way to split up payments to make it more affordable for you. That's part of the reason we have the WCN membership at $97 a month, to make education more affordable for you and stretch your payments out versus paying $500 to $1,000 for one of our 3-day workshops. Okay. I know one-on-one coaching is not the way. And I know some people are pitching their high-end coaching right off the bat. I had a phone call today with somebody who's like, this guy just tried to sell me on a $20,000 program and I'm brand new to notes. That's not a fit. So don't expect me to do that. But yes, our YouTube, our podcast is there to help you, but it's not there meant to be your main source of investment income. There's 1,000 episodes. It would take you forever to listen to those podcast episodes, and what you could condense in 3 days through a 3-day class and learn up-to-date information is much more valuable, okay? So please take the opportunity to get signed up for a workshop. Please learn something. For the love of God, learn something. All right, moving on. Number 2, all right? Number 2 sign that you are a joker broker is you require a POF and LOI before sending anything. Now, what is a POF? It is a proof of funds, a bank statement, a letter from a hard money lender. An LOI is a letter of intent or letter of interest, okay? I'm going to tell you right now, banks don't require this stuff. Very few banks require a proof of funds when you're bidding on notes. Most of the note sellers don't require you. If you're requiring somebody to send you a proof of funds and a LOI before they've even looked at a spreadsheet to see what kind of assets you have, you are screaming, "Hey, I'm a joker broker. Let me waste your time." Okay? Yeah, don't want to do that. I won't waste my time with those. I had somebody tell me, "I don't have time. I need to make sure you're a serious buyer. I need to see proof of funds." I'm like, "You haven't even told me what type of deals you have. Do I need to send a proof of funds for 500,000 or $1 million? And I don't submit proof of funds. I'm not going to take my proof of funds letter and give it to you to go out and market it so you can find a list." That's what it screams. Stop doing this. Make people sign an NDA. That's much more qualified. And then if they are submitting an offer and you don't feel like they have the opportunity to close it because if they don't pass a smell test or other things, then require them to submit a proof of funds upon submitting an offer. Okay. Now, if I'm going to make an offer in non-performing notes, I'm not going to have to fill out an LOI. Some idiot taught this years ago, and it's the stupidest thing you do. Banks will require an LOI if you're buying notes directly from the primary commercial notes because they're going to want to know what you need to close on. Due diligence documents, time, all the other things you need on a loan file. They will do that and take that before note committee to make sure that the buyer who wants 30 days is more attractive than the buyer who wants 45 days or 60 days. It's just a letter of intent or letter of interest. Don't ask us on the front. If you're asking this on the front end, you are shooting yourself in the foot and you look stupid.
Yeah, baby.
Yeah, we don't want you to look stupid. We want you to be smart, okay? All right. That takes us to the number one reason, the number one sign that you are a joker broker. What do you think it is? What do you think it is? And this is the clear sign right off the bat. Usually in the first 30 seconds, somebody will say these words. And I realize they are a joker broker, and I do not want to waste my time with them. And all they're going to say is exactly. What is that? It's when you say you refer to yourself as a buyer's or seller's rep. Ugh, I just vomited. Okay. Somebody tells me I'm a buyer's rep. I'm a seller's rep. They've got 20 million a month. No, they don't. If they had 20 million a month, they'd be buying institutionally. Okay. Don't say you're a buyer's or seller's rep. That means you're a joker broker. Okay. Say you're buying for your own portfolio. I would believe that a whole lot much more than when you say you're a buyer's or seller's rep. But when I hear this, I literally tell people, quit saying that. You look stupid, and everybody can read between the lines that you don't have anything. You're trying to throw something against the wall. You're trying to get a list in and blast it to your list and be part of a daisy chain. Stop doing this. All right? Stop doing this. You, for the love of note investing and everything wholly under Jesus Christ the Son. All right? Please stop doing these 10 things. All right? And I know there's so many people doing a variety of these things, 5, 6, 7 of them. I get it. You want to do things. You want to get in as a note investor, and maybe you're short on funds and stuff like that. But guess what, ladies and gentlemen? There's a variety of ways to get things started. You can update your spreadsheet. Update your profiles to make it look professional. You can get your free email hosting thing. You can get your free website. Those things alone, and then what you say coming out of your mouth needs to sound good and crystal clear, not exactly. And unfortunately, I get if you've never taken a class and you've just tried to study from YouTube and podcasts, well, hopefully this podcast is one that you're listening to and you're learning from. It's been fun teaching this and going through this episode. Guys, if you really want to learn how to buy notes direct from banks without looking like a joker broker and learn how to raise millions of dollars in private capital, then please check out my virtual note buying workshop. We actually have our next workshop this Friday, Saturday, Sunday, July 25th or the 27th. If you're watching this after that or listening to this after that, check out Note Buying for Dummies.com. It will usually have the next workshop roughly 2 to 3 months afterwards, or check out our website at weclosenotes.com to find out the different classes and education things that we offer. I'm here to help you guys succeed. I've been around for a long time, and I don't know of anybody else who's just going to tell it to you straight like we do. And if you're curious and got questions or wondering what the heck to do, guess what? Guess what? No BS. No BS, all right? You can actually book a phone call right on my calendar by going to talkwithscottcarson.com. That's right. You can literally book a phone call, and I will call you. I will call you, and if you don't answer, I will text you. Hey, book the call with me. Respect your time. Respect my time. Stop wasting your time. Stop wasting your energy shooting yourselves in the foot before you ever get around to it. And I'm seeing a lot of people do that in Facebook groups, on LinkedIn groups, and just doing stupid stuff that's shooting yourselves in the foot. So get signed up for our workshop. NoBuyingForDummies.com. Shoot me a text message, 512-585-3810. I'll send you the direct message. We still are offering discounted tickets to the upcoming workshop here. So you can get in for 50% off. Good for you, plus a partner or spouse. It's just under $500, guys. It is one of the best bang for the bucks. A full day on how to find deals and not sound like an idiot. A full day on how to raise capital, not look like an idiot. And day 3, how to evaluate deals like a smarty, not a dummy. So take advantage of it, guys. Thank you so much. Have a great day. Take these 10 tips and change how you're doing business. There's nothing wrong with brokering deals. Just don't turn into a joker broker. We'll see you guys at the top, everybody. Bye. Hey, real estate investors, this is Scott Carson. I'm known across the country as a note guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential and commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, then there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started. It is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing notes. We get the lists of notes from banks, hedge funds on a regular basis, not one or two or three or four, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day one is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day two is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day three is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th through the 20th online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have 100% money back guarantee involved with it. If at the end of the first day you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition, no questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord. All right. Like I said, if you're tired of dealing with toilets, tenants, and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top.
Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closer Show. As always, Scott Carson, excited to be here today. Today's episode might be a little brash, but it's something I've been getting a lot of questions about, especially after some folks have been seeing some of the case studies videos from some of our successful one-on-one coaching students. And this episode is just to talk about our one-on-one coaching and why our one-on-one note coaching is the best in the industry. Now, I know it sounds a little bravado, talking about being the best in the industry, but I'm a big believer the proof is in the pudding. All right. And look, I know there's people out there that have different training programs, and some people tell you that you're too small, that banks won't work with you. But let's just talk about our program, our one-on-one coaching, why it's so awesome and why our students have success, because that should be first and foremost the number one determining factor when it comes to working with a coach. And I don't care if it's note investing, fix and flipping, wholesaling, whatever. Who is actually walking the walk and helping people close deals? That's the first one. And that's why we're all about we close notes. Not we talk notes or we want notes. We close notes. All right. And this goes back to when I got started as a note investor and working out of Bob Leonetti's office, doing mortgages and taking workshops and other educational stuff home at night because I was exposed to so many amazing teachers, and having Jamie Kayla and Bob Leonanti basically hold my hand and be an apprenticeship with them, learning in the ins out of the note business and learning marketing from Roland Frazier, who's one of the smartest marketing minds out there. I knew I was very lucky. Now, most of us aren't going to be able to take a 4-year apprenticeship to get the ball rolling. I'm a big believer, first and foremost, and this is different from other people. Other people tell you, oh, there's not a lot of notes out there. You got to go through me. I'm a big believer that there are plenty of opportunities out there. There are plenty of notes if you're willing to market, if you're willing to reach out in LinkedIn, email blast, pick up the phone, those things. There's plenty of deals if you're willing to market. A lot of people are not willing to market. They want to be spoon fed. So you're left with what that educator wants to feed you. And most of the time, what we have seen, 90% of the time, it's been shit. It's been a list that they've already cherry picked for the good stuff, and they're leaving you to fight over the crumbs or the crappy assets or the stuff like that. Or they're not telling you specifically, because I've seen this. I've seen this from other people where they're selling you something and they're overselling it. They're charging 10, 20, 30, 40 grand above what they're doing. And not only are they making money on the coaching side, they're making a huge amount on the asset side. That's not what we do. When somebody comes aboard our one-on-one coaching program, first and foremost, they're not working with another employee. They're working with me directly. I'm holding your hand. All right. And I'm going to get you deals to pay back what you're paying for the coaching. No, I'm not going to jack up that asset by 10, 20, 30, 40 grand above what I would pay for it. I'm going to get you the rock bottom price because I want you to make money back. Okay. Your investment in my coaching program is having me invest my time into helping you find success. All right. And it's not talk to you for 6 weeks, see you later, sayonara, see you once or twice a year. No. It's designed to help you have me on your team. Some people talk about a power team, but when you have somebody who's closed thousands of deals and helped hundreds and hundreds of other note investors close on their first 1, 2, 3, 20 deals, that's a lot of expertise to have as your safety net, as somebody who's going to help you find deals or keep in mind of tools or resources for you to go make offers on, or other hedge funds or other tapes that come into me that I can feed to you to make offers on. Nobody else does that. Ladies and gentlemen, nobody does that. All right. That's because I have the mentality there's plenty of deal flow going on out there. So the whole finding deals, really the first column in being a note investor is being able to find deals, not just talk notes, but let's get you closing on some notes. Okay. The second aspect of it is helping you raise private capital, helping you avoid mistakes that I've made in my 20-year history to raise capital from private investors, to put you in the right rooms with the right people, or using the right tactics and tools for you to raise capital or to put your capital together, or leveraging with other people's, the pitch decks, the questions, the what to say, what not to say, and helping you hold your hand through that process. What do you say to get investors excited? And the proof is in the pudding with that as well. When you look at our successful coaching students who are closing on notes with other people's money, or they're raising millions in private capital from using the tools that we help provide them, the hand-holding, the forms, the pitch decks, the questionnaires, the customized case studies. Those are all there. Now, some people would say that I'm creating my own competition. I don't feel that way. Never felt that way that I'm creating competition, because you can't replace me. All right. People have imitated some things, but they're just not around long term. And we've been around for almost 20 years actually over 20 years as a real estate investor. And it's hard to believe over 15 years as a note investor. And we helped up hundreds and hundreds and hundreds of people buy notes, whether it's performing stuff or non-performing stuff or reperforming stuff, or using the note systems and the marketing we use to help them find foreclosures or REOs they can take down. We're very, very proud of that. Okay. So finding deals and being direct to bank asset managers, whether they're sending you tapes, they're sending you lists that you don't have to go through somebody else. You're gonna get a rock bottom price. Heck, most of the time we're saving our investors even better pricing because we know the sellers directly, or we have a relationship, and we're making those introductions to hedge funds. We're also giving you a list of asset managers for you to reach out to, banks, servicing companies, hedge funds. We want to give you access. Now, that doesn't come free, all right? Helping you raise capital doesn't come free, but we're not sitting here charging an arm load. I've heard people getting charged $50,000 for coaching programs and they've never closed on a deal, all right? And that's unfortunate. We don't have some sort of copper level, silver level, gold, titanium level. That's great. We have one program, one coaching program with me, and here's how it works. All right. Once you've gone through our 3-day course, our Note Buying for Dummies workshop, whether you watched it live or gone through the replays, then you can be a part of our coaching program. And that's 10 weeks of coaching calls. That's weekly coaching calls with yours truly, either morning, afternoon, or even sometimes it's twice a week, depending on what you're bidding on. We're going to find deals for you to bid on. That's the magic of it. We're going to help spend time putting deals in front of you with direct pricing, making direct relationships with our hedge fund managers so that you can make offers and find deals. All right. I just spent the last couple of days with a couple guys up in Dallas. They're doing well. We've literally got rock bottom pricing on about 40 assets. I think they're going to make offers on probably 4, where the average is somewhere between $40,000 to $60,000 on those notes to them. Okay. They've also got some other chunks, some performing stuff that's be yielding in a 12 to 14 yield on some of these performing notes. They just have to decide which ones they want to go after with their funds that they have and the funds that they're raising. Okay. All right. So during those 10 weeks, and it's completely customizable for each, because everybody's got different strengths. Some people are more strengths on the deal numbers. Others have more strength on raising capital. They need to go find deals, vice versa. Some people are starting off brand new, as new real estate investors. And with that, that's a little bit more hand-holding aspect on the front end. But our goal is to get you making offers in the first 30 days. And we've been very successful, whereas the majority of our one-on-one coaching students are closing on deals in the first 90 days. All right. Sterling James closed on a deal in his first 30 days. It yielded a 28% cash and cash return to him. John and Veronica Gore bought 5 notes in their first 30 days and 20 deals in their first 6 months. Okay. Phil Brodeur closed on about 5 deals in his first 30 to 60 days, closed on about 20 notes, over 6 figures. Cal Ewing's closed on about 16, 17 notes in his first year and just closed on his first 6-figure deal 2+ years after coaching, but we're still holding hand. That's one thing too that you will not get with other people. You'll be able to have direct communication with me via cell phone, via email, via text. We are here to help you achieve success, and you're not going to get everybody else on the phone. You're not going to be able to have a text message communication with somebody directly to help you determine if this is a deal or a dud. We just had a conversation with another student who's making an offer, and it's too skinny a deal. He's all excited, got a deal accepted, but his offer is still too skinny a deal based on what his money costs are going to be. And that's another thing. Having this idea to avoid you doing bad deals, to avoid going down and buying stuff in places you shouldn't buy. But you know what? Sometimes that's going to happen. Sometimes you're going to have crap happen, and having somebody there to hold your hand and say, okay, let's get through it this way. Let's turn this lemon of a deal into lemonade and help you get across the board. Let's avoid this because of A, B, and C, because I've had that happen, or buy here because of this opportunity. Ladies and gentlemen, we want you to close deals. I want you to be a successful note investor. There's plenty of opportunity. There's not enough of us out there. But I'm also going to give you and shoot it to you straight. I'm not going to sit here and blow smoke up your ass and tell you how awesome you are. I'm going to hold you accountable to getting things done. And yes, there will be homework in this 10 weeks of coaching calls, things that you need to do, things you need to put in place. And then after the 10 weeks, then guess what? You get to come spend 2 days with me one-on-one here in Austin. During the week, during the weekend, we'll work around your schedule to make it work so that you can come in, spend 2 days with me. And really, if you thought 10 weeks is a great time to get rock on, spend 2 days with yours truly is going to be like drinking from a fire hydrant as well. More assets, more connections, more marketing, more money, ultimately leading you to be able to be a lean, mean note buying machine and making more money. We want you to close deals. We want you to make money. I want you to make back your investment in my coaching program as soon as possible. And that's why we work so hard to find you good deals, help you raise capital, put you in rooms or relationships or conversations with those out there so that you are not beholden to somebody else. You're not trying to bid at a foreclosure auction, but you're getting lists of notes in that you can make offers on that can put double-digit returns and higher into your hip national bank whether you want to put your IRA to work in making double-digit returns or you're using other people's money to make double-digit returns, not only so that you can make money, but your investors can make money, we are here to help you. Now, our coaching program is a bit of an investment, but we are here to help you get those things rock and roll. We have a couple of different options for you. Our one-on-one coaching is 25 grand. That's if you want to spread it over payments, it's 25 grand. If you want to make payments for a few months, we'll spread the for. If you want to do a pay in full in 30 days, we'll drop that price from 25 down to an even 20,000 for you. It's going to be paid in full in 30 days. If it goes beyond 30 days, then it goes back to the 25. But we're also understand that people are needing opportunities and adjustments right now. So we do have payment plans that are flexible with every budget. All right. We do have opportunities for you to finance this through a third party. And the third party is if you're making more than 40 grand a year, have a 620 FICO or greater, they can split that payment up, that investment up of 25 grand over 24 to 36 months with no prepayment penalty. The interest rate will vary depending on the individual, but there's no payment for the first 30 days. So you can actually already be 4 weeks into our coaching program before you got to make a payment. And if you're going to go that route, we're going to work to find you a note that you can take down that's performing that can pay off that monthly payment. Like I said, no prepayment penalty. So whether it's focusing on an asset you can make quick bucks at a foreclosure or a performing or non-performing note, you can get reperforming or buying a performing note. It all varies on the individual, but we're here to help you. So like I said, A, you make payment plan, B, pay in full, C, we can go through the third party. 3 different ways. If you're wanting to do this, ladies and gentlemen, we're here to help you. And, you know, we want to be your number one because we are already the number one recommended coaching in class when it comes to non-performing notes out here. Let's help you take it to that next level. Let's help you close some deals. Let's not help you not talk about being a note investor, but actually becoming a true note investor in 2025. Look, we've got half the year roughly left. It's hard to believe that as I'm recording this, we're coming to the end of June. There's still a lot of opportunity available for you to get diving in. We're seeing more deals on residential or commercial. Commercial is something you enjoy. We can do that as well. But let's talk. Don't let your fears stop you from taking action. I hear people all the time that wish they'd have done more back in 2010 when we had the Great Recession. Well, it's not going to be as bad, but we're still seeing plenty of opportunity. So take action now. Reach out to me directly at talkwithscottcarson.com. Let's book a phone call. Let's start a conversation. I'll ask you where you're at. It may not be for you. Maybe you just need to do the 3-day class. But if you're very serious about doing this and putting some lazy asses to work, let's talk. All right. Once again, go to talkwithscottcarson.com. That'll take you directly to my calendar, or you can text message me directly at 512-585-3810. Once again, that number is 512-585-3810. Let's have a conversation. Let's see if you're a fit. And let's start take that first steps to get you on that path to success. Thank you for listening. Have a great day, everybody, and we'll see you at the top. Bye.
Hey, note investors. So you want to dive into the world of note investing, but know how to get started, or you don't want to pay $30,000, $40,000, $50,000 for a one-on-one coaching program that just completely does not deliver the deals or the funding or the access that you need to take your note business to the next level. That's why we have our one-on-one coaching program. I'm Scott Carson. I've been buying notes for 20 years. I've helped thousands of investors buy their first note direct from banks using either their own funds or other people's money to buy non-performing, reperforming, or performing notes, yielding them an above average return. Now, what's involved with my one-on-one coaching program? It's unlike anybody else's, because guess what? You're working with yours truly, not some paid student, not looking at some recycled list of stuff. Now, what we do is differently than anybody else out there, and that's why we have such a huge success rate with our one-on-one coaching program. What's involved? Well, once you take in our 3-day class, our Note Buying for Dummies workshop, sign up for our coaching. You get 10 weeks of one-on-one coaching calls. These are on Zoom in the morning, the afternoon, the evening. What works best around your work schedule? We accommodate this to help you start looking at stuff. And during those 10 weeks, we focus on finding deals, making offers, getting your website, your social media stuff set up so that you are a lean, mean note buying machine. After spending 10 weeks of Zoom calls with yours truly, that's right, live, not somebody else, we'll spend 2 days one-on-one. And usually people come to Austin, Texas to hang out with us on a Thursday, Friday, or Saturday, Sunday. And those 2 days are focused on whatever you are still lacking and need the most amount of work on. Sometimes it's making offers. Like Larry came in, we made 50 offers that he got 20 approved in a weekend. Other people came in to raise capital. So we helped them find IRA investors to fund their deals so they're able to raise hundreds of thousands, if not millions of dollars for their note deals and other investing stuff. We're also going to give you a list of asset manager contacts for you guys to dive into. That's right. This will be either LinkedIn profiles, emails, phone numbers, names, all for you to start reaching out to people. No, you don't need to buy notes directly from me. We're going to show you how to go to banks and contact them directly. We're also going to make introductions to our top 12 hedge fund managers that send us deals on a weekly or monthly basis. That's right. You go straight to the front of the line. And guess what? There's no 10, 20, or 30,000 upcharge for the deal. You buy direct from the hedge funds because we make the introduction. That's why, because why do we do this? Because we know, not we believe, we know there are more than enough deals to go around. And yes, we make most of our money from buying note deals for ourselves. Some people will say, oh, you're creating competition. No, because there's plenty to go around. All right. We're also going to give you a 1-year membership to our WCN membership for 1 year. That's $97 a month usually. That's going to allow for you to continue support weekly coaching calls, along with access to our base camp group for other things, other tapes, other resources for our coaching students. We're going to help you with raising private capital, putting your pitch deck together, putting sample deals together, or either case studies that we've done, other students have done, or that you're doing, so that you help raise capital or help you find IRA investors in your local market or the markets you're looking to buy in. You're going to also, basically, for you plus your partner, spouse, person you're going through this with, you're going to have VIP access to me. That's right. Whether you need to jump on a quick phone call, a text message, a quick Zoom call to go through tapes or notes that you're making offers on for us to review your bids, or to help answer a question when it comes to loss mitigation, foreclosure, bankruptcy, whatever it might be about a deal you're working through, get VIP access to me most of the time. Come on now, everybody. We're also going to do a 6-month follow-up day after you spent 2 days with me. 6 months later, if you want to, we can do a half day, a full day Zoom follow-up just to see where you're at, what are you dealing with, where you're looking to go. Because within 6 months, you should have already closed on several deals the way that we teach them, because we will help you find your first deal and then some. We've had students who've closed on their first deal in 30 days. We've got others who've closed on 6 deals in their first 35 days. Other people have closed on 100 deals in their first year. We're here to help you, because guess what, ladies and gentlemen? There is plenty of inventory out there. We're not going to focus on owner finance notes. We're going to focus on how to get people calling you with their deals, or how to get banks sending you lists on a regular basis that you can cherry pick and show you how to raise all the capital that you need. Our one-on-one coaching program is the most complete program out there. That's why you have such a high success rate. And it's cheaper than most of the others out there. And we also give you the biggest bang for the buck by helping you make the introductions, looking at the tapes, helping you bid if you're coachable. Now, not everybody's coachable. Not everybody can afford this, but what we can do is we can set up payment plans and different options for you. I encourage you to either book a phone call with me at talkwithscottcarson.com, and we can talk about it, see if you're a fit. Not everybody's a fit, and that's A-okay. But go to talkwithscottcarson.com, book a call on my schedule, and we'll gladly talk about our one-on-one note coaching program to see if you're a fit. One of the very requirements is we do require people to go through our 3-day class, but that whatever you've paid for that 3-day class is applied to the tuition for your one-on-one coaching. And we also have a third-party provider who's willing to finance this and carry financing for 2 to 3 years to help you pay it off. But we're going to work with you until you get your first deal closed. We want to help you make your money back in the first 6 months, if not sooner. So check us out. Pick up the phone. Give me a phone call. Talkwithscottcarson.com. That's talkwithscottcarson.com. Book a call, and let's see if you're fit to take your business next level. Sometimes all we need is just a hand up to take you to the next step, to show you the way. This is not a blow smoke up your tail, give you the crappy tapes left over, or upcharge you $10,000, $15,000, $20,000 per asset. No, we want you to buy direct, and we've always found if you can show a man how to fish, you'll feed him for a lifetime. So let's get started, you being a note investor for the rest of your investing lifetime.